And we're back in a big way. July 7th. Glenn has entered July a week late.
Yeah, okay. I was here for July 1.
You were here July 1.
July 2 through 6. Oh.
How was your we call it 4th of July. It's obviously that day.
Yeah.
Cinco de Mayo, similar kind of vibe. What is the day technically though? It's
Independence
Day is
Correct.
what we call it.
It's funny that you say that because me and my friends were debating how many, like, if
This
you
had
polled...
to be a really good debate.
All right.
You and your boys in Minnesota after 50 high noons.
Just like if you polled 10 Americans, how many would actually know what the day was?
July 4th. Oh, man.
Not knowing that it had something to do with, like, our independence, but what the date was, the signing of the Declaration of Independence.
I almost wish you hadn't told me because I was going to say it's when we signed the thing.
Correct.
Okay.
And I'll take that. That's a win. That's a yes.
My mind definitely didn't go like battle. Like it wasn't like, like it's when
Concord.
we smoked the Brits and then like they all went home. It was 1776.
Yep.
We signed the thing.
Yep.
Why John Hancock's signature is so important, I don't know.
That's kind of your zone, though. I think that's exactly who you would be in that instance. You'd be like, if 30 people needed a sign.
An unsubstantial historical figure, but like a very pretentious.
Well, not even pretentious or
signature.
anything. Just like everyone's in a line going up to sign. You get up there, you're near the back.
I have a huge feather.
And you're just like, well, that's weird. No one's taking up this much space. FK.
Name a big building after me. Everybody go have expensive cocktails on the 100th floor.
Where, New York? No. Chicago.
Put it in Chicago. Put my name on it. Big X's down the side.
So what do you think? How many, 50%?
How many people in the U.S. would guess it correctly?
Yeah.
And you're allowing my answer was correct in your mind?
Sign the thing.
I think we're over 50.
All right.
I think we're over 50.
USA.
Oh, man. I don't know.
I know.
Now that
It's a tough one.
thinking about I'm like, I have to reflect on my privileged upbringing, which was private school
Jeez.
for, like, I don't even know, 20 years. How long are we in school?
Yeah, 18. No, 13.
Which isn't to say like, oh, like that's no shot at public school, but I barely got it, and I went to like.
It was the hardest thing to learn in Latin. Declarentia Independentia.
That doesn't sound remotely like Latin.
All right,
Latin,
there we go.
We're ending in ooses. We're ending in maybe an if it's the feminine. But there's no NCA. What I don't know what that is.
It's like pig Latin is what it sounds more like.
We need to ixnay this Egmont say and get onto some Arcet maze.
Yeah.
Dollar. What are we doing? We're smoking. We're off to a hot start here.
It's about time.
It's about time. Unfortunately, it's never the markets you want to be smoking.
Yeah, let's hop into the platform here because
commodity currency is just getting rocked, which we talked about last week. Actually, I don't know if you talked about it. I definitely talked about it. You were in Minnesota.
Yeah, no.
Aussie back below, close to 65 cents. Jeez.
And was below this morning, yeah.
Whew.
Yeah, very consistently these days, I feel like. Anecdotally, maybe I'll crunch some numbers on it for us. But these early morning moves tend to be, by the time we get in here, we're testing or bouncing off of some extreme.
Well, I think, you could definitely, now that you're like in research mode, you're like digging into data and stuff more. There probably is a lot of reversal of trends around when U.S. participants enter the market around this part of the day. Similar to, that's last night on the open. And then I'm sure there's also some similar kind of like trend changes if you highlight like around midnight or 1 o'clock last night, you can see that they're trying to bounce this Aussie back, and that's of course when European participants are entering the market. But dollar buying here to start the week. What's the deal? What's going on?
Deals are the deal. We've got.
Nice. Is this the big beautiful one?
Well, that one I don't think people liked as much.
Okay.
That was last week's news.
Trying to catch up.
Yeah, this week we are all attention. If we want to just cut over to the economic calendar, if you look at the economic calendar this week, you'll see perhaps. We've got Bank of Australia interest rate decision tonight. That's interesting. They're going to cut again. Looks like.
Wow.
Didn't know that this forecast took a while to populate. Wasn't exactly sure if the forecast was cut or no cut, but Australia looking to take interest rates down once again by another 25 basis points. That's a headline for Australia, but if we're looking this week on the calendar from a U.S. standpoint, it looks to be a pretty dull week, except for this FOMC minutes on Wednesday, which I think could be pretty important because right now we're looking at to cut or not to cut, same question as always, but with the backdrop of some screaming non-farm numbers, we now the CME Fed Watch tool not working for us this morning, but now we have any chance of a July cut moved off the table.
Really?
I mean, it was at 20%. I think
it was at 25% on Wednesday, Thursday, and then the Thursday number, was hotter than expected. And if you were watching the Thursday morning show, which I know you were,
I was
from Minnesota.
Yep,
with all your friends.
You went solo.
I went solo. People loved it.
Yeah, no, some were saying it was the best.
Some are saying it was the best Forex focus.
Why use two people when one person do trick?
Yeah. And I was talking about just how often we get the different employment data points, like one of them or two of them being much softer than expected, and then non-farm coming in and being like in line or better than expected. We got exactly that last week, and so you got the whipsaw in U.S. interest rates going into that weird Thursday non-farm. It's usually Friday, but with the holiday on the 4th on Friday, they moved it to Thursday morning, and stronger than expected. U.S. rates, I guess I was more focused on Forex and a handful of other things before the weekend started. But yeah, there was a good chunk, like 25%, I want to say, is how high we got up to in terms of a chance of a cut at this July FOMC meeting, which I'm pretty sure is like the last week of July, might be the last day of the month. And now they've wiped that away for the most part.
Yeah, now we're looking at 2/3 probability that the first cut will be in September. So still time as we shake out into what a year-end forecast would be, still time for 2 cuts, even 3 cuts with 4 meetings left without that July
Very unlikely, I would say.
Well, yeah. But what this, I think this FOMC minutes will give us is now that maybe we're closer to cutting, what specifically they're looking for. Inflation, name of the game, but how much would an employment number matter to them? If they say employment doesn't matter at all, maybe some of those start getting priced back in. We'll see. But Wednesday is also what you can't see here. This is tariff deadline day.
Tariff deadline day.
And so all the work.
Why is that? July 9th. July 10th is like the big day?
No, July 9th.
July 9th is the day that tariffs are supposed to start cranking.
That is when the 90-day pause is in effect over. But they're sending, Trump and his team, they're sending letters today. They're sending a whole bunch of letters.
Okay.
They're sending letters saying they'd rather
send digital or is it not digital?
I don't know, but he said they'd rather send letters than meet in person because it's easier to negotiate.
Oh, I thought you were saying they'd rather send letters than meet.
than meat.
They don't want to send meat. Like I thought we were going like a Godfather
We're
kind of
sending
scenario.
letters, then fingers.
Everybody's gonna wake up with horses or whatever animal their country loves. It's gonna be in their bed.
Yeah, that would be horrible.
This is obviously significant. The last few months, whatever Trump has had to say has very much been more important than these data points. It is extremely hard to follow at this point.
Agreed, especially...
It is like, like a Christopher Nolan movie. Like, I am like, who is that guy?
One timeline going this way?
Yeah, like,
there were tariffs this whole time.
Are we in the real world? And this isn't even like I'm not even... No opinion of Trump in this statement. It's more from a trading standpoint and from a calendar standpoint. Now I guess we're looking at July 9th as it's a big day on our calendar because the tariffs are either going to start or they're going to be paused again or we're going to reach a deal.
Exactly.
Okay.
Well, the deal or no deal, but this deadline, that doesn't mean
Good show.
as one say, it doesn't mean that the tariffs are back on. They'll actually come back on August 1st. So a soft deadline.
Is this
but
what the art of the... Did you read the art of the deal?
I haven't.
Was it just like confuse the hell out of everybody and
Smoke
just like
screen, pepper spray?
Yeah, like delay stuff, put stuff on, send letters.
Letters are a big part.
And then
That's all I
eventually
know.
the people are like, we can't keep paying for all of these lawyers and all these people to look at what Trump is doing all the time. Just give him what he wants and move on.
I don't know. Maybe.
Okay.
You're on
Who's
something.
still on the table? Who's on the table for getting in trouble with the tariffs?
Glad you asked. Mostly everyone. So only the UK and Vietnam and a framework for China has been on the table.
Vietnam.
So at least our heavy hitters were all locked up.
All the
But
people serving pho on Argyle in Chicago are very, very happy now. I don't know if they import any of that, but
they're probably. Anyway, but what we do, it's a great question because where we are looking on this trade deadline, a big question mark left on the table is the European Union.
Okay.
And so what we are expecting, even though Wednesday is this soft or not soft deadline for this 90-day pause, Trump does expect deals to start coming in because they haven't yet. It took 90 days and nobody's really come to the table in a big way.
Kid at the draft.
Exactly. Shadur is at the table. But we are looking to this
we're seeing
euro
some dollar
market.
bounce though. Okay.
Yeah.
I dig it. Trust me, I want whatever outcome gets this dollar a little bit of a bounce because this has been a boring one-sided market ever since we had the initial rip from the outset of tariff volatility, and that teamed with finally some strength in some of these other regions aside from the U.S. strength we've been seeing the last couple of years. And so, yeah, I mean, early returns from whatever the heck you just talked about is U.S. dollar up pretty good, and we haven't even entered the first U.S. session. I definitely hope we continue to see this side of the market.
Exactly, because this, in my mind, is definitely a caliber of headline that could take this market if a trade deal is announced and however it shakes out is in the U.S.'s favor, even if there is just a ton of uncertainty baked in to the euro's favor here, which I'm sure that there is still a lot of general U.S. uncertainty baked in to a lot of these dollar markets. That headline wouldn't surprise me as one of these moves that could categorically change the trading range in this, because we've had, 3 or 4 significant legs higher in this market year to date, and perhaps whenever it is to come.
And keep this window up because, like, this is pretty much exactly the amount of time that Trump has been in office. And again, this isn't like, oh, look at how weak the dollar has gotten with Trump in office. Just look at how volatile this market has been the last 6 months. And so and it's not, this volatility has nothing to do pretty much with the Fed, because the Fed hasn't cut this year. They haven't cut this year?
Correct, and the
so
ECB has.
This is all Trump-induced / there was the move of, I still don't fully know what that story was, but Germany is ramping up military production. I remember Eurodollar was up 200 points.
Yeah, I think that's
and that
here
was
to here.
what you had to tell me. You were like, yeah, Germany is they're really ramping up their military production. And I was like, I guess that's worth 200 points in this market. But I think that was more of baking out Ukraine-Russia fear out of the euro.
And U.S. dependence in any sort of that.
This, on the flip side, it's obviously not the same thing. But again, to show you how volatile this week could be in either direction, obviously, but the way that we're painting it is potentially in the U.S. dollar direction, is none of these moves have had to do, pretty much none of the big moves have had anything to do with the Fed, because they haven't been changing rates, or employment. We saw the employment move from Friday was a big one, but it was, a 75-point sell-off in this market and then a 30-point rally.
Right.
These big green bars and big red bars are 100, 150, 200-point moves. And we're already right now moving close to 50 points in this market and larger in some of the other ones. Can absolutely come here with tariff talk, trade war talk, deal talk, whatever it ends up being. I'll be really interested to see the price action. I obviously don't care so much about the news, which people are increasingly telling me it's important. If you think it's not very fun, cocktail conversation when you're hanging out with friends or whatever, and they want to talk about how great or awful Israel is, for example, and your response is yeah, I really have no clue what's going on. I just really watch the markets and the price action. And
that's when you break out the Declaration of Independence question. Okay, well,
how many of you know what happened on the 4th of July?
You just need, if you're not going to follow any news, you just need
Frank
a couple.
Guy is really the least informed idiot we've ever met. But yeah, I'll be watching this price action for sure. Excited to see some U.S. dollar upside. I will, of course, caveat that with we've seen this movie before, where the dollar is up 0.5%, a full percent, depending on the market you're looking at the start of the week. And they completely undo that strength. They did it, it wasn't the start of the week, but they did it on Thursday, where non-farm comes out, dollar spikes, and they completely undo all of that. As you can see there, not only, the hour following
That's
it,
brutal.
but the rest of the session as well, where it's just okay, you got this market down close to 117, and then it bounces back to 117.5, and then spends literally the rest of the week just drifting higher close to 118. So I'd love to see some sustained action in this other side of the market, not because it's not Frank's holding all these long U.S. dollar positions. It's just been boring seeing this one-sided trade to the downside in U.S. dollar. But do you want to look at a couple of other markets where the damage is being done here this morning?
Absolutely. Look no further than this Japanese yen market. This one, not boring at all in recent days. Yeah. Here, a real roller coaster. We were looking last week, when I signed off, this one was trending very hard downwards at around its year-to-date low, below 143. Now a complete bounce back. Is this market now returning to some of that stronger rate correlation, rate cut?
Yeah, and I guess what we could be seeing is fear coming out of this U.S. market, and to your point, it occurring to everyone, the carry trade is actually just as attractive as it was 4 months ago before all of this tariff talk. And in fact, it's getting more attractive in a number of pairs. Not this one, but ECB continues to cut. Swiss National Bank or whatever they have for a central bank
No, you got it.
cuts. Canada cuts. Other commodity currency countries cuts. And so I think there could be, if now the flip side of this is all 4 years of Trump is just like is maybe productive in certain ways, but for the U.S. dollar is there's fear baked into that U.S. dollar market
The
all
whole
4
time.
years.
Yeah.
That could absolutely be the case. Or the flip side of that is fear starts to come out of this. The tariff talk, trade war stuff 3 months from now is like, oh, remember that stuff? Like now it's kind of normal. The U.S. won some of the trade wars. Like I don't know. It doesn't really matter to me so much. But then it does occur to people, oh man, the U.S. economy is stronger than a lot of these other economies, and their interest rates are still 300 to 400 basis points on
Back to
top
basics,
of all of
yeah.
these other central banks.
Agreed. And yeah, you're absolutely right that even though we're looking at Europe this week for what would be a trade deal in isolation, we could look to something like this market or dollar Swiss franc for if a slew of letters come back and deals are done, if a widespread uncertainty around tariffs just does get lifted this week, as the administration would like, that hasn't panned out so far, then something like this or this Swiss franc especially, I'd contend has still a ton of
That is an ugly chart.
a ton of U.S. Lack of confidence in the U.S. and
What has to
uncertainty.
happen for the sentiment to really turn? Because you saw it there with yen, and we've talked about it a bunch with commodity currencies, and you can look into those on your own. We don't need to get to them today. It's fine. Let's stay here. The European currencies need to lose ground to U.S. dollar for it to feel like a real sentiment has shifted. Because you just showed that dollar yen chart, and it is pretty optimistic for that dollar because every dollar sell-off we've seen the last 30 days or so has not sniffed 140. The dollar sell-offs have been higher and higher pretty much every time the last 3 or 4 months, ever since we did hit 140, bounced off of it, and then kind of bounced around 140 to 143, 140 to 145.
Right.
Now it's been pretty much like they can't get down below 143, and the bounces back above 145 in that market are pretty quick. We're already back up there. But you show that euro-dollar market to start, haven't been able to get back below 117 or sniff 116 for a while. This market, even with the bounce to start the week, we're not back above 80 cents,
Which
which is problematic. And so, of course, you can say, well, you know, we're starting to feel pretty good against Aussie or Kiwi or even Canada. And I know that's been a big one for a lot of traders have been looking at that dollar CAD market. But for it to be like, okay, we're going to see some sustained action in the dollar's favor, you need to see a market like this really kind of turn. And until you see euro dollar printing, 116 or this market printing 81, 82, I think we'll probably be still in a sideways type of feel for this U.S. dollar.
agreed that the European currencies are definitely leading this dollar story, and it will continue that way until we see some major price action. Does this, even though this is a nasty chart for U.S. dollar, do these strong little builds mean anything to you from a tape action perspective, or do we need to see
a big
huge
need to see
day?
a big rally? Yeah, just because look at how many times we've done this, where it's been like a big sell-off, little rally, and then a further sell-off, little rally, and then a further sell-off. It's again, we're not technicians, but it's just like there's nothing here. Like it feels like I'm looking at like pot stocks or like AI stocks or whatever at different times
Right.
over the course of the last 10 years or so. Which isn't to say they can't wake up. obviously some of those stocks have woken up, and I'm confident. Just the mean reverting nature of these markets, these currencies that get downtrodden do wake up at some point, but it's going to have to be, better than a 50-point bounce off of multi-year lows for this dollar Swissy market to start feeling like we're going to get some mean reversion to the upside for US dollar.
Well, there you have it. A strong start for the U.S. dollar pre-market, but what should be an exciting week ahead for currency pairs. So that'll do it here for us today on Forex Focus, but a lot of trading left in the day. So stay tuned to Tasty Live.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. I've been trading for about a year and a half, done all the homework. I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah, so if you've made 100 trades and it's working for you, then that's not luck. No, that's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. Back when we started building this kind of software, an active trader made like 20 trades a year. What used to be 5 years, you've packed it into a few months. I mean, I wouldn't discount anything that you've accomplished so far at all.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Get tasty, pre-market. Come on, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both. Do you have all your fingers? I don't do no fireworks. Oh, okay, all right. So I make sure you're okay. I can notice you can push the button, and you don't have to tell me that what's it called, Sadnov, when your rhythm's all messed up from traveling? What's that called?
You
said you don't get
rhythm is messed up when I don't know what.
Yeah, you know what it's called, Saz, because you're up at 2:50 in the morning making trades. What? Jet lag, Sadnov. Jet lag was what I was looking for. I wasn't up at 2:50 in the morning. Oh, no. That was a resting order that just got filled. I'm telling you.
You don't put resting orders in. You listen, my computer dings when you make a trade. Can you do me a favor and keep your dings to yourself? 2:50 in the morning.
You poor bastard. You poor bastard.
It's true. It's true. I thought I overslept.
No, that was a resting order though, but it doesn't matter. It's no big deal. No, I didn't light off any fireworks, but there was in my alley, there was like, I don't know what was going on. There was a crazy number of people out there.
They're probably having a party without you.
Good. I didn't want to be there. They kept going though till like 2 a.m, which is, kind of late for a Chicago alley.
Is it that? No, I mean, because there was no sanctioned city fireworks on the actual 4th of July, because Navy Pier was like, we're just going to do ours on Saturday because we always do ours on Saturday. But then the whole city of Chicago was like, hold my beer, and then they just shot off their own fireworks.
It's true.
Yeah,
it's true.
I don't know. Like, I just know my neighborhood was kind of like, it's pretty loud. That's all.
I literally went home to Indiana, where nothing is illegal in Indiana, fireworks wise. And our neighbor, because my parents live on a cul-de-sac, and our neighbor directly next to us must have invested like 10 large in his display. Like, he had it calibrated. I was watching. It was pretty good, but it was a lot.
I don't know. I've seen the future of fireworks. I never thought I would say it. I think drones are going to overtake the future of
I hope
fireworks.
so. Drone shows are cool. They're not traumatizing to pets or veterans or people with sensory issues.
They were really cool.
Yeah.
They were really cool. They did good jobs. You see pictures of that, Sadnoff?
No.
Oh man, they do a great job, man.
It's got to be all over TikTok. Even I've seen it. It's cool.
Yeah, I mean, I've seen it before, but I didn't see this fireworks.
Oh, sure you have. Yeah.
I mean, it's not, like, have you ever been to one of those fireworks stores right over the border in in Indiana or Michigan?
Yeah, I'm from Indiana. Yes.
Yeah,
crazy Kaplan's.
Those things are crazy. Those stores are nuts.
Crazy Kaplan. Well.
Oh, they're good. Come on, they are what they are.
Yeah, I know. I just saying.
So, Tom, how was your 4th of July? You mentioned in the Cherry Bomb that you barbecued. What did you barbecue?
I made fajitas.
See, that's not barbecue.
Why? I barbecued a carne asada and some shrimp. I just did a little something. I did a little something different.
You grilled it.
Yeah, I grilled it. Yeah.
Okay,
grilled.
That's not barbecue.
Okay, grilled. Same thing. I was outside. It was 95 degrees.
Same thing. I sous vide some barbecue. Same thing.
Sous vide is not the same thing as grilling something.
How did your fajitas turn out, girl?
Oh my God, I should be in the fajita business.
That's the next plan.
You're gonna give Chili's a run for their money?
I'm gonna give them a run for their money.
That was pretty good, man.
It's a good barbecue. It's a good grilling effort. And so I did. That's all I made on the grill on, what was it, Friday? Such a long weekend. Yeah.
It was a long weekend.
Friday.
Yeah, it was a long.
It was hot out too.
Short weekend.
Saturday I went to the Cubs game. I was drenched in sweat. It was 100. It felt like it was 200 degrees it was hot.
It was really hot. Yeah.
Yeah, it was hot. In the sun, it was hot.
Yeah.
Yeah.
Did you make it to the end of the game?
No, we made it to the middle of the 8th, and then I just said I got to get out of here.
Oh, that's not bad. You made it past the 7th inning stretch.
Oh yeah. Fergie Jenkins did the 7th inning stretch, and
who?
A little Fergie. But then we lost anyway.
You mean the lady that sang the jazzy version of the national anthem?
The other Fergie.
Oh, say, can you see?
No, he's talking about the Hall of Fame pitcher, Fergie Jenkins. Come on.
The other Fergie.
What year is this from? What year?
You never heard of Fergie Jenkins?
No.
Oh my God,
Fergie probably left in the 80s. Didn't he leave in the early 80s?
I mean, he pitched for like 20 years. He's one of the most famous Cubs ever.
Yeah.
When were these 20 years?
Well, when I was a kid, he probably pitched in the 70s and 80s.
Okay.
65 to 83. I just looked it up.
Oh, 65 to 83.
Literally not alive. So I shout out to you, Fergie. I was not familiar with your game.
I think Fergie Jenkins pitched one game I read somewhere where I think he threw 100. Like, this is how pitches. I think he threw like 180 or 190 pitches. Look it up and see what his record is. I think it's like the most insane thing.
He had 284 victories.
Yeah, he almost made 300. I think one game he pitched like 180, 190 pitches. And back then, they pitched every 4 games.
Yeah, the rotation.
What do they pitch now?
Every 5.
Yeah.
Oh, I don't know.
He often threw over 100 pitches. He famously threw 154 complete games.
Yeah, that's
and had
insane.
267 complete games. In 71, he pitched 325 innings with 39 starts. I can't find the game with the most. Here we go. For example, no. I can't get it.
1971. My parents hadn't even met each other. Never mind, like not being alive.
Let's just say he had an amazing arm.
Okay,
he almost made it.
Congratulations.
If he would have played in any other team other than the Cubs, he would have made 300. He would have had 300 wins.
Mm-hmm.
All right. Well, again, shout out to you, Mr. Jenkins. But sad news, though, in baseball, Chicago legend Bobby Jenks, pitcher that led the Sox to their World Series title 2005, passed away at the young age of 44. Famously known when Ozzie Guillen wanted him on the mound, he would go, "I want the big guy."
Ozzie was great this weekend. Ozzie was on all the Chicago radio stations and Ozzie still does the White Sox game. He doesn't do the He does the post game show, so he doesn't.
I didn't know that.
Oh yeah, no, and he's really funny, and he does the White Sox post game show. But the White Sox haven't been on TV for 2 years until they finally figured out their
Nobody
contract.
wants to see that. Yeah.
But Ozzie really he's really funny, and he was talking with AJ Przinsky this weekend about Bobby Jenks on the radio, and it was they had great stories. They were great.
Oh, I'm sure.
Yeah, they certainly were.
I think he holds a crazy record. I don't know. I'm not 100% sure, but I think he retired 41 consecutive hitters, which is like a Major League Baseball record that's never been even come close to for a pitcher. I think that's it.
That's
but
awesome.
I could be wrong.
Wow.
That's awesome.
Oh,
there he is.
Oh, John, you cued it perfectly, man.
To the White Sox.
One thing about Bobby, I saw him throw first day in spring training. I said, this big man over there, like, who the hell is that? And first day, throwing gas.
He gone. Gas.
He gone.
Scouts will tell you the best pure power in the majors comes out of the right arm of Bobby Jenks. It had him as high as 102.
I mean, Bobby was kind of ahead of his time. I mean, there's a lot of guys now that throw like Bobby, but like when he first came up, I'm not sure there was anybody that looked like him from like a stuff standpoint, where he was, hitting 100 on every single pitch with just a vicious curveball. And I mean, he was embarrassing guys, good hitters right away.
And Bobby Jenks has tied a Major League record, retiring 41 consecutive hitters. Unbelievable.
Bobby, game changer. Bobby threw 100 or more.
I'm going to start to cry.
With the nastiest breaking ball I've ever seen in my life. He was just an anomaly of unfathomable proportions. And as a teammate, he was the best.
No, I can't handle it when men cry. No.
I mean, everyone knows and loves Bobby, and what he did was remarkable. He deserves his place among the icons of this franchise's history.
Bobby
how young he was.
ended up the last one on the mound.
Oh yeah, he was like 24 years old.
You
when
play
he
for
was
the
there.
love of the game, the joy of it. It's what I love to do. I'm playing to be a world champion. And that's what I wanted to do from the time I could pick up a baseball.
Yes, yeah. Sad. Yeah. Listen, I hate to bring the show down with even more bad news, but I learned some really horrible news this weekend, Sadnov. My wife has never been to Rico Benny's.
She wasn't a model for them in the 80s. She wasn't. She wasn't in their ads.
I know.
She's never been to, no.
Well, I can tell you right now, with 100% certainty, my wife has never been to Rico Benny's. With 100% certainty.
I've never been to Rico Benny's, so it must be a hot girl thing.
Yeah, I mean, first of all, any woman that's ever been to Rico Benny's is tipping the scales at between 250 and 350.
No, we're not going to do this. Nope, we're not going to do this this morning. Nope, we are not going to do this morning.
I mean, Rico Benny's is not Rico Benny's is for serious power eaters. There's no shame in that. It's not a place you go where you say, "Hey, what do you have that's gluten free?" What are my vegan
keto?
What are my vegan choices here?
Oh, that would be great.
No, Rico Benny's is for power eaters. You know, it's.
So wait, Bat, are you gonna drive into the city? Are you coming into the city to take her?
I'm gonna have to now. We're gonna have to make a road trip. I mean,
wow.
Got to take her to Rico Benny's. I mean, she's got to taste the steak sandwich at the very least. I mean, how can you not?
No, she's lived this long without. So
I mean, she's tasted all the Italian sausages in the whole city of Chicago. She might as well taste the steak sandwich too. Better her game a little bit.
She's had plenty of steak sandwiches too.
Immediately no. Bat, how was your 4th of July, sweetie?
No steak sandwiches served that night. Gonna tell you that right now with the dogs running all over the place. No, siree, Bob. But it was fun. My son went to a lake house. He said he likes the lake life, is what he told me.
Oh, so he put in his request for a lake. So after returning from his trip to his European vacation, he now wants a lake house?
Yes. He's very, I told him, well, we should try a couple out. We'll try a couple out in Michigan first or something like that, before we commit. I have a friend of mine who has one in Michigan that I know is never being used. It can use.
You mean Tom?
Yeah, that's exactly right. That's exactly what I'm doing. We just got to get him a couple of jet skis. He likes to ride the jet skis and stuff like that. So, Sadnov to have a couple of jet skis delivered. I spoke to your wife already.
No problem.
She's taking care of it.
No problem.
Mm-hmm. Yeah, he likes the lake life. I think he's going to really enjoy your place.
He likes the lake life.
No, it's under construction. They're working on it, so
he can work through that. He's fine. He can adapt.
It's not ready.
He can adapt. It's fine. He'll be good. He likes the lake life, Sadnov, so I think he's going to be a frequent guest.
That's funny.
Mm-hmm.
He's invited anytime.
So it was just you and Lady Bat just staring at each other then for the weekend because Vinny was gone.
Yeah. I don't think our eyes ever met, to be honest with you. It was a honeymoon weekend, all except July 4th weekend. And I got to tell you something, there were fireworks all weekend. I mean, they didn't stop on the 4th. I could say that right now.
Yeah.
People kept going. It was kind of fun to listen to, but it got a little annoying after a while. Getting old.
So loud.
Yeah. I didn't light off one firework this year.
Well, they're illegal in the state of Illinois, so.
Well, there's no Vinny, so there's no reason.
What are you gonna do?
Yep. Yeah.
Hey, well, I took the bike home. It was stupid hot, but I was determined to ride my motorcycle to my parents' house, and I did. I left early Friday morning, which it wasn't so bad. Friday it was fine. But coming back yesterday, it was too hot.
Mm-hmm.
Especially because if you're just sitting on the bike at the toll plaza and you're just like waiting to go, and the bike is like cooking your thighs. Do not recommend, but what are you gonna do? But on the way to my parents' house, I did not take the highway. I took 12 all the way there because it's really pretty. So I was riding through Indiana, part, and the car next to me like was putting on his brakes, so I hit my brakes. I was like, why is this guy stopping? And a coyote runs across the road because I'm near the Indiana Dunes National Park, and so there's animals there. And so he's like a little young coyote, and he ran across the street. Luckily, I had stopped my bike, and he went onto like the grassy median, and I was like, psst, psst, psst. I was like, come here, coyote, I want to pet you.
Wow. No, you don't want to do that.
He wouldn't come to me though.
I don't blame him.
But he was so little. I wanted to pet him. But he didn't. Maybe my bike was making too much noise. I don't know. But then it was fun because I drove as soon as you leave Indiana and ride into New Buffalo, which is so pretty. I love New Buffalo. I have never seen so many weed shops in a row.
It's unbelievable.
It's a new development. Obviously, weed is legal in Michigan for recreational and medical, but I'd never seen like 15 weed shops all in a row. So, and all the cars were turning right into the weed shop. So I was like, gonna go around you.
Yeah, right when you go over the border into Michigan there, that's all it is.
Yeah, right on US 12, like right there.
Yeah, it's unbelievable.
All dispensaries.
Yeah, it really is crazy.
Yeah, but that's fine. It's a good time. You guys would be interested to know, Tom, my dad made smash tacos on the Blackstone. They were very good.
Smash tacos.
Smash tacos.
Yeah, so like he used ground turkey because me, and like a tortilla, and you make kind of like a smash burger, but instead of bread, it's a tortilla. But it was very good.
And then you do what?
So you take the meat and the tortilla and you flatten it meat side down. Obviously you season it and you flip it over and then you cook it and then add cheese. And my dad made something called comeback sauce. And I was like, what are you doing? He's like, I saw it on YouTube. And I'm like, okay.
Yeah, no, there's a lot of
good.
There's a lot of comeback sauce recipes, but I like the idea. I've seen a bunch of people do that where they smash the tortilla onto the meat on the grill, and it actually looks pretty good.
Yeah, it was really good. My dad, he was like, it took him a little bit because he was like trying not to burn the tortilla.
Yeah.
But he got it sorted out. It was delicious.
Yeah, I kind of like that.
I don't know. And I'm sad that TikTok got your dad's brain. I'm sad.
Better that than Fox News. Oh.
Oh.
I logged a lot of TikTok.
Funny.
I logged a lot of TikTok this weekend.
Wait, the only thing about TikTok that might be good, it really was Ozzy, the other Ozzy Saznoz. You know him, that's right, Ozzy Osbourne.
You know, I didn't know that you could buy. I didn't know that you could buy that, and I guess 6 million people did know that.
You could buy his last concert.
Oh, it was pay-per-view.
Yeah, it was pay-per-view.
Oh.
Words.
Yeah,
I didn't know that either.
Yeah, like 6 million people bought it. Whatever.
Yeah.
But the lineup was unbelievable.
Lineup was unbelievable.
Yeah, it's like Black Sabbath and Pantera and
Tool. They had everyone.
Some Tool. Oh yeah, I don't know.
Yeah.
Steve Tyler.
Yeah.
Mm-hmm.
Yeah. I mean, it looked like an unbelievable concert. Unbelievable.
That seems up your alley. Like you.
Yeah, no, I would have loved to see it. I actually didn't know that you could even. I didn't know that it was pay-per-view.
Maybe you'll see the clips in your For You page. Maybe they'll.
Oh yeah, they've been playing them nonstop. Between those and Taylor Swift, I can't get enough.
Yes. Hey, well, we got a great show for you today. We are back at full strength for this full week. That's going to be brutal. But we have a great show for you today on this magnificent Monday here, Tasty Live. At the top of the 8 o'clock hour, we got an options jive, a little research corner with Kai. Kai's going to be in to give his overall outlook on the week. Then Dr. Jim in the house at 8:40, the Skinny on Options abstract application. Unconventional tips for beginner traders. You have a couple days left to sign up for Dr. Jim's first show in Boston. If you'd like to see Dr. Jim live, go to tastylive.com/events. But he's going to be in at 8:40 to talk about tips for beginner traders. And then 9 o'clock, the market measures, understanding option skew and IV. kind of like a back to basics segment there, but something that is very important, that foundational knowledge of what is option skew and how does that relate to Ivy? And then live from the trade desk, big boy Scotty S. Scott Sheridan counting down all the top trending tickers over at Tasty Trade. And, special guest appearance on the Liz and Jenny show. I guess maybe Jenny is still sailing around the lake because it's Liz and TP today. So you're going to get TP in his flame shirt today, probably. So I think it says America, like TP in his flame shirt, like this.
It's so true.
So if you want that, it's headed your way at 10 a.m. You're welcome. But hey, that's the run of show for today. You guys want your daily dose?
Sure.
Yay. All right. Let's go.
Our leading story. Breaking news.
Breaking
Across the wire. Leading story. Top story. Let's jump in.
In today's headline.
This just in.
Breaking news.
All right, everybody. Today's a magnificent Monday. It's July the 7th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Any earnings, Mr. Bat?
No earnings to talk about. You got a couple coming on the 10th, but we'll talk about that later on.
Hey, stock futures fell last night after the Trump administration says now tariffs will go into effect on August 1st. I'm confused, and this is literally like my job. I don't super understand what's going on, but we had 90 days to make 90 deals. We've not made 90 deals. We've made maybe 2 deals with the UK, maybe with Vietnam. Those are kind of really more outlines or frameworks. But now Scott Bessent, the Treasury Secretary, says letters are now being sent out to countries being like, hey, you better do our tariff stuff or else. So then the tariff rate could go back to what it was April 2nd, but it may not. So the tariffs are in effect, but they may not be. They might go higher, but they may not. And that's literally all I know. But they're going to go into effect, or they may not go into effect August 1st. So I'm sorry for the lack of clarity, but the administration has not provided a lot of clarity around what is actually going on. But the market has put in its vote, and it says no.
It's almost like the market knew with volatility contracting that it was going to be extended. You know what I mean? I'm talking about /VX 1850 up 10 cents today.
Maybe. I don't know, Tom. How are
and going lower the last 4 or 5 days in a row. Yeah.
So July 9th was supposed to be the date. What do you do?
I talked about it a little last night. The market can price unknowns, which it's really good at. It's impossible for the market to price stupidity. So, I mean, all you have to do is listen to Scott Bessent talk, and you're like, oh my God, can you shut this?
Well, no, but that aside, your personal opinions
That's
aside.
Not my personal opinion. He's a moron.
No, okay. But that aside, it is hard, no matter what you believe.
Whatever. I don't care. Nobody cares.
Wait, let me finish. Let me get my word out.
Nobody cares. If you're a trader, you don't care. It doesn't matter. The S&Ps were up 50 on Friday. On Thursday, on a half day, they're down 11 this morning. The market does not care. It made its statement.
Okay.
They were down around 50 or so.
They were down 40. They were down 40 on Friday on the electronic markets, but they made it back last night. So the bottom line to all this is the market literally does not care.
Well, before you threw your mantrum, what I was going to say is that the stopping and starting and the pushing of deadlines, it just makes it hard for anyone, small business, large business, consumer, investor, to just plan for the future. That's the only thing I was trying to get out. It's just hard
Just plan to do your business. Nothing's going to matter. That's what it comes down to.
The market's just telling you, it's just pay it, no, never mind. As somebody used to say, just don't pay attention.
That's exactly what I said when volatility was contracting.
Just pay it, no, never mind.
It
doesn't make any difference. It's all a bunch of just PR garbage. Just forget it.
Hey, U.S. equity funds attracted strong inflows in the week to July 2nd as U.S. stocks hit record high on AI optimism. According to new data, investors acquired a hefty $31.6 billion worth of U.S. equity funds in their largest weekly net purchase since November of 2024. Does this matter?
Well, what's interesting...
Just looking at fund flows into equities, bonds, money market funds, stuff like that.
Well, there's no money flowing into bonds. But what you are seeing right now, what I feel is most fascinating about this is that retail investors have been relatively quiet. They've just stayed passively long. But the professionals, they had the largest outflow at the bottom and the largest inflow at the top. It just shows how bad they are. And I mean...
SMRT.
But this makes sense to me. I mean, they're all playing catch up. So I think this is really like professional money, and they're just trying to play catch up so that they get back in the game.
Speaking of not going into bonds, what are you doing in bonds to start the week?
I bought
bonds
some
going lower under 114.
Yeah, I bought some last night, and then I sold some puts in the notes this morning, just a little bit worse than here. But they're really ugly. I mean, because all things considered, they should be a little bit stronger. But, you know, I figured if the U.S. dollar was a little stronger, that bonds would be a little bit stronger.
The dollar is not strong.
Well, the dollar is stronger this morning by a small amount. And bonds, on the other hand, are just still really heavy. They were heavy on Thursday. And
they've been stair-stepping lower most of the week, right? I mean, I know they got up to close to 116. They're under 114 now, 113.24.
But they were up a little bit last night, and now they're down a half a point. So they're really heavy.
Mm-hmm.
Okay. Hey, shifting gears to commodities, crude oil prices fell around a little over 1% after OPEC and its allies announced on Saturday that they will increase oil production by a larger than expected amount in August. What are you doing in crude oil?
Yeah, that sell-off didn't hold. Last night they opened down $1, but now they're up a few pennies. So it had no impact.
Crude oil unchanged at 67, IV rank of 36, going sideways.
They're crushing premium in there again today.
Mm-hmm. Mm-hmm.
Okay. Well, gold also declines as traders seek clarity on U.S. trade talks. Gold declined after gaining nearly 2% last week. What are you doing in gold? And we can throw silver in there if you want.
We're short some premium in gold. It's a little heavy this morning, down $30.
And so is volatility a little heavy in there too at 26, right? It's been going lower.
Yeah, silver's down pretty big this morning too. They both took a hit.
Yep.
What are you doing personally in there?
Oh, we're just short strangles in gold, and so far so good.
Okay. What about silver?
No position right now. Just gold and crude oil.
Okay. Well, good. I picked the right two. Hey, Delta is kicking off second quarter earnings this week, but is 2025 already a lost year for airlines? The earnings season is going to begin a little bit more quietly than usual with results from Delta due Thursday. They did have a busy 4th of July weekend, but those were at discounted prices. Again, that's according to the airlines, although I'm sure if you ask people who paid for tickets, they're like, those were not discounted prices, baby. But what is on tap, do you think, for airlines as they start to report their earnings?
I don't know. I mean, Delta to me seems kind of rich at these levels. I don't really know. With a lot less international travel, I would think that it's got to be a little heavy on them. But who knows? You know, I don't know what they set the street up for. I have no idea. I mean, we don't trade a lot of. We don't trade a lot of Delta. We have one current position in there. I mean, the stock's $50. We're short. Yeah, we're short like the 50 straddle. I don't know what we'll do for earnings. Ivy rank's decent.
Okay. It's Thursday, so you got a little bit of time.
Yeah.
But also something interesting like a United who had all of those problems looking at you, Newark, that seems to be resolved now, but obviously that affects their bottom line, and they're going to have to reconcile that somehow. So it seems that there's some interesting factors at play in the airline sector that they're still dealing with. So it might make interesting earnings trades. That's all I'm saying.
Possible.
Yeah, for the first time. I mean, we start off with earnings with Delta, as you just mentioned a moment ago. It's kind of funny that some of the airlines are the first week for earnings.
Yeah, like it used to just be crappy Alcoa, and now
That's correct. That's correct.
Switching the game up. In other news, the stock market rally is broadening beyond big tech. Tom and Bat, what are your thoughts on consumer stocks making a comeback for the second half of the year? The S&P 500's consumer discretionary sector logged its worst first half performance in 3 years, but maybe looking beneath the surface shows that the story isn't quite as bleak. But looking at something like McDonald's and Starbucks and Nike, again, all these, huge consumer names just getting slapped around the first half of the year, but can they turn it around?
Sosnoff, can they turn it around? Can they be saved?
Well, Nike already got saved. McDonald's and Starbucks, I don't think they're that interesting. I mean, I'd rather trade Starbucks than McDonald's personally, but I mean, we don't really trade a lot of McDonald's. We do trade Nike and we do trade Starbucks.
Although I think does McDonald's have a new, did I read this or am I wrong? Does McDonald's have a new spicy McDonald's sandwich?
Yes, I reported on it.
Yeah. Did anybody
last week?
Anybody try it yet?
Sorry, Bat, we didn't get there this weekend. We will try to.
Darn, I figured you would. McDonald's is trading at $2.93 and change. It's off of its highs closer to $300 that it made last week, going kind of sideways to lower these days.
You want me to
but
check?
These are also consumer companies like Lululemon or GPS, which had actually pretty good earnings. Like other stuff, like I can't mention every consumer.
Do you want me to see
stock,
if Mandy has reviewed it yet?
Can you do that for me?
Can you do that? Can you
Great.
check for us, please? Thank you. That would be great.
That'd be nice.
Hey, in other news, the IPO market got a boost from Circle's 5% surge, sparking optimism that the IPO drought may be ending. Tech IPOs had a big month in June with 5 IPO offerings, up from a monthly average of 2 since January. IPOs produced much-needed returns for Silicon Valley venture capital firms. Are IPOs back?
I mean, the only one I can think of is Circle. What was the other ones?
In June, I think Chime in June. I think so. CHYM.
Okay.
And CoreWeave was in March.
Yeah, I haven't traded
good.
Chime yet.
Okay.
It's been kind of a takeover. It was closer to 39.40 when it opened. It's 31 and change right now. It does have options when I look at them. They're about 50 cents wide. Open interest is
So
also eToro also went public with they have a market cap just over $5 billion. I think it's just Toro is their ticker.
Yeah, we haven't traded that either. TORO.
Mm-hmm.
Yeah, trading around $2.30. Why we haven't traded it, Thomas?
No, that's not
That
it.
must not be it then.
No, that's not it. It's eToro. eTor.
Yeah, ETOR.
Oh, my bad. I'm so sorry. Yeah.
It's okay. $62 and change going sideways. I've never traded it, never looked at it. Looking at the August markets, they're $1.50 wide. That's why we never traded.
Yeah.
And then there were 2 health tech companies, Hinge Health and Omada Health, that also went public.
Unfortunately, it's good that there's IPOs, but we haven't traded any of them. We tried to trade Circle, but that's about the only one.
Mm-hmm.
And how's Circle doing this morning?
I have no idea. I mean, we don't have a position.
You're like, it's dead to me.
I mean, it's impossible to trade. It's impossible.
Okay. Well, speaking of impossible, JP Morgan on Thursday forecasts stablecoin growth as a whole sector will only reach 500 billion by 2028, and they called trillion-dollar stablecoin projections far too optimistic, as there was little evidence of mainstream adoption of a dollar-pegged cryptocurrency token. Who's right?
Unfortunately, I do think that JP Morgan is right in this case. I just don't. I mean, I'm glad. Like Tasty will be offering, you can be able to fund using stable coins on Tasty, I think, starting next week, because we've been building it out.
Nice.
But I just don't see like the worldwide adoption of stable coins to be that big yet. I think it could be decent, but I agree with JP Morgan. I think some of the projections are really overdone.
Okay. All right. What is crypto doing as a whole this morning?
That's down a little bit.
Okay.
It is down a little bit. I mean, just under 109, but really kind of sideways. It's been in a fairly tight range for most of June. If you had to say what's the average price, and again, I don't know the average price, I'm just saying it, probably 108 and a half. It's 109. It's been in a very tight range. Watch things tight range.
Here's something interesting. Now Chinese tech giants like JD.com and Alibaba are urging the central Chinese government to authorize yuan-based stablecoins to counter the growing sway of U.S. dollar-linked cryptocurrencies. The two firms are proposing that China allow the launch of stablecoins in Hong Kong pegged to the offshore yuan to help promote the global use of Chinese currency and to fend off the dollar's growing digital influence. What do you think about that?
I think they're smart.
Do you think it'll happen, though? Do you think China, because China does not super big on crypto stuff, like
yeah, they're not at all
allowing their people to do it.
They're not at all. But I mean, I think JD.com is asking for the right stuff.
Okay.
I mean, I think it's the right move for them. I don't know if what the Chinese government's going to do.
Anything in JD or Baba?
No,
we haven't played Liz's namesake son JD in quite some time. It's sideways 32.
Hey, here's something crazy. NVIDIA hit a market cap of $3.92 trillion on Thursday, briefly putting it on track to become the most valuable company in history as Wall Street continues to double down on its AI optimism. That's quite the milestone.
Yeah, considering in April it was under 100. It's 157. It's actually down about $1.50 this morning.
But the world's most valuable company ever?
Crazy, right?
Like, how can you short the stock now?
The world is moving.
Tom?
I mean, I'm not short it, but I think you short it. I think you short it easy here. It's all-time highs. I mean, I don't know. It's easier to short it here than it is when it was cheaper.
What's the IV in NVIDIA, Bat?
It's less expensive to short it now on a P&L basis than if you had shorted previously because it hasn't had a downtick. IV rank of 10. You're going to have to do something with a little bit of a debit spread to it.
Oracle is cutting the cost of its database software and cloud computing service for the federal government, making it the latest tech giant to offer the Trump administration a significant discount on its services. The company is offering government agencies a 75% discount on its license-based software, including databases and analytics, as well as a substantial discount on its cloud services through the end of November. Tom, you used to work with Oracle as a client. You know they do not give discounts.
Yeah.
I mean, we still use Oracle, but I think it's smart on Oracle's part just to get, once you're in as the database, the U.S. government can't really change anything. So it's a little bit misleading, I'm sure, because it's probably they're discounting them on the hardware, and then they'll they'll kill them on the
No, I said also on the cloud services. You're just not listening to me.
on the maintenance
This is a common occurrence.
This is what Oracle does. They basically give you the hardware, they give you the software, and then they kill you on the maintenance. But who knows what the terms of this deal are? Who knows?
What are you doing in Oracle? Oracle just a massive sort of rise after earnings, and they kind of haven't really stopped since. But I don't know what they're doing now.
We do not have an Oracle position on.
You are right, Vanetta. 237. I made a high on what would that be? Thursday, I guess. 235 and change, down about $1.50. Even the S&P down 14.
That's crazy. I am skipping a story here, John. 36 new tech unicorns were minted in 2025 so far. One, what are your thoughts on that number of unicorns? Is that high? Is that low for the first half of the year? And then two, I want to read you some of the names of these companies. I'm not going to tell you what they do. I'm just going to give you their name, and you tell me if you think that they're worth $1 billion just on their name.
Okay.
Okay, well, is 36 a lot for unicorns so far?
I don't know. I don't think so, but I don't know.
Okay. Well, some of the names: Linear.
Okay, that's a good name. What else?
Gecko.
Okay, good name.
Meter.
Near.
Meter, like the gas meter or parking meter.
It's okay.
Yes.
What else?
Teamworks. Thinking Machines. Decagon. Well, you already know Kalshi. You already know that. Pathos or Pathos. Function. These names are terrible. This company is just called Owner.
I like that.
Owner?
Owner. Yeah, it's okay.
Whatever.
Fiction owner? No, thank you.
What else?
It's a no for me. Nourish?
Nourish? No, I don't like that. Nope.
Chapter?
It's okay.
My personal favorite, Threat Locker.
That's not bad.
And The Bot Company.
Not bad.
And then, this one's good. Underdog Fantasy.
Oh yeah, those guys. I don't know how I know those guys, but they're sports betting, right?
Yes. Their sports gaming company raised $70 million in Series C. They're worth $1.3 billion.
Yeah, Underdog
Fantasy.
Yeah.
It was just a fun game. TikTok says they are building a new version of their app ahead of an expected U.S. sale. This comes as President Trump says he's going to start talking to China today or tomorrow about a possible TikTok deal. TikTok has developed a plan to launch the new app to U.S. app stores on September 5th. So we'll see what happens if America's just going to get a crappier version of the app that the rest of the world gets. And then China's like, hey, all right, good luck, you guys. See you later. Enjoy your new TikTok. I don't know what the deal entails, but we can look at Meta because you can't trade TikTok, but you can trade Facebook. And I'm sure Facebook is also looking at this very closely. Meta?
What do you think of TikTok? You got to have some opinion.
I love TikTok, but I don't know. There's, what are you gonna do?
Right.
They're gonna make a new version of the app, so
I'm sure it'll be good. I'm sure it'll be good.
Just hold in there. What's Meta doing this morning?
Ooh, good question. Meta, we haven't traded because of the low IV rank, although it's climbed to 31. A week ago, it was around 4 or 5. Meta does have earnings coming July 3rd. I think it's July 30th. IV rank of 31. Stock $7.16, down around $2.50.
Oh, okay. An entity affiliated with investment firm BC Partners sold 30 million shares of pet products retailer Chewy. They're basically Chewy's largest investor, and they just liquidated $1.25 billion worth of stock. I thought I should talk about it. So there it is. I don't know if you're doing anything in Chewy.
I'm ordering from Chewy.
We do not have a Chewy position.
Okay.
Chewy.
Go ahead.
Ivy rank of 8. Just want
A 54-pound meteorite from Mars, which is believed to be the largest piece of the planet currently on Earth, is going up for auction at Sotheby's. It's expected to rake in between $2 to $4 million, called NWA 16788. The specimen was found in November of 2023 in part of the Sahara Desert, called a once-in-a-generation find. The hunk of rock could fetch a nice chunk of change.
NWA?
It's NWA 16788, not the rap group, but it's some sort of astrological naming convention. I'm not a scientist.
Who finds a rock in the Sahara Desert and knows that it's from Mars and worth anything?
I think you know.
I don't know, but there's pictures of it online if you'd like to take a gander of it. It will be on sale July 16th. So call your broker. I don't know. I don't know what rich people do when they want to buy things from Sotheby's. Do you have like an agent? Do you have I don't know.
I'm sure Ken Griffith will buy it.
Maybe. Or Nicolas Cage. I don't know.
Yeah.
Hey, congratulations. Jurassic World Rebirth stormed the box office over the holiday weekend, raking in $318 million at the global box office. Movie-going audiences just want more dinosaurs, I guess. The Universal Pictures release just earned $147 million in its first 5 days in North American theaters, so not sure if that does anything for sites like AMC or any of the theaters, but are you guys going to the movies? Are you going to go see F1? Are you going to go see Mission Impossible? Are you going to go see Jurassic World?
I'll go see F1. I would go see F1, but I'm not seeing anything else. AMC is trading under $3, down about 2 cents, so it's not helping it there either.
I would see F1 too. I don't know if I could see Jurassic World Rebirth.
I can't even.
I mean, I have to go see F1 because that's her hall pass and stuff like that. So.
Oh, all of F1 is her hall pass, or like?
Yeah, the whole team. Just like high school again. Yep.
Nope. Hey, this is crazy to me because I've never been to this restaurant, but Raising Cane's overtook KFC to become the number 3 chicken chain in America. The privately held company has leapfrogged KFC by keeping their menu simple and operating their own restaurants. Raising Cane's now has more than 900 restaurants, and they saw system sales of $5.1 billion last year. They are only trailing Chick-fil-A and Popeyes. Are you surprised? I was surprised.
For the shittiest chicken you can buy, I'm really surprised.
I mean, I agree with Tony. It's like weird little pieces of chicken, but they do have good sauce and good fries.
I've never been to a Raising Cane's.
And they have really good iced tea. Really good.
Oh, okay.
Yeah, I get that.
There's one.
So, but in your eyes, it's not better than Kentucky Fried Chicken, though.
Well, I haven't been to a Kentucky Fried Chicken in a long time, but
well, then that's why they fell out of the number 3 spot, girl.
It's for sure. It's not even close to Dave's.
Dave's sucks.
Dave's is great. It's not even close to Dave's. I don't really go to. I mean, I like Popeyes. I just don't go there a lot. I like it.
Sure. I mean, anyway. I was just surprised by the new world order, so I thought I would report it. Hey, finally today for my viral video of the day, if anyone has babies and dogs, you know, sometimes trying to raise both at the same time can go awry, but sometimes it yields a hilarious moment. Here's a video. I'm simply just calling it Rodeo Baby. Watch this.
If it hadn't been for Cotton Eye Joe, I'd been married a long time ago. Where did you come from? Where did you go? Where did you come from, Cotton Eye Joe? If it hadn't been for Cotton Eye Joe, I'd been married a long time ago. Where did you come? If it hadn't been for Cotton Eye Joe, I'd been married a long time ago. Where did you come from? Where did you go? Where did you come from, Cotton Eye Joe? If it hadn't been for Cotton Eye Joe, I'd been married a long time ago. Where did you come?
That poor baby. It was just it's a stupid video, but it makes me laugh. It's funny. Hey, Bat, what's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&P is down 17 handles, Sadnov, 63.07, 62.90 to 63.15 last night. They're actually a little bit lower than that on Thursday when they gave back most of the move today that we had, and now they give back about half of the move, a little bit less. NASDAQ down 105, Russell down 11, Dow down 45, and volatility up by 23 cents. You can see volatility over 19 at one point, 1910, now 1863. Bonds are the big mover to the downside, down 12 ticks to 113.28. Oil trading up 31 cents near the higher end of its range, or right now on the high end of its range for the day. Gold down 22 off of its lows, flirted with 3,300. It's 33.19. Silver down 56. That's a bigger mover on a percentage basis, just about 2 to 1 versus gold. Corn lower after the bat tweeted out a picture of corn being almost 6 feet high, Sosnoff, when I was in my travels, saying short corn. Hope you got that. Corn down almost 3%. It's supposed to be knee high by the 4th of July, which I found out is really as high as an elephant's eye, which means corn is really the height it's supposed to be, which means my picture meant nothing, but I was lucky.
Okay. Whatever all that means. Let's take a look and see. We're running late. Let's see what we got here. Monday.
I'm long-winded all the time.
Monday, July 7th. Let's see. Confirm and send. When determining the notional value of your positions, how do you account for positions with naked calls? Those have a theoretical unlimited risk. So how do you account for them if you're trying to figure out notional value?
That's a great question. I mean, listen, we figure out notional value for pairs trades. I typically don't use notional value on a position. I use the buying power of that position to quantify my risk. I mean, I guess you can look at it as 30 shares of stock if you're short a 30 delta option, but you know, I think it's a futile effort. I don't know what the cause or effect would be of knowing that number.
I mean, in a perfect world, if you needed to figure out notional value, in a perfect world, you would convert the delta of the option position into shares, just like Tony said, and you would come up with some number. That's a perfect world. In a more general world, you just take if you're short calls, you just count it as being short 100 shares. If you're long calls, you know, well, he says naked calls. So if you're long calls, you just count it as being long 100 shares. And if you're for each call, and if you're short them, you just say you're short 100 shares for each call that you're short. The perfect way is
Have you ever gone through the notional value of your portfolio?
No.
Okay.
No. But the perfect way to do it is to basically just multiply out the deltas. But if you want to do it a different way, no problem. Then just count each call as 100 shares. Let's go to the next slide. There's no perfect way for that. Are there advantages to declaring myself a professional trader?
You know what? I've never done it since I was a market maker. There are some tax advantages to. I'm not an accountant. I don't know them, so please, this is all old information that I'm spewing out here. There are some tax advantages to it, but there's some disadvantages too. Like your quotes aren't free that you get. You got to declare other things. To me, I've never done it.
Yeah, you know, the advantage is that you get to, if you do it before the end of the year, you get to, if you're professional, you get to mark your positions to market, which is which potentially could be advantageous for you for tax reasons. The negative side is, like Tony said, first of all, you open yourself up to potentially being subject to audit if you're truly not a professional trader and you have other businesses or other things going on in your life. On the negative side, you will have to pay for professional fees because you don't get free data when you're a professional. That's an exchange rule. That's not a tasty rule. So that's an exchange rule. On the positive side, if you're a professional, you'll be able to write off certain expenses, like, you know, maybe building an office in your house or something like that. You know, certain expenses you get to write off. So the positive side is write-offs and mark to market. The negative side is higher fees and then opening yourself up to potentially, you know, some form of audit. We're not saying it's good or bad. We don't do it. Let's go to the next slide.
That's all I can tell you is what I do.
Earnings season is coming up soon. With volatility this low, what are your thoughts on trading earnings with low volatility?
Carefully, if at all. You know, between the two of us, Tom does a lot more of it than I do. So I would look for a little bit more of a directional bias and probably smaller positions.
You know, this is a tough one because earnings season always pumps a little vol in, gets us excited about binary moves. There's more stuff to do. That's the good side. The bad side is with volatility low, man, earnings are so hard. They're just so hard. With volatility high, earnings are a little easier. With volatility low, earnings are just so hard. Just my thoughts are going to be to trade them. We will trade earnings for sure, but we will trade them much smaller this time. Much smaller. Unless something pops in volatility between now and then. I can't say.
Sure. I mean, markets move, right? I mean, things change. What you anticipate today might not necessarily be what you get when you want to do this, right?
Yeah, 2 weeks from now, it could be completely different. Let's go next slide.
Sure.
Do you normally recenter by just rolling the untested side or by rolling both strikes? If you roll both strikes, would you still do that if you had to pay a small debit?
I mean, I'm normally recentering, especially my first move on a strangle, which is assuming this is what we're talking about here, is always to move the untested side and not move both strikes. And I reduce my delta by 50% of the overall position. Now, if I'm rolling both strikes, which I have done and do, usually closer to 21 days, or if I've rolled up the untested side all the way to a straddle, or I'm about to go into a straddle, which is being short the same 2 strikes instead of being short 2 out of the money options, then I definitely will roll to a different strike, new strikes, both sides. And I don't care if it's a debit. It's always going to be a debit when you do that.
Yeah, when you buy the guts and sell the wings, you're always going to pay a debit. And it doesn't matter how big your debit is. It just matters that you're also selling some premium.
You're left with another strangle, which means you're left with short premium, right?
Yeah, right. So it doesn't matter how big your debit is. So forget about debit and credit in that case. If you're recentering by just rolling the untested side, which means you're just rolling up or down, you're rolling up puts or down calls, that's totally fine. Those are always going to be for credits. When you're rolling one side, it's always a credit. When you're rolling both sides, it's always a debit. We're indifferent. If we're too close at the money, we'll roll both sides and wide them out. If we still have some room to play, we'll just roll the untested side. It doesn't really matter. This morning, I've done absolutely both. I've rolled up, out, sideways to the next month. I've rolled one side. I've rolled both sides. I've done it all on different underlyings. So, and only with futures
all
options.
Before 8 a.m., Sosnoff. Look at you.
All before 8 a.m. Yeah, we've made only 13 trades so far this morning, but they're all adjustments or a few opening trades, but that's it. Yeah, so we don't care. So if it's one side, credit. If it's both sides, debit. But when they get too close at the money, we'll widen them out. Let's go to the next slide. This person writes, I've started selling covered calls against my long-term QQQ position. Lately, with the market rallying, I keep having to close them at a loss. He's talking about just the calls. I'm unsure how to think about this. On the one hand, my overall position is up, but I'm not sure if I should view the calls as a hedge or if I'm doing something wrong. Should I be adjusting my covered call strategy, or are these losses just part of the process?
They're not losses. I mean, you sold a call, you bought stock, you had long delta. If you're doing it the way that we do it, you're selling the 30 delta call, you had 70 long deltas instead of naked long 100 long deltas. You benefited when the market went sideways to lower. You benefited when volatility contracted. You didn't benefit when the stock went through your strike price, which is the best thing that can happen to you. I know it's better if it happens later than earlier. And you could have definitely made more money if you were just naked long stock, but you did this because you wanted to have that theta decay in your position. So you should hope that this happens forever. I don't think you're doing anything wrong. I think you should stick with the strategy. And at market highs, it's probably prudent.
Yeah, I mean, that's the right answer. I mean, first of all, you're not closing anything at a loss. You're just... Right. You're just rolling the position.
It's the net position, not the...
Yeah, it's a net position. I mean, the way to think about this is, man, I'm good. You know, I'm long stock, short some calls. So instead of being long 100 shares of stock, I'm long 70 or 65.
Wow, this is how Sosnoff must feel every day.
I mean, there's nothing better than this is, this is the best thing that could ever happen. Don't even, these losses are not, there's no losses here. Winning is part of the process. Yes.
Yeah.
You should not be. You should just keep doing what you're doing and hope it works forever. Trust me, you're going to feel a lot worse if your calls expire worthless. Trust me.
And you're rolling down.
And you're
you
rolling
say,
down.
My covered call didn't help me enough.
Yeah, you're going to feel a lot worse. Let's go to the next slide. And the last one. I have been very fortunate in growing a small account into a larger account. However, as my account has increased in size, I find it increasingly difficult to move the needle. How do you balance staying small while achieving meaningful gains?
Yeah, I mean, one investor's floor is another investor's ceiling, but I get your quandary here. First of all, good job out of you for growing the account. Now, what do you have to do? Now you got to slowly, if you've already increased your directional bias by the strategies that you're using before you're increasing your contract size. Now it's time to increase contract size. I mean, that's what it comes down to. I mean, that's the only way to do it if you've already changed your strategies by having a higher probability of success and using more capital on those trades.
The way I thought about this one is, if, first of all, you're not fortunate, you're skilled. Growing a small account into a larger account is a skill. And that means you're doing something very right. But it is a lot harder to grow a small account into a large account than it is to scale a small account into a larger account. Like, you've tackled and you've been successful at the most difficult part of this business, which is growing a small account into a larger account. Once you do that, learning how to scale is just another skill set. And you've done the most difficult skill set. This is a much easier skill set because A, you're going to add more positions, and B, you're going to slightly increase size. It's not just about scaling number of contracts. It's also about putting on more positions. And for you to do both of those, it's relatively straightforward compared to what it takes to grow a small account into a larger account. So you're in the right direction. Just keep your head down. Keep going.
I like the way you worded that, Sadnov. I mean, you usually don't get those kinds of nuggets from you. You're usually a condescending prick, but that was really good and endearing. I like the new Sadnov. I like the change. We're going to take a quick 90-second break and come back. We got more Tasty Live. I'm going to even write that down, Sadnov. That's one I'm going to use in the future. We got more Tasty Live. That's right, with Joy. Nothing says pre-Monday like this, man. Kai in the house. We'll be back in 90 seconds.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Hello everyone, this is Kai. Welcome to the Trade Talk Show. A good strategy should be able to achieve higher return on capital and lower volatility. This is exactly what we found in managing at 21 DTE. That is why managing at 21 DTE is such a simple but brilliant idea.
My trading style really depends on the market environment. So when the IV is low, I tend to place more diagonals and calendars. In the high IV environment, I tend to use more aggressive strategies, put on more strangles and straddles, or naked shorts.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
It's options. Jive. That's right, Sadnov. It is an option jive. Nothing says pre-market Monday like this, man. Kai in the house. Kai, how are you, brother?
I'm doing great. How are you?
I'm doing wonderful. Thank you for asking. You got all your fingers? You good for the 4th of July? Okay, yeah. Beautiful.
Yeah.
Beautiful.
Just enjoy the chilling weather this morning. It's only 60,
It did go down from the 90s into the 60s yesterday.
My goodness, yeah.
Yeah.
Mm-hmm. Yep.
It was hot. It was hot. I don't like sweating. It was hot.
You've never sweated a day in your life, Sadnov. Your hands are like butter. They're so soft and beautiful.
They are. And
so I have visitors from my mom's side of the family here in Chicago. We went up to 95, right? Somewhere between 91 and 95 for a week or so.
Yeah.
They said that was cool. That's fine. But we were living in Chicago for more than 11 years. I feel like a 90 and 95 is probably a little bit too high for me, but they're fine. They're like a 100 to 105.
Wow.
I was at the Cubs game and I was drenched in sweat just sitting there. I was very uncomfortable.
Yesterday?
No, Saturday.
Oh, Saturday was a little bit hot, yeah.
It was hot.
Oh,
well. Are you guys ready for the market?
I am. Let's go. The Weather Channel's over.
Cool. All right, so I add a little bit economic news for the past week and also the upcoming week, because right now we're kind of in between some transition and special period. Everything can be changed suddenly just based on certain news. So let's take a look at what happened last week in the market. So for the market, definitely the equity market, S&P 500 and NASDAQ kept going higher. They kept going, making new highs. Dow's only less than 1% away from the all-time highs. IWM Russell is a little bit far away. I didn't calculate, probably 2 or 3% away. But still very strong equity market. And a lot of assets are start to move and sideways with lower volatility. So the next main theme in the past week is the reduced volatility and the implied volatility. Yeah, for the macroeconomic news, definitely the Fridays, not Friday actually Thursday, we have better than expected job reports. Although it's still one of the weakest in the history, but it's better than expected. So what can you say? The market's still going higher.
Still going higher till Thursday, right? I mean, when the market was kind of closed there, we actually sold off a little bit. We've taken back half of that rally so far.
Right.
Yep.
And we had a Vietnam trade deal, so 20%, and originally it was 46%. And of course, the biggest one is the big, beautiful bill passed, and it's adding $5 trillion to our debt ceiling. And nothing happened other than the bonds and the currency, as the equity market is still strong. Down probably 0.5%, less than that.
Yep.
And the upcoming week, definitely the most important thing. Can we go to the next slide? Is the deadline of 90-day tariff. It's Wednesday, July 9th. So let's see what's going to happen. Are you scale down your sizing in your portfolio, or how would you hedge against this?
Our positions are very small now based on implied volatility, not based on any news. We don't scale positions down based on potential economic reports or news, things like that. Those are already priced into the market. We only scale positions.
Actually, if you want to look at it, Sadnov, we, not inadvertently, but obviously inadvertently because volatility expands, we try to take advantage of that economic news with volatility contracting, right? After the event.
No, I understand that, but I'm saying we just do whatever the market gives us. We don't take into account like a July 9th deadline or a 10-year note auction. None of those are relevant to us because they're known, they're already priced in.
All right. So one quick question: did you add up a position right before the election? Because the implied volatility increased, but there are so many uncertainties. Did you?
We did increase our positions before the election because that's an opportunity. Just like Tony just said, that's an opportunity. Like a pop in implied volatility, we view as an opportunity, but a date doesn't mean anything to me.
But I remember the last time when Trump elected, the implied volatility was high, but the realized implied volatility was even higher the day after. To the downside.
Yeah, well, sometimes you will get, sometimes that'll happen. This particular time was the opposite.
Yep, exactly. Okay, so take a look at the what happened to the market from 4 indices. We definitely had another strong week. If we take a look at the next slide, so all the 4 indices is up somewhere between 1.8% to 3.6%. Still very, very strong. This leads to the next slide, and as the realized range is definitely higher than the expect trading range. Expect trading range is about 1.1%, and realized is definitely more than 2%. And today the implied volatility is slightly higher. It finished at 17.5. I think it started 18 or something this morning. It went up to 19 already. So the expect move of this week's 1.3%. I personally think that the realized range is definitely going to be higher than that, considering all of these things doesn't happen. What do you think? Or it's going to be quiet? Or you don't care?
I mean, I don't care. I care that I assume that the market's going to be pretty accurate. I think if you're going to look at anything on this slide and think that it's interesting, it would be more that the market went higher and the VIX is higher.
Volatility at 83 handle moves enough for the week, relatively low. I mean,
no, I'm not talking about that. I'm saying the actual VIX number at the bottom. That's the only thing that stands out to me as interesting.
Yeah, but we had the roll in there, Sadnov. You got $1 of carry or more. I mean, it's basically the same.
Oh, okay. I didn't realize that's different VIX then.
Well, I mean, a 40-year veteran of the trading world, you would think you'd be able to realize it. But you know what? I can send you a reminder. I know as you get on in age, things take a back seat to memory.
That would be interesting, except the roll wasn't last week. But nice try.
Well, the roll was the week before, and you've got a week. You've got a buck and a half of 1,000 and change in premium between 1 month to the next, don't you? Oh, screw you! I'm going to look right now. Go
Keep
ahead.
going. Go,
Keep
Kai.
talking.
He's out of his
Okay.
mind.
All right, next slide. Implied volatility rank. Following the week before, the implied volatility rank across the market actually decreased again. So S&P 500, Euro, and Bitcoin, I would consider they didn't even change. 11, 12, 1% is not changing. Bonds, gold, crude oil, the other assets actually kept going down. So right now, I think the market is going to wait and see. The implied volatility is not going to change that much. Maybe increase a little bit tomorrow. But overall, the IVR is low right now.
Yep. Agreed.
Yep. Okay. So some major assets movement last week. The first one is S&P 500. NASDAQ kept going higher. So right now, let's go to the next slide. So right now, S&P 500 is 2.3% higher than February's high. And the NASDAQ is 3.3% higher than February's highs. That's actually very strong. Unlike the bonds, which didn't even change, this is pretty strong. Any comments?
No, I mean, the market's been crazy strong. Agreed.
And he's disappointed in his bond move right now.
And Japanese yen.
Disappointed in that too. Throw that
Japanese yen? No. That's
well,
fine.
he's been doing good in the yen as of late.
It's fine, yeah, but it hasn't moved for a month or so, right?
Hasn't moved. It really hasn't moved all year.
Yeah.
All right, next slide. Something interesting is the discrepancy or the difference between implied volatility and historical or realized volatility actually is pretty high, right? Although we're trading, the slide. Yeah, although the VIX trading around 16, 17, right below the medium of the long term, but the difference between IV and HV is still high, which means the IV still overstated HV for pretty decent level. So right now, the IV minus HV is 7 points, which means if the IV is 17, then HV is 10. If you check 0DT, the VIX 1D is trading around between 7.5 to 10, so really low. So 7 points range is above 70th percentile in the past 20 years. So this is pretty wide, still pretty wide. So long-term average is 3.5 points.
What do you think of that, Saz? That's kind of interesting to be.
Yeah,
to be
it's a little
quite frank.
interesting. Yeah, I'm not sure that I make anything out of it yet, but we'll see.
Okay.
Right.
Yeah. So next one is the euro. So euro dropped a little bit in the past 2 or 3 days, but it reached 1.18, the highest level in the past 5 years. Just little notes. Pound is also the same. I think they reached the highest level on Monday. Pound is 1.337, almost.
You're correct. Yep.
Yeah.
In that range. Yep. You're right.
Yeah. Okay. Cool. Last one. The top performers and the bottom performers in S&P 500. Top performer, for some reason, all these entertainment companies, gambling companies, Waynes, LVS, they up more than 10% last week. There are multiple reasons. One of the strong reasons from Macau, they have really good season performing in Macau. And First Solar, they down, then went up in the past 2 weeks, up 12% again. Moderna, Ford, all these are the top performers.
Not the usual list that you want to see when you're trading. I mean, you're
not AI stocks.
Right. Definitely seems to be a little bit of a rotation. That could to me mean that we're getting a little bit long in the tooth here, ready for a little bit of a breather in the market.
Okay, good to know.
That's the way I look at it.
Yeah. For the bottom part, the top three are the pharmaceutical companies. They're down like 10 to 36%. Something happened in this sector, but none of these are liquid enough for us to trade. So I just put there so viewers can just take a look at it. So the next four are GE, Netflix, Dash, and AMD. You see the difference. Last week was still the strong week, so all of these bottom performance only down 2 to 4%. not a big deal.
Agreed.
Very good, sir. Good job out of you. Sadnov, even the S&P down 24. I think, Kai, we got to take a quick 90-second break and get this opening coming. Oil up 48 cents, NASDAQ down 129. We'll take a quick 90-second break and come back. We got the opening bell next. Thanks, Kai.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. Spending some time with my friend here before the market opens. Got about a minute and a half. Even the S&P's down 23. Sadov, when you went to bed last night, or when you woke up, well, let me back up. Sunday night, even the S&P's opened down in the teens, right? About 18, 19, 20, something like that?
Yep, about 20.
Did you think we'd be higher or lower? We're basically unchanged. We're a little bit higher.
Well, I was doing the show when they.
Did you think we'd be lower? Or?
I was doing the show when they opened last night. I was eating my Maine blueberries and doing the show, and at the time, just
You mean your good ones? You mean like the ones that you
The little
like
ones.
the main peeps?
The little ones, yes. No, I really did think that down 20 was probably, I mean, I wasn't going to bet on them either way. I was just hoping I got a chance to buy bonds lower, and unfortunately I did.
I thought they would have been lower side enough. I would have thought you could sell every rally today, and that's the way I'm playing the market.
I think that's probably pretty good. The NASDAQ looks pretty weak here.
I think I'm going to get in trouble probably because anytime you've tried to fade this market, you've gotten in trouble. Let's take a look at what's going on. Even the S&P down 18, NASDAQ down 104, Russell down 12, and the Dow down 28. Volatility only up by 20 cents. You can see here mid-range for the overnight session, 1860. Let's keep an eye on volatility, see what happens there. Bonds are down 15 ticks, 113.25. Bitcoin down around 1,500 to 108.9, the same price I quoted last time. Oil up 42 cents. Gold down $23. Let's see some of the movers. I know here, we'll do the upside first. Let's do that. Downside. Tesla down 21 after going as low as 291. It's 294, down 21. Netflix down 14. CRWV down $3 and change. Meta down $3. Oracle, which Vanetta mentioned, hasn't had a downtick till today, down $3. Let's see what's bringing us to the upside side. Now, Oracle up 9, Apple up $1.90, and Uber up $1.70. Talk to me, Goose.
Well, if you're looking for something to play, I mean, it makes sense that kind of Tesla down $24 may be the more interesting play on the board if you can get filled at a decent price.
What kind of play are you looking at? Just a pure premium play? I mean, heavy rank of 2. Yeah.
Yeah, pure premium play. I'm not really. I'm thinking. I don't know. I'm thinking like 16 Delta Strangle.
Doing both sides, the equal distance away, you're taking advantage of a little bit of call skew.
Taking a little bit of skew advantage, maybe. 245, 370. Markets are kind of wider than I would have liked this morning.
I mean, the market's been open for 90 seconds. Give it a break. And the stock's moving $1 at a clip. I mean, I remember your markets in these kind of moves in a stock that were $5 wide. Here you get 25 cents for crying out loud. Get a 25-cent wide market out of you. I had to make a 15-cent wide market. That's the only way I can get a 25-cent wide market out of you back in the day.
God, your memory. Now your memory's going. You're delusional. And I tried in Tesla. Missed it by that much.
Want me to show you how to get filled?
No.
I have the technology.
No. I think they'll come.
It's almost like the S&Ps have stopped moving. They're down 23.25.
I actually got filled. I didn't adjust price very much, and they just sold off the stock, so I got filled. I sold the 245, 370.
You are correct. For $10.88. Sounds like a big number for the stock. Must have some good volatility in Tesla. Tesla August numbers are around 63 with earnings coming July 23rd.
Yeah. Let's see what else do we got here this morning. Higher
or lower on the close, Sadnov? Even the S&P is down 26.
I'm going to kind of join you today. I'm not very bullish at all. I think they overdid them on Thursday. That up 50 on Thursday was kind of. I didn't love that. Let's put it that way.
Yeah, I got you.
Yeah, the up 50 on Thursday I did not love, and I think that they're going to pay the price for that today.
Okie dokie.
Let's see. Anything here that's jumping off the screen at me? And I'm going to say, for starters, no, but for starters, no. I'm surprised by the weakness in the bonds more than anything. Gold, nat gas, silver, everything else is kind of in line. The softs are a little bit weak today. We have a couple of positions on in there, but not much. All right, what else do you see?
Very good. I'm tired of listening to you mumble, so I don't know if you know why.
I'm just looking to see what else there is here that I can trade. Not that much. Okay, go ahead. What do you got?
That's right. I've got the skinny on options, abstract applications. Nothing says the market is open on a Monday like Dr. Jim. We'll be back in 90 seconds. Dr. Jim next.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Question for you guys.
Yes.
Vanetta this morning was giving me a little flack. It was lighthearted. She meant well.
Okay.
For my particular baby face.
Yes. You are young.
Just
young.
question for you guys, because I look up to you both. How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing, I can hear John laughing out there. See, the thing is that, you either have it or you don't have it. And
all right.
You just don't.
I could put together a pretty gnarly neck beard.
It's a manly thing. But
last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
Every time I leave Tasty, I miss it. Even like when I go home after work, I think about Tasty. I'm like, I wish I was really in the office.
No, you don't.
I don't.
You just went abroad. Were you able to just fully disconnect?
Fully.
Yeah.
We saw several artisans, but the sword maker. 3 months to make a sword.
Yeah.
That's
when
one
does yours get delivered?
50,
you didn't do the sword?
50 grand. And there's
but that's,
and a 2-year wait list.
It's a couple spoons.
Yeah, that's, come on.
I'm going to Rockford for a wedding. It's going to be a very fun wedding.
Your friend that's getting married or is your girlfriend's friend?
Girlfriend's friend.
Do you want your girl to catch the bouquet?
No. That never ends well. Like in movies, that happens. The guy's like,
Get the full scoop by checking out the archives at tastylive.com.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means? Nothing says Monday like this, man. Dr. Jim in the house of Scan Options Abstract Applications. How are you, Dr. Jim?
Man, I'm well. You know, we were just talking about before the break. So, Tom, when you hired me back in late 2015, I said, okay, man, like, let's do this. I mean, you kept calling, and I wasn't really sure. Then I finally said, all right, man, let's do this. But look, here's what I'm going to need. I'm going to need you to bring in a makeup team in studio in 2016. And I got to hand it to you. Like, you made it happen. And so we had the makeup crew there. It was nice, man. I appreciate that.
I'll get you a makeup team, all right? Don't you worry about it. You just sit there, look pretty, then we'll see what we can do.
Well, I mean, they were the ones that told me back in the day. They were like, listen, you would look so nice with long hair. Like, the short hair, You're really rocking it. But if you really grow this thing out, like, it's gonna be next level.
Well, we have
like a chia pet.
Like a pet rock. Yeah.
Like a pet rock, yeah.
Usually we get our interns from a lot of really good schools around the country, but this summer we have an intern from the cosmetology school in Chicago, and just to work on you.
Is she coming to Boston? Because, hey, Boston is Sunday. This Sunday, we are going to Boston Sunday night. You can still register, tastylive.com/events. Totally free. Tom, it's a good day to be alive, man.
Where is the event? Where is the event in Boston? Do you know?
I think it's the Sinclair. I'm not 100% sure.
Oh my God, it's a week away, and he doesn't know where it is, Tom. This is not. He's not going to get there.
Brittany's going to be there, Tony. Brittany's going to be there. Don't worry about it.
The Sinclair.
There you go.
I don't know that place, but I'm sure Bostonians do. Do you have your food plans for Boston? Are you Red Soxing it? What are you doing?
Well, so my flight, I'm going to try to catch the game Saturday, but I don't know because of my flight. And it's not a night game. If it was a night game, it would not be a problem, but it's like an afternoon game.
Oh.
So I don't, with when I land and stuff, I'm not sure. It's going to be kind of a last second decision. But food wise,
with the stealth way you move through the airport, Dr. Jim,
I'll make it. No, you're right.
You'll make it. No problem.
You'll make it. I'll be early.
I'll
be in my seat.
Right.
It is probably.
Don't change in the airport. Change on the plane bathroom. It'll save you some time. And
Logan is about the closest airport to downtown of any city in America. It's literally like, I don't know, like 2, 3, 4 miles. It's nothing.
So Logan to Fenway is how long?
Ooh, it depends. It's Saturday, right? So I don't think the traffic will be that bad.
Saturday.
You're talking best maybe 15, 20 minutes. I think you can do it.
Really? Oh,
yeah.
Okay. Well, I have to go to the hotel first because, again, the makeup crew that you promised me should be waiting for me at the hotel. So I'm going to go to the hotel first, and then I might try to catch the game. But food-wise, the only place I want to go, do you remember when we were there in 2017, there was this pastry shop called Mike's something or other.
Yeah, we went there.
Yeah. Me and Brittany went.
It was cannoli shop.
It was a cannoli shop.
But it was way more than cannolis.
No.
They had cookies and cakes and stuff. Oh, it was unbelievable, Tom. That's where I want to go.
It was literally a cannoli shop, and they had like 100 different kinds of cannolis.
Mm-hmm. No, they had cookies and stuff because I remember the cookies there. They changed my life, Tom.
Those aren't life-changing cookies. The cannolis were good.
Okay. All right. I just remember I stood in line with Brittany for like 45 minutes. Like the line was around the block. and we got tasty treats for everybody, and it was amazing. So that's the one place I want to make sure that I check out, and then yeah, I mean, I can't wait to be there with everybody. It's going to be absolutely amazing. And so it's Options Crash Course Live. So if you are a beginner, this is for you. If you're intermediate, this is for you. If you are advanced and you feel like you have nothing left to learn, this is for you. So come, bodies in the seats. I need heartbeats in the room. It's going to be good, man.
Are you taking questions at the end?
Yeah, so I'm actually weaving Q&A into my talk. So this is something I've asked you to do for many, many years, and you've never let me do it. So now that I'm off, I'm in the forest all by myself. We're going to do things the way I want to do things. And so I'm taking questions as part of my thing at the end, not in the middle, because that could potentially mess up some things. But questions at the end, absolutely. We're going to take questions from the stage, because I've just learned, like, a lot of times when somebody asks a question, there's 10 or 15 other people in the room that have the same question. And so there could be a lot of learning that can take place if you take them collectively.
I'm not going to comment on that. I have a very different opinion, but it's okay.
I know you. Oh, I know you do.
You do you, as Vanetta would say. You do you.
That's the only way to do it. That's the only way to do it. And so, oh, by the way, hey, don't let my Red Sox get hot, Tom. We just swept the Nationals. We took 2 out of 3 out of Cincinnati. We've got the Rockies coming in town tonight. Tom, don't let us get hot, man. I'm just saying, don't let us get hot. Real quick. Hold on. I have to bring this up to you guys. So speaking of the Red Sox, this is the greatest thing you're going to hear all day. I promise you. It's far superior to anything Tony's going to say. It's far superior to Cherry Bomb. This is the greatest thing you're going to hear today. So do you know about the rookie for the Red Sox named Roman Anthony? Do you know about this guy?
Yeah, well, I saw some of his highlights when he got his first hit. And stuff.
I mean, you've heard of him, right? Yeah, well, he's raking, like, he's the next Ted Williams. Like, there's all that, but that's not even what I want to talk about. So Roman Anthony, when he got called up, like the second game, his family came to watch him play. Yeah. And I didn't know any of this. I learned all this, like, with everybody else. His family is sitting in the stands, right? So I've been laughing about this for 3 weeks. Roman Anthony's dad's name is Anthony. Roman Anthony's older brother's name is Anthony. Roman Anthony's grandfather's name is Anthony. Is that the greatest thing you've ever heard?
I did not know.
That's since George Foreman
I've ever heard.
I did not know that, actually, that they were all Anthony.
And how come he didn't like this? How come he didn't like this kid? Why did he name him Roman? Why is
At least he went with Roman. Like, Roman's pretty sweet, but man, Anthony, not only once, not twice, but thrice. Tom,
it's a great name, Anthony.
I mean, Tom, you think scalping the E-mini S&Ps 3 times is a power move? That is nothing compared to Anthony triple dip.
I'll give you that.
Yeah, that's something, all right. I don't know if it is, but it's something.
I mean, all I know is I've been laughing about that for 3 straight weeks. So, all right, let's get into today's segment. So, what I want to do today is I want to do something totally different today from what we normally do on the show. So, this show is usually advanced topics, mathematical topics, highly theoretical topics, things like that. Well, today, in honor of my event in Boston on Sunday, Tom, we are going to do 3 unconventional tips for beginner traders. And this is intended to be, Tom, it's a little teaser for Sunday. It's just a little amuse-bouche for Sunday. Like, this is not intended to be the complete picture. You have to come on Sunday to get the complete picture. So are you ready, Tom, for 3 unconventional tips? This will probably help you today, actually.
I'm ready.
All right, let's go. All right, John, so cue us up here on the introductory slide. Okay. So if one thing is for sure, or if one thing is true, I should say, for every trader along their journey, it's that we all start somewhere different on the learning curve. And sometimes that means starting from a completely blank slate where every day feels like drinking from a fire hose. So here are 3 off-the-beaten-path tips to kickstart your learning as a beginner trader. Before I give my 3, I'm actually curious. If you all had to give a brand new trader that knows nothing, absolutely nothing, and you guys have, Tony, you've done Where Do I Start? Bat versus Bat, you've done Where Do I Start with Katie? Tom, you did Case, you did E and K. I mean, you guys have done this, right? So I'm very curious. What would be the number 1 tip that you would give a beginner trader that knows nothing?
Are you asking me or Tony?
Doesn't matter. I can
whoever
go first.
Whoever wants to go first.
I mean, if the number one thing for a novice, I would say I think it comes down to confidence. Trading to me is a lot of confidence in your conviction, not on the direction of something, but the strategies. So if they learned the strategy, I would ask them to trade it very small in a relative size to their overall portfolio. So that's what I would say. They have to learn the strategy so they're confident about how a strategy works. And then I would ask them not to go with the one that uses the least amount of buying power, thinking that that was the safest trade, although it might be the safest monetary risk reward, it would be the hardest one to make money with. So I would try to focus on the defined risk strategy that had a high probability of success, over 65%. So strategy over 65%. After that, it just comes down to being small.
Okay. All right. I like it. Tom, what do you think?
Okay. So the most important thing is to just get started. So literally, like when you know nothing and you're a novice, you have to learn by doing. I mean, there's obvious things like stay small, like Tony said, or find something that's super liquid, but those things don't make that much sense to you until you've actually done something and made your first trade. You gotta drink the Kool-Aid a little bit. You gotta bite. You gotta test the.
Sure.
You gotta test it, and like your first time, eating ice cream type thing. So make a trade. So my advice: make a trade.
So you're saying get in the arena. You're saying get in the arena.
Yeah.
And get in the fight. Right, and then you'll actually start learning. I like that. I like both of those. Obviously, staying small and then just getting started. That's really, really good. So actually, those two are not any of the three that I have this morning. So this is going to give people even more. This is great. Okay, so John, cue us up here on the next slide. So my number one tip. This is tip number one. So again, we're assuming that you don't know anything. Like you don't even know what liquid means. You don't even know what a strategy is. You're thinking of the option contract to begin with. My number one strategy, and I used to use this in the classroom all the time, and it was pretty effective with new traders and new learners to the derivative space. When you come up against an option contract, you should learn that contract from the long side first. So to be specific, if you're trying to learn a call contract, learn about what a long call is and then a short call. If you're trying to learn about what a long put or put contracts, learn the long put first and then the short put. Do not try to learn the short side of the contract first. Now, this is important for us here on this network because we're selling premium. Most of the time we are on the short side of the contract, whether it's a spread or naked, it doesn't matter. The short side of the contract is going to be the driver of the strategy, right? But I'm telling you, if you're brand new, it's very confusing to learn things from the short side of the contract. Start with a long call first, and then here's the beautiful thing, Tom. Once you know one side of the contract, you automatically know the other side of the contract because an options contract, for one iteration is always a zero-sum game. So if you know what one side makes, you know what the other side loses and vice versa. So if you learn a long call, indirectly, you've already learned a short call. Now, you have to understand the subtleties and the nuances and understand kind of the spirit of the trade, if you will. That's going to take some time. But in terms of just getting like the facts and the features in place, learn the long call, then the short call, learn the long put, then the short put. And that's when you get into unlimited gains and limited losses and limited gains and things like that, like I have here on the slide. But this is just this is just a teaser, man. This is just a Kickstarter. And so learn the long side first. I take it when you guys were back in the pits, in the 40s, the 50s, you guys learned the long side of the contract first, correct? You had to.
Yeah, sure.
This is how you guys did it.
Sure.
Mm-hmm. Oh, are you being serious? I was being sarcastic. Did you guys really learn the long side first?
I mean, listen, when you were Listen, you're 100% correct, Dr. Jim, and that's why you're an excellent teacher.
John, can you clip that out? Can you clip that out? I need to play that back for my annual eval next year, because this year's didn't go as well as I would have liked. So I'm going to need more footage like that. So go ahead, Tony.
No. You're an excellent teacher. This is a trading network, which doesn't make you really fit in here that well.
Clip out that one too, but just the first part. Don't clip that second part. Go ahead.
But as a teacher, you're 100% correct. And learning the long side when you break it down the way that you have is probably the best way to do it, because it's the easiest thing to understand. So I got to give you credit for that. Learning the long side from us, we learned the same way. We didn't just walk into the pit and start trading. I sat on the outside of the pit for 3 years before I made a trade. Tom went through, I believe, like a course with Drexel Burnham and watched other people trade before he made a trade. His first trades were all buys from the buy side because it took the least amount.
No, that's not fair. So
when you were at Drexel Burnham, your first trade wasn't a buy of options?
Yeah, but I was just working at the brokerage firm. When I got to the trading floor,
that's just the beginning of your career. You learned from the buy side.
My first trade on the trading floor, your first trade.
No, not at the trading floor. Your first trade was a buy at Drexel Burnham because it was least amount of buying power to use. It was the easiest thing to understand. You were going for all of the upside of a long call, cheap amount of money. Dr. Jim is right. You got to give him his credit where credit is due.
The first thing I said was, yeah, that's right.
Okay, so I'm validating that point.
Well, now let me jump in here really quickly. So just to be very clear, I'm not even saying that you should trade from the long side. You may never trade from the long side.
Sure, I get that.
I'm saying when you are trying to understand what an option contract is and you're trying to process it in your head, don't start on the short side, because you're going to get so jumbled up so quickly, because especially with like a short put, you're like, wait, I'm short the put, but I'm buying stock. I mean, you're going to get completely lost. I've seen it thousands of times. If you start with a long call, that's going to be the closest thing to long stock. And most people that come into our space are familiar with stock to some degree. So a long call is kind of a gentle introduction. And then you get the short call, then the long put, then the short put. That's a natural way to do it. But so Tom, so you did or didn't start buying options? I'm confused, and I need clarification on this.
The first trade I ever made in my life, the first option trade, not trade, because I had bought and sold stock. The first option trade I ever made in my life was I bought a 2 lot of puts in an oil service company. And I made $1.50, so I made $300 on the trade. And I thought I found gold.
Of course. Like you had it all figured out.
I thought I knew something that nobody else in the world knew. Yes.
And this all happened. I mean, you were in the pit, right? Like this happened physically with other people around you.
No. This happened when I was working on Wall Street when I got to college. My first trade in the pit was my first trade ever in the pit was I walked in the pit and this guy was standing there and he said, "What's your bid for some option?" And I said, I don't really know because I just got here. I don't know how to make a bid yet. I'm like learning. He goes, "Well, just give me a price." He showed me on the screen. He goes, he was trying to give me $6.25. Like he was literally trying to give me a tick. And so he ended up giving me $6.25. And he said, "That's the last time I ever give you anything." And and my first legit trade on the trading floor was the opposite of whatever some broker wanted to do. And I think I ended up buying an option, but I don't know if I bought it or sold it. My point was on the trading floor, nobody would trade with you. I mean, you basically had to do the opposite of whatever a public order was.
Of course.
Yeah.
Of course. Yeah. Of course. Okay. So tip number 1, learn the long side. All right, John, get us on the next slide. So tip number 2, and this is also incredibly important, because once you get in the arena, as Tom you suggested, and once you're staying small and you've got your strategy, like you said, Tony, that's all well and good, but then things start moving and man, you can find yourself lost in the weeds real quick. So tip number 2 is you need to figure out what is driving the actual option P&L on any given day. Like on any given day, on any given trade, what is driving the option P&L? And there's only three main ways that an option P&L is impacted. There's smaller ways. There's dividends. There's interest rates. For all my Black Scholes bros that might be watching the show, they're going to come and get me. But the three main ways are always going to be direction, time, and volatility. It's always going to be direction, which is delta, time, which is theta, and volatility, which is vega. And so my suggestion for people, after they've made their first couple of trades, I would actually sit down and try to begin to dissect how much of the P&L, whether it's a win or a loss, it doesn't matter, how much of the P&L came from delta, how much of the P&L came from theta, how much of the P&L came from vega. Now, little spoiler alert, if you try to do this as a beginner trader, you're not going to be able to do it. But what it's going to do is it's going to show you where you need to learn. It's going to show you where you need to go next. Like, oh, I thought I understood delta, but man, I guess I don't quite know how that fits into an option P&L picture. Like, how does that fit into the actual, profit and loss that I'm generating with a position? And so understanding what's driving P&L, because that's what we're trying to do. This is ultimately what we're all trying to do. This is why we're here. Like, high probabilities and high volatilities and trade management, those are all a means to an end. This is the end, right? And so understanding the end game early on, in my opinion, is a really, really good way to think about how you're going to learn this space. And of course, and I'm sure you guys will agree, another little tip here, on any given day, of the three, delta, theta, vega, delta is going to be the one that's going to move your P&L by the most. Would you guys agree with that?
Yeah.
Yes, sir.
Tony? Yeah.
Yes, sir.
It's just, 19 times out of 20, that's going to be the thing, right? And then the one time out of 20, it's going to be vega. It's not going to be theta. Theta is very rarely going to be the thing on any given day that's going to be moving the needle. Theta is kind of the thing that's kind of working in the backgrounds, right? Theta's kind of, Theta's your Dustin Pedroia. Like, he's not going to get all the highlights. He's not going to get all the lights that a David Ortiz, that a Roman Anthony, that an Anthony might get. But he's the one that's keeping it all together, Tom. He's the one that's just moving things down the line. Do you think Dustin Pedroia should be in the Hall of Fame, by the way?
I don't really follow the Red Sox. I would assume not, but I don't know.
I don't know, man. He's got 3 World Series, I think. Let me think. 13 and 18.
Red Sox.
No, not 18.
Sox
He's got
talk
7
radio.
and 13, I think.
Like, I don't care about Dustin Pedroia.
I've been in your car with you. A half a dozen times, and you always have sports talk radio on. And so the fact that you don't know more about the Red Sox is a little bit disappointing because you have like national sports talk on. You're not listening to like Cubs and White Sox stuff. You're listening to like Maine people stuff.
No, I listen to local. I only care about local.
Okay. All right. Fair enough. Okay. So tip number 2, option P&L. Tip number 3. All right, here we go. Let's go, John. The last one. You should start with vertical spreads. So this is a piggyback off of what you said there, Tony. You said, hey, pick a strategy, learn that strategy, and kind of get in there with that strategy. Well, I'm going to go one step further. I think the strategy that everyone should choose at the very beginning is a vertical spread. Now, the only exception to this would be if you want to include some stock. I think a covered call is a great choice too. But this is just an options-only strategy. I think vertical spreads are going to be the best choice for every trader out there that is just learning because your risk is going to be defined. It's going to give you some exposure, build up some market awareness. You're going to get a feel for how the market moves pretty quickly. And, of course, you have long call spreads and short call spreads. Your long call spread is going to be bullish. You're going to have about a 50% pop if you choose, the at-the-money strikes, which, by the way, all of this we're going to talk about on Sunday. So, again, come to Boston and we'll unpack all of this in a lot more detail. Short call spreads will be a bearish bias with a greater than 50-50 pop. And then, of course, your long put spreads will be bearish with a 50% pop. And your short put spreads will be bullish with a greater than 50% pop. And so, generally speaking, when you buy vertical spreads, you're typically going to have around a 50-50 shot, the way that we like to buy vertical spreads. When you sell vertical spreads and they're out of the money, you're going to have a slightly greater than 50% pop, maybe 60, 65, something around those parts. And so starting with vertical spreads, Tom, do you think this is a good way for most traders to start, or do you think they should start with like a straddle in gold or something like that?
No, vertical spreads are fine.
Fair enough. Yes. And so, these are my 3 unconventional tips. Along with the 2 bonus tips today. I mean, man, we gave people, they got what they came for today, Tom.
Nuggets, as you like to say, Dr.
They
Jim.
got some
many
breadcrumbs.
nuggets.
So we gave them a few breadcrumbs. And not only that, but the bread's gluten free. I mean, it's organic, it's gluten free. I mean, what more could you ask for, man?
Thanks to our viewers, Jim, just so you know, they've done a little research for you, and your show is actually in Harvard Square in Cambridge. So
I can't wear my slides? Okay, I'll have to leave my slides at home.
No. You wear your slides. It's a little, yeah. I mean, I don't know if you've been to Cambridge before, but it's really nice. You're right in the middle of Harvard. You're kind of right down the street from MIT. You're going to be a little bit outclassed, but you're 3.5 miles from Fenway.
Okay.
You're a long way from your little Italian neighborhood for your Mike's pastries. So you're going to have to, I think you're going to be, we don't want you taking the subway there by yourself or public transportation without a guardian. So you're pretty much going to be trapped. But that's the latest, just so you know.
You know what's so funny about public transportation? So when we moved to Chicago in 2015, and we moved from Charlotte, of course, and, I knew we were moving to the city. I knew I was working down in the West Loop, and I knew it was going to be, to figure everything. I knew it was going to be busy. I knew it was going to be whatever, right? So I was completely convinced that I would be riding the train down into the city every day. And so I was trying to figure it out from Charlotte, right? Like with maps and like this and that and whatever. And so then I actually get to Chicago, and it was on one of my trips. Because I was coming in the fall of 2015 every couple weeks, right, to do shows and whatever. And then I started full time in January 2016. So I came, and we had barely known each other. And Tony didn't really know me at all. Mm-hmm. But after only a couple of trips, I can't remember who said it. It was one of you two. But I was talking about traveling into the city every day, and I'm like, this is going to be so new for me. And one of you looked back at me. I wish I remember who it was. One of you looked straight back at me and said, "You will never take the train. You will never ride public transportation into the city." And I was there for 5 years. I never once took the train into the city. Not one single time.
I gotta give that win to Tom, although he probably doesn't remember. But I saw you drive, and if I had seen you drive, I would have said you were built for the train. Okay, you should definitely take the train.
So I was in Chicago for almost 5 years. I drove into the city, every day. I found street parking, around, in the West Loop there. How many times do you think my car got towed? I'm going to set the total. at 2.5. You over or under?
I'm going to say under. Because I don't think you got towed. I think you just got tickets. I'm going to say under.
I'm going to take the over.
So I got towed 2 times. So it was the under, but not by much. I got towed twice. And the first time, it's a very I don't even know what the word is. Very disorienting. Like you go out, and I don't know about you guys, but my first thought is my car got stolen. Like somebody stole my Civic. Like I'm pretty surprised. Nobody was
stealing that car. Nobody wanted that car. Not even in Chicago. You couldn't give that car away.
And then I was like, man, I didn't think I was violating any laws, but there's so many signs, Tom. There's so many signs. You can't park here. You can't park there. And so, 2 times got towed.
Well, they make it easier for you in Florida because nobody can read there.
That's true. No shirt, no suit, no shoes, no words, baby. Let's go. I'm ready. All right, so there you go. That's it. Boston Sunday night. I hope to see everybody there. Oh, here's a few takeaways. Yeah, here we go.
Sure.
As a beginner trader, it can often feel overwhelming and intimidating to engage in the markets. But if you really study the long side of the option contract, how options make money, and vertical spreads exclusively, then an otherwise daunting task can become a lot more manageable with consistency and commitment.
Good job out of you. I'm going to let you go. You did wonderful today. Plenty of nuggets, plenty of breadcrumbs, as you said. We'll take a quick 90-second break and come back. We got a market measure next. Even the S&Ps haven't moved 3 handles, so I'll be back in 90 seconds. Take you live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little bit of a market measure. Even the S&P is making their first four-handle move. They're down 28 and change. Apple, after opening closer to 212 and climbing to 216, is back near 212 again. So I don't know if that was one of the higher stocks for the day. That's why I mentioned it. Tesla holding steady, down just about 21.
Yeah, the Tesla Strangle we sold this morning has come in 40 cents.
It's not bad for a guy like you.
Not bad at all. We'll take it.
You probably should.
We have a few short deltas here today. I came in a little bit short NASDAQ. Covered some of the futures, still short some NASDAQ. I don't know. Got a little short on Friday.
NASDAQ's the weakest of the group by a slight margin. It looks like they're really having a big tug of war here.
Yeah. The only thing we're off on is bonds. They're weak.
Yeah, bonds near their lows, 113.21.
Other than that, not much. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks for spending your morning with us. Thanks for spending your Monday with us. We'll be here all week. Mm-hmm. We started the shows last night, Victor, myself, and Ilya on the Sunday night show, and now we've got 5 full days, and we're here all week. We're not on the road. I think we're on the road the following. Let's see. Yes, we will be on the road the following week. We'll be in Denver. So a week from this Friday, the Bat and I will be in Denver, and really looking forward to it. So that's July 25th. We'll be in Denver, Colorado at the Summit Theater. So that's our next road show. And looking forward to seeing everybody out in Denver. It is not too late to sign up. tastylive.com/events. tastylive.com/events. So the Bat and I will be in Denver, and we can't wait. And then, of course, Dr. Jim's got his show this Sunday at the Sinclair in Harvard Square, in Cambridge, in Boston. And if you're, so we're covering at least 2 different parts of the country in the next 2 weeks, which is good stuff. Mm-hmm. And if you can make it to Dr. Jim's show, I strongly recommend. And if you can't make it to ours, Dr. Jim's is at 5, doors open at 5 o'clock at night. Our doors open at 8 o'clock in the morning on a Friday. We'll be back at work at 11. All you Denverites, you can't be telling me you want to go see the Rockies play. That's not an excuse.
No, it's not an excuse for sure.
I watched part of the Rockies game yesterday. Oof, that team is brutal. Brutal. I was surprised how many fans showed up. I got to give them credit. Those Denver fans, they came out on a nice Sunday to support their team. Man, that team's bad. Even though they won yesterday, it's bad.
They're not fair weather fans like the rest of us.
Fair weather fans. 6 million people in Chicago and the 1,800 of you, blah, blah, blah. Going back to the greatest rant of all time. Anyway, we got a market measure today. It's a tough one. So you got to get your helmet on for this one.
Okie dokie.
We are going to be covering skew. Gotta love a little skew.
Skew you, Sosnoff.
Yeah, skew you. Skew means sometimes if you look at like the SPY and you go to the at the money and you go, let's say $10 away on each side or $20 away on each side from the at the money, and you look at the strikes and you say, why are the puts like twice as expensive as the calls. And you're like, why is that? That's called skew. That's because the market prices what we call the velocity of risk into option prices. And then you look at some crazy stock, like you might look at PLTR as an example, and you might say in Palantir, why are the calls so much more expensive than the equidistant puts? That's called call skew. Right. So the indexes have put skew, some options have call skew. You'll look at something like a commodity like crude oil, and you'll say, why are the calls so much more expensive than the puts? It's called call skew. And then you'll look at the NASDAQ.
Equal distance away from the stock is the point you're
right.
making.
Then you look at the NASDAQ and you go, why are the puts so much more expensive than the calls? And that's how the marketplace adjusts for what it believes to be the velocity of risk. It's a perception. Mm-hmm. It's not, it's just how the market prices in the speed of movement. Let's go to the next slide. So we know that equity indexes, which is where our focus is going to be today, have one of the most put-skewed option chains on the market due to the nature of the downside velocity of risk. We also know that equity indexes generally have a strong inverse correlation with their implied volatility for the same reason. So what that means is if implied volatility is high, equity indexes go low, right? And if implied volatility is low, like it is now, equity indexes generally go high, right? So they have an inverse correlation. High volatility, low price, low volatility, high price, right? All right.
Yep.
Just so
that's the way it should work.
Just so we're all kind of on the same page. Let's go to the next slide. So next, is there a relationship between an underlying price and its implied volatility correlation with the underlying's direction of skew? Does that make sense to you? Is there a relationship?
Yeah, so they're looking at the underlying price, meaning higher or lower price versus IV correlation with the underlying direction of skew, call versus put. I imagine there has to be. Wouldn't you agree, Saz? I mean, if you have a lower price stock, are they doing like a sub $50 stock versus a $500 stock, that kind of thing?
I think what they're asking here is a little bit different. Is there a relationship between the price of a stock, let's say, and the implied volatility's correlation with the underlying direction of skew? So, so does skew impact price, basically? We're going to take a look.
Okay.
Now, this is a very hard graph for me to read because I can't see the, let me see something if I can blow this up. Hold on one second.
So they're looking at the graph there, Sosnoff, to try to look at I'll read it to you. The price movement for each underline under different movements. So they're looking at UNG as the first one, the Qs as the second one, Tesla the third one, IWM, TLT, Amazon. The big one is gold, and that's a plus. That's a under 1%, over 1% move, gold, USO and SPY. So it looks like gold is the most volatile that I can see here, with probably one of the lower IV ranks too.
And based on, and really based on this, on my trading this year of all these different products, I would argue that this is pretty accurate because of all the different underlyings we traded this year. I feel like gold was the most difficult to fence in.
So it has like the biggest daily 1% type moves. Like you look at Tesla. Tesla has the most 5% moves. That's the red line.
Yeah.
So in gold you have relatively low commodity monthly implied volatility. Forget about IV rank for a moment, but big 1% moves just about every day. Where Tesla, you have high monthly implied volatility, but much larger moves on a daily basis. Pretty interesting kind of look here. And then SPY is all the way at the end.
Yeah, and if you traded gold this year, or if you traded bonds also, because bonds are the same thing, same thing. But gold really more so than anything else. It was really a tough trade because you can handle a few outlier moves, but every single day this thing felt like it was a 1% move at least, with volatility that didn't justify that size move. Let's go to the next slide.
Yep.
So we did a study and we looked at the SPY Qs, IWM, Amazon, Tesla, TLT, USO, UNG, and gold. Everything that was on that last chart. We computed the last 6 months from January 2025 to present, and we looked at the correlation between price changes and how the implied volatility changed. So, for example, if implied volatility goes down, does price go up or down? Correlations, positive or negative, but greater than 0.5, imply a measurable relationship between price and implied volatility. We recorded current price ratio of a 16 delta call and a 16 delta put in the August cycle. A ratio greater than 1.2 implies put skew, like in the SPY. A ratio of less than 0.8 implies call skew, which I'm guessing would be USO, UNG, GLD, and maybe Amazon. Maybe Tesla too, I'm not sure. Tesla probably a little less so. So a ratio of 1.0 implies little to no skew. Okay, so if we're going to look at this thing, we're going to say that just on the basis here, SPYs, Qs, IWM probably all have put skew. I'm going to guess that USO, UNG, and GLD all have call skew. And Amazon, Tesla, and maybe TLT are probably somewhere in the middle, but let's take a look. Let's go to the next slide. So the underlyings with strong negative correlation all show put skew. And so that is the SPYs, Qs, and IWM. You can see it down below, 0.9, 0.87, 0.85. The underlyings with weak negative or positive correlations all showed no significant skew. So that's gold, UNG, and USO, and TLT, just like I said. And then the ones kind of in the middle were Amazon and Tesla, which I guess probably doesn't surprise. Not much of a surprise there, right?
No, not much of a surprise. They are who we thought they were.
Yeah, and that just so all we wanted to do was show you how accurate kind of that whole line of thinking is. That where you think there's call skew, there's call skew. Where you think there's put skew, there's put skew. And where you're a little unsure, there's probably no skew at all, or closer to no skew. Let's go to the next slide. Currently, it is difficult to find an underlying with a strong and positive correlation to its implied volatility. So it is difficult to prove if strong and positive correlations would imply call skew. That's the issue with Amazon and Tesla. However, for underlyings with weak price implied volatility correlations, there's virtually no skew. That was UNG and gold and bonds. Let's go to the last slide. Like I said, this is a little heavy, but it really does a good job of explaining, how skew can be so different in two different underlyings in the same ecosystem, in the same environment. For an underlying with strong and negative correlation to its implied volatility, it seems the inverse relationship would imply put skew for that underlying, S&Ps, QQQ, IWM. However, for an underlying that has a weak correlation with its implied volatility, there is also insignificant option skew. This would imply a symmetrical volatility of risk, which would be something like a Tesla, for example, in this example, like an Amazon.
Very good, my friend. Good job out of you. Good job out of the team. And you know who's going to do a great job? That's right, my friend and yours, Mr. Scott Sheridan, coming in. It's immediately following these short messages from our sponsor, Tasty Live. We'll be back in 90 seconds. Peace.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain seat. I've never been invited to come sit in the new captain seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with this man. Tasty Trade World Headquarters. That's right, Sosnoff. We have one of those guys in the studio today. Do you know what one of those guys are?
I don't think I want to know. I don't want to know, but what's of those guys?
One of those guys who like proposes in the middle of the Chicago Stadium, or one of those guys who puts up happy birthday to his wife at the Cub game.
Did you do that?
Well, I didn't put it up. Cubs put it up. But yes, it was up there.
Oh my God!
Did they check her calendar or something like that? How'd they find that out?
You paid for that.
You are such. You know what? You'll
How'd
do
you not
anything.
pay for that?
I know people. What do you pay for it? I know people.
Oh, nice.
Oh, wait a minute. You got it for free?
You paid for that?
My wife's birthday's August 26th.
they paid for that.
People pay for that?
Yeah, it's like $5,000.
No, it's not.
It's a lot of money.
Yes, it is.
It's a lot of money. They did it. They did it for free. That's nice of them.
Not if you know people.
Oh, don't.
I got a video. I'll show you.
I believe you.
Hey. My wife's birthday's August 26th. I want it up there.
I don't think I can help you with that. There, look at this.
That's good because it might be August 28th. I'm not sure.
That's $5,000.
Oh yeah.
Come on.
It's like something you have to. You have to pay.
Well, I've got other ways to make payment, but I'm good.
Oh, okay.
See, because I know people.
It's good
not to rub salt in a wound, but if we're talking about knowing people,
Ace, he proposed to her there, Patrick.
And he paid $5,000 to get it up on the board. Will you marry me?
Something like that. $2,500, $5,000. Yeah. They don't do it for free.
You ask nicely, they do.
Yeah, because you spend you're spending a fortune marketing there.
I mean,
don't do it for free.
All right. And they brought her a gift. They brought her a nice bag of stuff.
Okay.
Just listen. You asked. Okay, you're picking on me. I didn't pay for that either. Nico Horner signed ball. It's $100. Nice pullover, a nice hat. Nice. They brought it down right to our seats.
Nice.
Heard it's somebody's birthday. I said, right there.
First of all, I got nothing except I was drenched in sweat.
Drenched in sweat.
It was hot. I couldn't breathe there. I was dying.
Were you in long pants?
Yeah.
Oof. Jeans? Hopefully they're ripped. Air conditioned? No.
No. But I was like, it was so hot. I was dying.
Oof. Okay. Well, I will tell you, because this is impressive, because if we're talking about getting things done and knowing people, Katz's, the pop-up?
Yeah.
Tickets. You don't wait in line.
Oh, that's smart.
It's tickets.
Did you get a ticket?
We got 2. Completely oversold. We're going Thursday at 2 o'clock.
Hold it. You got 2 tickets. How'd you get tickets?
I can't reveal my sources. The 6 did it, okay? The 6 knows people.
She's got powers that you just don't understand.
Yeah,
Cosmo.
6 guys. She's like, do you want to go?
How many days are they here for?
I don't know. I think just a couple. Pastrami sandwich.
Yeah.
I think a Dr. Brown's.
All right. You can get Dr. Brown's anywhere.
I know. Pastrami sandwich, Dr. Brown's, a bag of chips. It's set. Like, you just go in and you don't, like, you just get this.
$40.
$45.
$45.
Yeah.
I was going to say, because it's like
$45.
Like $30 in New York.
Yeah, $45. They got to
I mean, not bad. Sadno's paying $90 for a pizza pie wherever he goes, and $50
so
for a
bag of chips, Dr. Brown.
I think it's
Caesar
a bag of
salad.
chips, Dr. Brown's, probably a pickle.
Yeah. They do a good job with pickles.
They do.
Yeah, but so
Here it comes. Go ahead, say it. I wouldn't want to go.
No, I would. I would.
I'll see if I can get one to go. I'll bring it by.
No.
See, I'll pay $45. I couldn't get you the Ginsu. Nice. I tried the Ginsu.
It won't taste as good on the run.
Yeah, they do. Who are you kidding? Nice thick cut pastrami. Beautiful.
I'm trying to make myself not miss it because you didn't even offer to get me one.
Well, I don't know if I get 2. I'll split it.
Yeah, I understand that, but you could say, bet, I'll try to get you one too, even though
Why
you
do you
never
take a
even
2 o'clock
tried.
time?
That's what was given. It was just 2 o'clock. Like, it's completely sold out. Oversubscribed.
So they just sit there and just chop up stuff all day?
Chop up stuff. Pastrami.
Yeah, I know, but that's what I'm saying. They don't make it.
Oh my God, you're not going to ask for yours chopped, are you?
No.
You're going to take it the way they give it to you, right?
I know, but
I take it the way it comes.
It's already pre-made. It's already pre-made. They hand it to you?
I don't know. Like, you go in, you sit. I don't know what it is. I'll report back.
Where is it at?
Bub City.
Oh, Bub City. Where is that?
oh, Bub City. Like he's been there a million times. Where's that?
Bub City's the one just south of North Avenue by, like, west of Halstead. You know, it's back in. It turned in.
That's where it used to be. It's
right.
gone.
Is that? I think that's. Oh,
no, that's not. That hasn't been there for 25 years.
Then I don't know where it is.
It's in like
Where?
Off Michigan Avenue somewhere.
No.
I'm
There
telling you.
used to be a Bub City that closed.
Yeah, I know. It was open for like 10 years. It shut down.
No, but there was another one off of like Grand or
It's
something. Okay, I don't know. Whatever.
It's nowhere over there.
Six will tell me where to go.
It's somewhere near Huron and State Street or something.
I don't know. The Six will tell me. She doesn't miss. She'll know.
All right. Well, it's kind of a waste on you two guys. Like, I mean nothing.
This totally sounds like someone's disappointed they didn't get a ticket.
No,
you didn't try.
I didn't try, but I think I maybe should be gifted one.
If I can get an extra, I will gift it.
That's all right.
Half to you and half to Tony. See, Tony, I'm doing well.
We don't want it. We're gonna go get our own in New York.
When are you going?
We're going to New York together.
Chances of you going to New York together and going to Katz's is less than 0.
It's 100%. We're going.
To Katz's?
We're going.
Yeah, we're going.
The last 2 times I've been in New York, the lines for Katz's
were stupid.
Around the block.
We're sending Brittany.
No.
We got a line saver.
No.
That's offensive to her. She can't. Yeah. She doesn't eat that.
Yeah, she's forget it.
She'd be like,
we're going. We just got to be early.
What time's early?
Well, we could eat breakfast. We could eat
lunch at like 8:30 or 9.
11. We're 10:30, 11.
No, well, maybe in New York you get away with 10:30 or 11. But I'm telling you, it's crazy. And Lila's moving right down there. She's moving like 2 blocks from there. So I'll tell you, see what we can do. Maybe we get it in.
No, my dad lived like
right there.
Well, when he went to college, he said I lived right off Houston Street, and I lived like here. You know what he told me he paid? What do you think my dad paid?
50 cents for
rent.
Oh, for rent? I thought a sandwich.
Your dad, I didn't have the pleasure of meeting him, but I've heard the story.
Your dad for rent there, I'm going to say back then.
He told me.
Let's see, this would have been in the mid-40s.
No.
For college?
No.
Yeah.
Yeah.
Mid-40s.
Yeah.
You said college.
Yeah.
Mid-40s?
Yeah, right after the war.
$100 a month.
Oh no, way less.
How much?
I think he told me 25.
$25 a month. It's more than $25 now.
Yeah, 20. But it was a really bad neighborhood then. Really bad.
Really bad. Well, it was a bad neighborhood. Like, the Bowery.
$25 a month.
Right, it was the Bowery. So my dad's grandfather had a barbershop down there, right in that area.
So my dad lived there, right? It was a bad area. And he told me, he goes, my first job out of law school, I made, he said he made either $87 or $97 a week.
A week.
That's big money. My dad used to drop off bodies in that neighborhood.
And said with a straight face.
He said, I think he said my rent was $25 a month in Houston Street, but he goes, we took our lives in our hands every day. Because that was the worst.
Where did he go to law school?
He went to Yale.
Oh, so after law school he lived
there.
Okay, so it was late. So it was early 50s. Yeah, the Bowery. I mean, that was all the...
Bowery.
Yeah, for sure.
Yeah.
Yeah. Rent in the Bowery neighborhood of New York City was at less than $30 to around $50. So you're right on spot.
That's what he said, $25. But he said it was bad. And if he said it was bad, because they didn't grow up wealthy, that's for sure. And so he said it was bad. I'm sure it was bad.
New York's always had different energy. It really does. I mean, for me, love it for like 2 or 3 days, but I just living there, it is.
It's a lot of work to live there.
It's hard.
It's hard.
It's hard.
You're always on.
I mean, I've never lived there, but I have 2 kids that live there, and I'm there a lot. It's just hard.
You have to always be on.
You always have to be on. Moving around that city is hard. Just everything.
Just tell Lila to get in line the day me and Tony get there.
Right.
Just tell her to get in line for us.
If she doesn't have a job, she might be willing to do it. When are you going?
I think we're going in September.
All right. Let me see what I can
do.
It
was just on the screen.
Put it back up on the screen, John, for a quick second.
I'll ask Lila. My guess is she's not, well.
Tell her to book her calendar right now. Tell her
by September 19th. Nice.
Yeah. Just tell her to, this will be right after the show.
Where's Webster Hall?
It's right there. It's like on It's the old Ritz. It's on like 8th Street or something. I forgot exactly. It's on like 6th Avenue and 8th Street. It's perfect. It's right around the corner.
6th Avenue, 8th Street.
It's 125 East 11th Street.
All right, close enough.
That's not bad.
It opened in 1886.
Yeah. So
do you do the combo? Russ and daughter? No, not that combo. Russ and daughter's Cats.
It's between 3rd and 4th Avenue.
Yeah, we're close. It's right down the street.
It's not far. That's right by Cooper. That's that's 3 blocks from Cooper.
Right around the corner. Exactly. So here's what I suggest.
Yeah, let's do it.
She'll be over by 11 at work by 11.
Yeah.
Just tell her to be online at 11. Tony and I will meet her there,
and then she can leave.
And we'll comp her.
Oh, you'll buy her lunch?
Whatever she wants, of course.
I'll tell her. She might go for
100%.
No, you don't buy the combo. The whole key to me to Cats is you need a second person because you have to share the potato pancakes because they're really good, but it's too much. So you got to share the potato pancakes, and
that's why you're bringing Tony.
That's why I'm bringing Tony.
Tony, yeah, that's right.
And
I get a half piece of potato cake.
and you have to get the 1,000-ounce dressing on the pastrami.
Also known as a latke, by the way.
Wait, thank you, Tony. Not the mustard.
Mustard too. You got to do both. Half top 1,000, bottom mustard.
No,
what do you think? Over under on Bub City having Thousand Island?
Oh,
0.
I don't know. I think they probably will have theirs because theirs is special. It's really dark and it's got tons of like relish in it. It's very different. It's really good.
I'll report back.
Tony and I will be there. That unless we go the night before.
Day.
Unless we go the night before.
That's a power move. Hard to go to bed though after you.
I did it one other time.
It's hard to go to bed after you.
I was sick the whole night.
For sure.
I was lying in my bed.
It's hard.
I was lying in my bed, feeling like I was just sick as a dog.
Like, why did I just do that to myself? I get it.
I'd much rather do it and then get on a plane.
Oh, you're going Thursday and coming back Friday?
Yeah.
Why don't you spend the weekend in New York?
With Tony?
Hey, we did it one time. We had a lot of fun.
What are we going to do? We have had fun. What are we going to do in New York together?
Okay, your missus would go for sure. Your missus, I think, would go.
We got business. We're doing business.
It's the weekend.
To where? New York?
If you're coming back on Friday afternoon, just stay for the weekend. Go dinner, show, do, the stuff. U.S. Open.
Yeah, Sosnoff doesn't know how to behave around my wife.
Wait a minute.
You know what I mean?
This is the U.S. Open. Because the U.S. it might be over by then. U.S. Open might be over by
I watched a little Wimbledon this weekend.
Okay, let me ask you about Wimbledon. Because here's my thought with you with Wimbledon. Well, this is what I'm going to say.
I'm really glad I got to go to Wimbledon once in my life.
I've never been. I'd like to go.
I sat center court for the finals.
You got the queen seats. I know.
Got the queen seats.
I know. We've heard
$1,500 in 1987.
They're more than that's the equivalent of your dad's rent
now they're like $100,000.
I was gonna say that's the equivalent of your dad's rent being $25. Yeah. Okay, so here's what's amazing to me. There's a new guard, obviously, on the men's side, but what's amazing is if you're not in the top, I'm gonna say generous 10, but realistically 5, 6 in men, you cannot win. You just cannot win. And on the women's side, Goff and I think Keys both went out. I think they were both top 5. They were definitely top 10. Both went out in the first round. And you have unseeded women, which I love. I love watching.
Well, the number 1 seed's still around, isn't she?
Yeah, Sabalenka. She's still around. She's good. I mean, she's really good. Okay, no, but I'm saying.
Enough. Well, let's get back to New York because Scott's not going to be there. We can talk about it. We got to go to Woo Hop for dinner, and then Katz's for lunch the next day, and then I carry your leg and you to the plane.
Wait, what's Woo Hop?
Oh, he says Chinese restaurant. It's like kind of a touristy trap.
Is it in Brooklyn?
No, it's on 19 Mott Street.
Okay, you want to go? You want to go to Little
No,
Italy?
we'll go there. Yeah. I love it. I actually really like it.
It brings back a lot of memories. Don't try to belittle it and say it like a tourist trap.
My grandfather used to take me there.
Okay, so it brings back a lot of memories.
Where's it?
Used to
on
bring
19 Mott Street or 17 Mott Street. Downstairs, it's all silver and it's been there for 100 years.
Well, if your grandfather took you there, it's been there for 100 years.
Yeah.
Spicy?
No, it's Cantonese.
Cantonese.
Me, Don Kaufman. I used to take Beth there all the time.
All right, Alice Beth. Have you been there, Tony?
Many times. My dad used to take me there.
Drop bodies there too? Or that's where he went to eat after he dropped the bodies off?
No. You never poop where you eat. You got to drop the body somewhere else.
You never poop where you eat. He's right. That's a very important thing.
Got it.
Leave the gun, take the cannolis.
1938, not quite 100 years, but soon.
Leave the gun, take the cannolis.
Leave the gun, take the cannolis.
That's right.
That's where you leave the bodies. It's got to be one of the greatest lines ever. Ever. Leave the gun, take the cannolis.
Beth says you've never taken her to get a sandwich.
Yeah.
No, never taken Beth to get a sandwich. I've taken her to Woo Hop.
She's
spell last name?
It's
she says no.
Yes, I have.
Woo Hop, H-O-P?
She said she's never been there.
I'm with Beth.
It was me, her, Don Kaufman. We've been there a couple times.
She said no, never, in big letters. No, never, in big letters.
Okay, well, I will get.
She said you went to the bougie place with Don Kaufman and you.
No, I've been there multiple times. I think with her, probably with her
Beth,
at least.
Beth, you're just like Pam Bondi. You're a liar.
Oh, Pam Bondi, yes. Beth just doesn't.
Beth is a liar. Beth is a liar.
She doesn't remember. Pam. It's okay.
I'm going with Beth. I'm going with Beth on this one.
Oh my God.
Mama Bear does not forget. No, and she's good with food. I believe you went to a Chinese restaurant, but she's right. The bougie one.
No.
All right. Should we do some business? John.
Oh, she said that you only took her to the fancy place, Buddha Lounge or whatever it was called. What was the place that we went to? Remember, it was my birthday, and they came down with I think it was my birthday, around my birthday, and they gave the menu to JJ, and I told the waitress, I said, that's
Budokan.
Budokan. All right, I said Buddha Lounge. Whatever. I made a mistake. All right, I'm
Buddha Lounge.
Going to be 63 years old.
Buddha Lounge. I love Buddha Lounge. It was in Vegas. Buddha Lounge was
at Palms.
No, we were in New York City when it.
I know. I'm just telling you. Buddha Lounge was.
That's when Beth went.
Buddha Lounge was the feng shui place at the Palms in Vegas.
Yeah,
it was great.
Yeah,
first open.
On the first floor.
I tell the waitress, I said, when you hand this guy next to me his menu, say, "Oh my God, didn't I just see you on CNBC?" And JJ bit it like it was like a catching a big mouth bass. He's like, "Oh yeah, did you catch mine? I was very good on there. Yeah, thank you."
Frankie.
Oh my God, can I have your order?
Frankie was there. Great. Ask Frankie. He was there. He was
a Buddha Lounge. That definitely was a Buddha Lounge.
Oh,
definitely.
Hey, Frankie. Frankie just wrote me and said, "Hey, it was my birthday, you schmuck."
Yeah, it was his birthday. I knew it was his birthday.
I knew it was somebody's birthday.
When Budokan first opened, the New York Times reviewed it, and they said it's the only restaurant in New York where you can get pregnant waiting for a drink. I'll never forget that review. It was great. Loved that place.
All right. Should we do some business?
Sure.
All right. Top 20 symbols going through the system. First 40 minutes today. No broad-based indices or futures. Tom, for you, number 20. Google with an L at a 40. For everybody else, Tesla at 26. Apple at 26. NVIDIA at a 70. Amazon at a 32. PLTR to 37, Circle at a 7, AMD at a 21, TLT at a 13, TSLL at a 27, SoFi at a 33, Hood at a 44, Uber at a 34, GLD at a 21, iBit at a 2, HIMS at a 49, Meta at a 30, MSTR at an 11, UNH at a 60, Coin at a 30, and number 20 for Tom, Google with an L at a 40. Going back to Tesla, I saw something quickly. I haven't had time to read news this morning. So stock's under pressure now because Musk's going to spend time building the third party.
Yes.
And is he going to be running, or is he just going to be bringing in the people to run the third party? Is he going to be a politician?
I don't know. He hasn't told me yet.
He hasn't. I don't know yet. We don't know.
He's going to throw his hat in the ring and.
But the good news is the Strangle we sold in Tesla this morning's already come in 70 cents. I almost should take it off. It's only been an hour.
70 cents an hour.
Not bad.
Good money. If you have more than
gig, if you can get it. Tesla down 22, hasn't moved, but you made the Spoos move, Mr. Sheridan. Spoos hadn't had more than a $4 range. They're now down 33 on their lows. That's about a $10 move. Good job out of you.
Okay, wait a minute. I need to ask you a question because we were talking about this on Thursday. How was Vinny's July 4th away from Mom Bear and Papa Bear?
He went to the lake, and his first text message to me was,
I'm never coming home.
He loves the lake life. He loves the lake life. That's all it said. Love lake life. That's all he wrote.
Was it Lake Michigan?
And I said,
was it Lake Michigan or some other lake?
No, it was up north, not real far, but up north, a much smaller lake. But I said, lucky for you, son, we have a very close friend who has a lake life experience for you all summer long next year.
Hey, if that kid, with his gardening skills, he could be, with his gardening skills, I could put that kid to work.
Right, you need a little bit of a gardener, don't you?
Exactly, that's what I'm saying.
The property?
With his landscaping skills, that kid's got a full-time job.
And get him a soft serve machine for the evenings. He can make ice cream sundaes.
Oh, yeah. That kid's in.
There you go.
I love it. See? Going to be good. All right, Mr. Sheridan, I'm going to have to let you go. You did your job today. Sadloff, I'm not so sure about you. You were kind of lackluster. But we're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
Liz and Jenny.
That's right. Almost 15 years. Liz and Jenny next. Peace. Unbelievable.
If you missed the live show, here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, oh, we gotta have this guy. And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! You were on Eliminate! Oh my God!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
You get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's... That woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned around to the guy she eventually picked, and she said, so where are we going on our date then? He said, oh, I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV.
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just going to get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free diet.
Have you managed to warm up your spotted dick?
It kind of tastes like, you know, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated.
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custards and beans.
Control knocked me off my pivot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a dessert. It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin. And we pour the custard on top.
You pour custard on top of a muffin. That's dessert.
Okay, American, you uncultured American.
Okay, Dylan, explain to them.
I think that the good Dr. Sheridan accurately describes any item that has custard upon it as being in the dessert category, whether you're a sophisticated Milanese gentleman such as myself.
I can't be friends with Dylan Radigan if I eat SpaghettiOs out of a can because the Italians...
I mean, but you can't, because remember, I'm from Saranac Lake. My relationship as a young man with the canned beans was to go out to the ice fishing shack. Because the canned bean is a very staple food for the ice fishermen.
So you grew up in the ice fishing community?
It's a card-carrying member.
Please tell me what the pleasurable portion of ice fishing is.
I haven't done it since, probably I was 16 years old, but our primary pleasure was smoking pot, because you could get into the ice fishing shack.
There we go. Do you actually care if you catch a fish?
No.
Okay, perfect.
With your buddies, you're like, Sosnoff, grab the drill, and then it's like man work, and you got to drill the hole.
Tony is going to counter that and say it's all about catching the fish, for sure.
No. I don't think he's an ice fisher guy. I don't see him sitting around the hole in the ice fishing just hoping a fish pops in.
There's not enough marijuana in the world or Coors Light to get Tony to go ice fishing.
Get the full scoop by checking out the archives at tastylive.com.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. Oh. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? Oh. First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
And get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
My name is Tom Preston, and I am the Chief Market Strategist here at Tasty Live. So every day I write the cherry bomb that goes out to our Tasty Live customers. And usually it talks about some potential trade idea that people might want to consider with a little bit of context about why a person might be interested in doing it. But the main reason that I push these things out is to get people to think in terms of volatility, liquidity, and probability in their financial decisions. What I want people to learn is an effective way to approach the financial markets and to use options to their fullest advantage.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Hello, everybody, and welcome to the Monday edition of the LD and TP show. Take one of take two this week, TP, because I've got you. You're gonna bookend it.
You only have to do it once. It's TP and the LD. TP and the LD. It just sounds more like a 70s, cop show. TP and the LD.
It does sound like a cop show. I like it.
On the mean streets of San Francisco, TP and the LD.
All right, TP, thank you for joining me. For those of you who do not know, this is the amazing, the wonderful Tom Preston, who is, in fact, the brains of the operation. And I've got him on Monday and Friday this week. So if we don't get to any questions that you have today, please understand that there will be a second opportunity this week to talk to TP. So if you have any questions, comments, concerns, trade ideas, put the hashtag LIZJNY on Twitter. If not, Frank the Great from YouTube, Frank Walsh, hello, we'll pop it up on YouTube for you too.
Liz, that is too generous of you. Thank you very much. And I always love doing the show with you. I did the show a couple of times with Jenny over the past couple of weeks. A lot of fun with Jenny, and love doing the show with you guys.
I know. We're so happy to have you. Okay, TP, only because we've talked about this before. You are legitimately in the heart of Texas right now. And so TP, you are in the Austin area. So I want to I was very concerned about TP this morning, given everything that's happening. So TP was giving me a rundown. You're about 70 miles, you said, away, even though it looks like it's going to be closer.
So I'm west of Austin. It's not that far from Austin. But the place where they had the floods down in Kerrville and Hunt are about 70 miles as the crow flies. So it takes a couple hours for me to get down there because we've been down there a couple of times, doing some stuff. But it's not close. But yeah, I got the warnings for the flooding because I get the same, NOAA or National Weather Service alerts from that same station. You know, they'd broadcast it for the whole, San Antonio, Austin, all that stuff.
Yeah. And you were saying before, so your daughter has been down to these camps as a counselor, not as a camper, but
Yeah.
she was a horse wrangler.
Yeah. So some of the camp, this one camp in particular, focuses on horse riding or includes a lot of horse riding. And my daughter knows how to handle horses. So she got a job 4 or 5 years ago for a couple of summers where she was a horse wrangler. So she'd get the horses ready and saddled up and fed and taken care of, yada, yada, yada. And she has pictures of her cooling the horses off in the Guadalupe River.
That's insane.
It's
So
right
close.
on the river. Now, that camp, as I understand, was not flooded.
Okay.
And what's really wacky is that because it was the 4th of July, that's kind of a transition point for a lot of the camps. So they'll have an early summer and a later summer. Some of them don't have a lot of kids there over the 4th of July. And unfortunately, a
thank the
few of them
Lord.
did.
Yeah. Oh.
So, no, it's tragic. It's awful. My wife and I were glued to the phones yesterday, watching the news yesterday. And, no, it's awful. It's
Well,
awful.
like I said, I'm just glad. I mean, don't get me wrong. It's awful that's happened down there, but I'm glad you and your family are safe too, because
Thank you,
like I said,
Liz.
I mean, I'm geographically challenged, but you're in the Austin adjacent area, right? So that is also happening right around there. I didn't know. So when I didn't hear from you, I was very concerned.
In fairness, I mean, of course, I lived in Chicago for 20 years, so I know where you live, Liz. But if I would say if something happened in Chicago, oh my gosh, is Liz okay?
Yeah,
Right.
I see what you're saying. Yes.
It's it's so relatively speaking, we're close to it. We are not on a river. We can have floods, I guess, but just not today or not this
Did you
weekend.
get a lot of water? Was there a lot of?
We got a lot of rain. I don't
a
know
lot
how many inches, so our water tank is full. I mean, my wife and I were out on, on Thursday or Wednesday afternoon, and it was pouring rain where we were. We were in Austin, pouring rain. And then on Saturday, it was rainy too, but we didn't know what was going on necessarily till we got home. And then Saturday night, we saw all these, messages and news alerts and all that stuff about what was happening. No, it was awful. It's just awful.
I know it's crazy. Well, like I said, our thoughts and prayers go out to everybody that's going through this. It's completely out of control. And not that we're going to transition, but we are going to transition to the markets right now, TP, because so here's our agenda. I love that you and I have a little bit of a plan when we come in, and then the plans go off the rails, the crazy train 9 times out of 10. But, who is it? It's Mike Tyson that says everybody's got a plan until you get punched in the face, right?
That's right. That's exactly right.
Everybody's got a plan so you get punched in the face. So our plan is to kind of talk about what the best beginner strategy is. And I don't know, TP, did we alert Dr. Jim of this? Because he brought that on today as well.
Okay.
So I think he's got our phones tapped because he came on. He might.
So one of the things, and I don't know what Jim talked about. So this is my take, and I'd like to get your take. But having done this for a while, and I will include you in this group too. I'm not saying you're old or anything, Liz.
We're old. We're old. I shout it from the rafters all the time.
We've done this for a while. And I talk to a lot of people about trade. So, Tom, what do you do for? Well, I trade options. Oh, really? Oh, like day trading? And well, no, not quite. Right. So, well, how do you do it? So, my thoughts on what the best beginner. I'm not talking about beginner. I'm talking beginner like, well, I've been doing a little trading. No, I'm talking about somebody who just funded an account, is just kind of getting started, knows some of the terminology, knows maybe what a mutual fund is. Yeah. How do I get started? And rather than talk about strategy, and then you can disagree with me on this, Liz, I talk about the what and it's not the right terminology. I talk about what the trade can do Okay.
Oh, there you
so
go.
the way I think about it is say, well, Liz, okay, would you think about making, let's say, $30 in the next 40 days?
Yeah,
Okay.
sure. Love to.
To make $40 in the next $30 in the next 40 days. And the risk in doing that, if you're going to do that, is $60. Liz, world falls apart. You lose $60. Okay? You don't lose your house.
And you go,
don't
do you
lose
accept
the
these
farm.
terms? Yes.
You lose
terms.
$60.
Yeah.
And while you wait, Liz, you earn about $1 a day just sitting on that trade, just sitting on that position.
That's a good way to break it down for people. So I will tell you, TP, I am very, very, very bad at teaching because I think that I'm better if somebody has a slight understanding, a basic It's just a little bit easier for me if you kind of understand like the ABCs. Before you get to us, because you can go down a rabbit hole. So I think coming from that perspective of being like, oh, what it can do, not what it is, makes sense.
Yes. And so our listeners obviously probably know I'm talking about just a simple vertical, right?
Yes.
But I don't use the word vertical. I don't talk about expiration. I don't talk about strike prices, right? Because, well, what's a strike price? Okay, then you go into the rabbit hole and then it just gets confusing. Right.
Well, then as soon as you start using that terminology, I can see it right now with my son. He just glazes off because he's not doing it. He's done once you say one word that he doesn't understand.
Your son wants to hear about the money.
Yes. Well, TP,
Okay.
like I said, I'm the world's worst teacher, but I've got I've got him trading in his account every day at 9 o'clock, which we've been doing these things, and he can't use SPX because he's got under $25,000. So I've got him in the S&P futures options, but he doesn't even know what he's doing. He knows he's supposed to sell the straddle, count strikes, go count 1, 2, 3, 4, buy, and then on the downside, go count 1, 2, 3, 4, buy. So he's doing an iron fly every day. No idea really what it is. Right. And then I was like, and then you immediately put in a GTC.
But that's okay. Because what he's doing it, looking at the numbers, and hopefully he's booking some profits.
He's so far so good. I mean, what day was it? Thursday. Was it Thursday or Wednesday? No, we weren't on air on Thursday. Wednesday, not so much, but.
Well, and the reason I talk about verticals, Liz, rather than, let's say, covered call, short puts, whatever. In other words, rather than, let's say, simple trades, is those are very capital intensive. Mm-hmm. And I cannot define how much you can lose. And it's a hard time. The risk reward is really unappealing for some of this stuff.
It is.
And so and Liz, when we look at, if we go, you don't have to go into Twitter now, but look at the people that you go into on Twitter. The Polish Warrior, Mike.
Yeah.
Who's the other guy? Jack Tucker? Is it Jack?
Jack Tucker? He's who I want to be when I grow up.
What's he doing? What are they doing? Verticals.
All verticals.
Okay.
They're
doing
both sides
verticals
instead of one.
What do I do most of the time? Verticals. And of course I do other strategies. Yeah. I get it. LTP, you're doing this and that. I get it. But the point is, verticals, I think, are the foundational strategy, even more so than individual options.
Okay, so let's jump. John, can we jump into the platform real quick? We're gonna talk through a couple things, just because I like to show things as we're talking about it.
Yes.
So if we jump into the platform, and you can see, I'll see when we're in there. So if the platform's up, we can see that vertical spreads. And what TP is saying is he's not talking about these expiration cycles. He's just having them do a simple vertical, meaning a bullish or a bearish trade, right? Now, do you tell them where? If you're brand new, do you care what product it is, or are you like go to and you give them a product?
Well, yeah, XSP. Let's just give it a try. So let's say they have XSP.
The only reason I'm asking this is because I want that pattern day trading rule to go away, because XSP falls under it. And 9 times out of 10, the people can't. So, if you're going to do the 0 DTEs, that's why you almost have to go farther out in time and let it go, because then the pattern day trading rule won't fall into it if you're going to go with, I guess guess it wouldn't with XSP. We can just stick with XSP. As long as you're going with like a 45-day option or a 39-day option, whenever your GTC hits, it'll be fine because you can close it in that amount of time.
So and you can do this on any strike, right? And if you want to book a quick winner, sure, let's look at the 0 DTEs. I mean, really, let's just say if we go into XSP and the 0 DTEs, and I say, Liz, how'd you like to make, let's see, it's 623. How'd you like, sell the 622 put and buy the 620 put, just for the heck of it.
You can make $20.
So look at that trade. So I can make $20, world falls apart, and I lose 180. All right, a little bit steeper than what I was talking about.
Well, because it's
holy smokes, Liz.
Yeah. Okay.
$20. Go ahead.
I'm only going to layer on top because I listened to Dr. Jim today, and he does the exact opposite of what I would do. So, and I think you and I, because we do have this knowledge in our head, like I'd rather have that room. I'd rather $20 that way than, the wrapped around the at the money debit spread. But TP was like, always teach people from the long side because they'll understand it more. So being like, hey, if XSP is trading, 624, do you think that if it stays right here or pops up a tiny bit, say it trades to 625, you could make $60?
Well, sure, right? Yeah, well, you'd make $30. You make $34.
You make $30.
So, yeah, it's sure. Yes.
He was just saying it's easier for people to understand the long side than it is the short. He's like, ultimately, you want to get to the short side. And so that's what I'm saying. I was teaching my son all wrong because I was like, you're starting with naked puts. And him, he's an educator by nature. And he's like, never start that way. And I was like, exactly. I've done everything wrong so far from step one.
I mean, you can start either way, I guess. I mean, I prefer short out of the money verticals because they don't have to do anything.
Yeah, I would go really aggressive and say, not aggressive, but if you're doing 0 DTE, go with the 623, 621. You can make $37 and risk 165
in a day.
Yes.
Okay. And the return on that is $37 divided by 165, which is about what? 18%, 19%, 19% a day. What? And this is, so I talk about the money side of it. And does the money side of it make sense to you? Then I'll show you what it is.
And you show them how to do it, right?
Because if I say, well, Liz, I'm going to tell you about verticals. I'm going to talk about us selling out of the money verticals that have high probabilities. Oh my God, what are you talking about? Okay. And rightfully so. But the more I trade and the more I talk to people and the more I, watch what people do, the more advanced you get, they use verticals. And then you start layering verticals and all that stuff. And that's a different issue. That's
when it gets super fun. That's my favorite thing to do. I love looking at things like the Polish Warrior is amazing at that. He's just layering them on top of each other and on top of each other. And it's so much fun.
But see, if you start with verticals, Liz, you can get to that stage more quickly.
I agree. How long do you think, let me ask you this. How long do you think from somebody who's never seen an option just open and funded an account? And I think it's a little bit longer than this to kind of understand what you're doing. How long do you think it takes someone to kind of learn how to trade options?
Oh, I don't know. It depends. It depends on if you are very engaged and if you want to learn about it, a month.
Yeah, I think if you're very engaged, a month.
If you want to learn about this stuff, a month, because it gets you through an expiration cycle, approximately. Yeah. You can put a couple trades on and you're kind of doing it. It doesn't take years. If it's taking you months and months, taking you years, you're either using the wrong platform, you're watching the wrong shows, right? You're not watching Liz and Jenny. It's because it really isn't that hard. But what I'm saying is that people want to hear about the money more than the trade. In other words, don't explain. I don't care what you call it. It's what is spread, I don't know. You take your expirations and whatever. I don't care. But
So
tell
I
me how
do
much
think-
money I can make.
I think the biggest game changer since my trading career. Now, don't get me wrong. Like since I've been a retail trader, how about that? Not since on the trading floor, because there's been lots of other things that have changed my life in trading. But since I've been a retail trader, I think the biggest, helpful learning tool is the zero DTEs, because you can jam pack 45 days of a cycle in what happens into one day, where you can watch it. To your point, you need at least a month because you used to have to get through at least one expiration cycle to see exactly what happens. And I think losing money and watching it intraday, you're going to lose, and then you're going to be up, and then you're going to be down. I think that's the biggest differentiator for me is when you teach someone, they can really learn by rapid fire. It's like drinking from a fire hose with the zero DTEs.
So when Tom Sosnoff and I originally sort of brainstormed for the zero DTE options,
And by the way, you are the creator of the zero DTEs. We're looking at the Godfather, basically.
We don't get credit for it. Oh no, the exchanges came up with that. That is BS. Okay. Right. They were stuck in, 30-day cycles, yada, yada, yada. And they didn't have any. But we're looking at stuff and looking at what our customers were doing and putting a trade on, taking it off in the day after they captured a little bit of time decay. And the more we thought about it is, why don't we just have expirations every single day? Right?
Yeah.
Why not? Because I knew option pricing theory and I had traded for years by that point. And so we were talking about it and says, well, why can't you? Right? And
the terminology on the trading floor that stopped it at the time when you guys were trying to do it was bandwidth, which I still don't understand. But they said you couldn't have all those expiration cycles because of the bandwidth, right?
Yes. Yes, that's fair enough, because if you're talking about something like the SPX, which is where a lot of this is done, they have hundreds of strikes per expiration, and so the IT people will understand this way better than I would. But every strike has a strike code, has a bid-ask price, is this little stream of data. In the money, out of the money, calls and puts, right, at every strike, and then hundreds of strikes, and then for dozens of expirations. That really, when I left the floor and started to get into the technology side of trading, the discussion was how quickly bandwidth was growing. And this was like in 1998, 97, 98, right? Gosh, that is a long time ago. 97, 98, talking about the growth in internet speed. Yeah. And those are the two things that sort of grew up in parallel. The bandwidth that you can get looking, online, right? In other words, the delivery speed over the pipes from the exchange to the platforms, and the trading strategies. Those two things, and the trading technology, those two things went hand in hand. And that's what we saw over the past 30 years, So you're absolutely right, Liz. What would slow you guys down, because I was gone by that point, but what you were still there for was bandwidth. You just couldn't, the pipes weren't big enough to handle it.
I mean, when we're talking about this is how old we were. The pipes couldn't even handle more than 4 expiration cycles. And even then, the price gapped up or down a lot. It would take a while before those strikes would fill in. Now it's instantaneous almost.
Well, and that was the day of, nickel wide bid-ask spreads.
Yeah.
Right.
Yeah.
And, trading, they were trading in nickels. They were trading in sixteenths. They weren't trading in pennies.
16th, which is crazy. Yeah.
16th,
okay.
Yeah.
TP, we've got a lot of people coming in on Twitter. So I do like this. I think that you are spot on accurate. I think vertical spreads, and I like the way that you're defining it, going backwards instead of being like, we're going to put on a vertical and we're going to do this. You say what you can make in the time frame and say, would you like to do this? Put it on, see how it goes.
Yes.
I like it. And we will put some of those on. I just want to say real quick, we don't have any management too much in this account, except for our MCL trade, but that's only at 34%. I'm just going to put a GTC in for 50. And then we do have a lot of tweets that are coming in, TP. So I'm going to give you what I would like to do today, and then you can kind of adjust from there. I know that you know that I know that you are my bond expert. So what TP are you doing in the bonds with it back in the 13 handle?
Look at him down 27. I would sell strangles in ZB. I would look at the volatility between ZB and ZN, but I don't think the long end of the treasury curve is really going anywhere. Just for reference.
So you wouldn't, given it's down here, you wouldn't go just put spread, you'd sell strangles? Because I looked at this and I said, all right. I mean, even though it's got a 13 IVR, this is what I was thinking. I was like, okay, if I can get near, kind of talking backwards from it, if I can get, kind of out of the way of this area, I'm comfortable selling a put spread.
Sure. So let me.
But I love what you do, because you have a very keen eye for the comparison between ZB and ZN.
So let's just stick with ZB for the sake of argument.
Okay.
So what's, just for context, the Japanese yields went up a lot because of some budgetary thing or whatever, some election thing going on in Japan. So the Japanese yields spiked up. Bond yields in the U.S. have spiked up. That's pushed bond prices down. Okay. So what's happening is there's some concern about the tariffs, yada, yada. That's the why. Okay. Is it overdone? I think so. Now, I would just go in and say, I don't think bonds are going anywhere. I think they're going to stay in a range.
And that's why, I know we're kind of breaking the rules because ZB has a 13 rank, which means that volatility is low for itself. But you're the one who taught me when volatility is low for itself, that means it's not priced to move. Right?
Yeah. So go in and look at I would pick let's say the 112 strike. Okay. It's got a 37 delta. I mean, it has about a 63% chance of expiring worthless. And just do a 1 point spread, Liz, because this is a big product. Okay. So
this is a pretty good risk. This is pretty good. You've got a third of the width of the strikes right there.
Yes. And look at the theta I'm making on that. I'm making $1.45 a day on that trade. Okay. Yeah. And we don't have the P50 yet for futures options. That's hopefully coming at some point. But the point is, these bond futures are big products. Okay. They are, they're 1,000 points wide. Right. Yes. 111 to 112 is $1,000.
Which is basically the equivalent of a $10 wide in SPY. So that's why you kind of got. I look down here, and I know you're very versed in all that stuff, but I like to look at what my max profit is, and I don't look at my buying power effect for futures options. I look at my max loss.
Right. And so if you have 328 and 671, that gives you roughly 999. Okay. So the buying power effect, that's because it's a span margin. But like Liz says, if you're just starting out, look at the max loss. If you're right, Liz, if you're correct, you will make about 50% return on your money in 45 days.
Which is pretty darn good. And I still think, I know this is, and I understand the rules. I'm well aware of the rules, but the fact when there's a low IVR, you're supposed to be wrapping it around the at the
Hey guys, we lost your audio. We need to go to break. They're not going to hear you, John. Okay.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Traders, start your platform.
Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Craig in New York City, what's up?
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody, and welcome back. This is what I love about doing a live show, because my co-host, Tom Preston, is not afraid of anything. He looks fear in the eye. It's a live show. Things happen all the time. TP and I were just trading and talking like we were the only two people in the room.
I think because my language started to get a little colorful, they shut us off. They were afraid of what you and I might end up talking. You know, it's like, oh my gosh, there goes TP and the LD, like that old 70s cop show, talking like old cops back did. What cops, the way they talk back in those days. Like have that. They shut us off. Okay.
Yeah, John had his finger on the trigger, being like, "Not today, LD and TP."
he's like the angry lieutenant, you know. We're kind of like the rogue street cops out there fighting crime, and he's like, "Oh, guys, what did you do?" That sort of thing.
Now, it is true, TP, because like I said, you and I can go on the rails of the crazy train. Jenny, I feel like, kind of keeps us in line a little bit. She keeps me in line.
Jenny's tough. Jenny
is trying to keep in line. Okay, but TP and I are going to give a very quick recap. We don't know what you heard or what you didn't hear. But if you want to jump in the platform, TP and I both just sold the 112, 111 put spread in ZB in the August 22nd. Jesus, that means it falls here. With 46 days till expiration. I do have one question for you, TP, and this is, I really don't, and I love asking you this. I love having your knowledge because I feel like I can ask you anything. You'll either say you don't know or we know it. I know I just put the GTC order in for this, which I love. What hours do the bond options trade? Because I know when I was trading natural gas, I could do it whenever. My natural gas options.
Is it, I want to say they open up at 7:20.
Okay.
I don't know. I'd have to look at those specifically because I know they trade overnight and stuff.
So,
and
I know the ZB does, but I didn't know when the options, like, could the GTC order get hit? And this is I'll tell you where my question came from. I was listening to Tom and Tony this morning, and Tony was heckling Tom about trading at 250 in the morning, and he's like, that was a resting order that got filled. And I was like, was a resting order and options got filled at 250? I really didn't know. I'd have
to because I've traded foreign currency things overnight and stuff. I think they're trading. They're not liquid. They are, but you can get filled. So
right. So an out order is fine. The in order I would be nervous about with the illiquidity.
Yes. Now, does that GTC order work overnight? I think it does.
Well, and I think so too, because when you put them in, when I just put this GTC in, and we probably weren't live during this, you have to blow past something that says they cannot be canceled overnight. There's like a safety that said.
Let's just do another one. Let's just pick different strikes to make sure it doesn't overlap.
I'll cancel it. I'll cancel the GTC, and then we'll put it right back in. Okay, so I'm going to go 50%. And I'm going to go this way, and then I'm going to change it to GTC, and I hit review and send, and it says GTC orders cannot be canceled when the market is between sessions.
So that means they're still working.
Yeah.
And you cannot cancel. I would have to look at the details of that.
I know I would
because
too.
I don't do a lot of GTC orders, so that's my failing. But yeah, I think be aware that you can get filled overnight on this stuff.
Which I think is great. If you are happy with your profit target, I would rather have it be in there because sometimes there's a blip that you can get out and you get hit and you get your profit. I'm totally happy with getting out at a random time for a profit. I don't like the illiquidity overnight of an order entrance.
Well, see, you know what? Because I have exited things in the middle of the night in let's say euro dollars and British pound options.
Yeah.
Things like that. So one of the things that's interesting right now is you look at the market. What are the S&Ps are?
They're down. The ES is down 36 right now. I mean, they were down 24 almost all day, and then we had a little bit of a down move, and it's been staying there.
So what's driving the market, it seems, is Tesla. So last week, just for trading, I had sold some put spreads in Tesla and made money. It's not that I knew anything was going on in Tesla. I just said, okay, it's down, I'll sell some put spreads.
Yeah.
But right now, with it down so much, the question is, and this is a news thing. I don't necessarily follow the news, but it's this whole Elon Musk and a third party and all that stuff, and losing the EV, the electric vehicle credits and stuff. That seems to be what's pushing Tesla down today. Liz, do you take the other side of this trade? In other words, do you do the contrary and bullish trade in Tesla?
Yes.
You do. Okay.
I do. And I mean, in my account, I do. Jenny and I don't have a position in Tesla here right now. But in my account, I do. I have put spreads in Tesla, and today they're getting hurt because I put them on last week.
So what do we get for the 4-day options?
We're gonna look at the 4-day options in Tesla. And keep in mind, because earnings are coming up, so you want to stay if you're going.
Yeah. So let's say I just want a short term. Let's say I was talking about that same what can I make, what can I lose. So if I go in, so I get maybe take that up to the 85, 82, the 285, 282. See what we get.
$73 is not bad.
That's pretty good. That's close to 1/3 the width of the strikes. Okay, that's kind of my benchmark. And if I look at that, my max profit is $72 versus a max loss of $178. That's not bad. And I make, Liz, $4.43 a day for the next 4 days.
Well, the ironic part about this, and you and I both know this, you're going to have to get more than that for the next 4 days to get to 70 cents.
That's the theoretical value.
Yeah, so this is gonna grow teeth if it stays right here, because all of it has to come out. Like all that 70 cents has to be removed if we stay right here. So that theta number will start getting bigger and bigger and bigger as we get closer to what would be expiration. Because I know 4 times 4 doesn't add up to 70.
I may have been born at night, but it wasn't last night, and I know that 4 times.
But I like this, TB. I'm really glad you're putting it in this perspective, because this is the way to do it. And if you were going to say this to somebody, like say I'm using my son JD, I was like, okay, because he's a Tesla bull, right? So instead of just going out there, and he bought, I don't know, 2 shares of Tesla. So you can take that same $500, which is going to be half, and you're putting 177 at risk. And what I like about this is Tesla can go all the way down to 85.
Yeah,
it doesn't
drop another $8.
Yeah.
And so it's trades like this. Verticals let you trade big products with a modest sized account. And you say, well, GTP, the IV rank is 26%. Yeah, that's not really high, but it's high enough. And if you look at the number I really look at is over on the right hand side, that 67% number. In the along the right hand side of the strike, 67%. That's the overall volatility of the July weekly Tesla options. So if I take all of the Tesla options and weight their volatilities into a single number, distill them down into a single number, it's 67%. That's what?
And let's
5 times higher than the VIX, 4 times higher than the VIX.
It is, but Tesla is a volatile stock, right? Usually it is. So that's why I love that you guys, once again, TP created this as well. IV rank, meaning it is 5 times higher than SPY, but for itself, it's only in the rank, a 26 rank. Like it's been higher and it's been lower.
Right. Tesla's a volatile product. So I may join you in that. I may do that. And we can get back to my
and then I realized that
platform.
Once again, it is now 10:42, so time is getting away from us. But I do want to pop into Twitter real quick, okay? Because I know we've got some tweets that are coming in, and I'm going to go top down. Well, first, okay, I just refreshed, but we've got Jack Tucker coming in. This is my favorite guy. So he's got, well, I love all of them, but 2 tranches of 0DTE SPX collected, 11,600 in premium. Watching these today, shorts were at the 20 and 25 delta. So he's got, you can see where the stock is trading right there. This is his range that he's trading in. This is kind of what I've got my son doing in a very baby scale. And he's got 2 tranches in. So he's got the, he layers them on top of each other. So you'll notice that the strikes are his 62.30 and 62.35 are the two short strikes that are going to be a little bit tested, but I'll keep an eye on that.
And what he has in those iron condors is a short out of the money put vertical and a short out of the money call vertical. When you start with verticals, it's easy to get into iron condors.
Yes, if you understand one and then you put it together, this is what you get is a range for the day. And that's why I love these 0DTEs. And I love that Jack Tucker doesn't take risk overnight. No matter what happens, it's over. Like there is no what's going to happen overnight with these. There is no overnight risk.
What it comes down to is, am I getting the return on capital I need to pay my bills? Okay.
That's a good point.
And if I can make, so he's collects $11,000 in premium.
I'm going to say he probably takes it off at about 25% is my guess.
Yeah. So if you take that off for, let's say, $3,000 or $4,000 of you buy it back, right? So you spend $7,000 to buy it back. So you took in $11,000, you lose $7,000 when you buy it back. Your net is plus $4,000. Can you live off $4,000? Now I know Jack Tucker lives large. Okay, I know he's throwing big bills out to his people, right? But it's for a lot of folks that would cover some bills. And that's how I look at it is how much money am I making today on this trade? How much data am I collecting across my portfolio? That's what it is. It's not, gee, what's the strategy? What's the volatility? It's show me what I can make.
But I also think it's lather, rinse, repeat, right? So taking a look at this, there are going to be days when, like that's not, Mama said there'd be days like this. There will be days when you're going to take a max loss, that there's going to be an intraday move too big that this can't be defended. But if you get up the next day and brush yourself off. So Jacob has been doing these studies for us about how, like, if you do these trades and you do them every day, right? Sometimes it's better, sometimes it's worse, but he shows like what your like annual P&L would be. And so I think it's pretty eye-opening at looking at it from that perspective, where it's like, it's not like he woke up and he's like, I think it's going to stay within this range today. It's more like the probabilities, and you always say this, the probabilities are the probabilities are the probabilities. Is there going to be an outlier move? Yes. But if you take enough profit off enough times over and over again, it's okay to have that one big loss. The hard part
volatility doesn't lie.
The hard part is when you just enter the game and you take the max loss, number one or if it's like number one and number two. That's when I think it's very, very challenging for traders.
So what's interesting about some of the stuff Jacob is talking about is, I think, and Jenny and I talked about this last week, he looks at not selling 0DTE iron condors, but 0DTE iron butterflies.
Iron flies, yes.
Right.
That's what my son's doing.
So what's the difference and why would you do that? So the iron fly is selling the at the money straddle and buying one strikeout. So maybe selling the so he was 35.
What he's been doing is $10 wide. So look at the risk. The difference here is the risk reward. So you're putting it in for, you can collect $8, but you're only risking $185.
Now here's why this works. Okay. When you do wide iron condors, so 30 strikes out, 20 strikes out, and then a couple strikes away, the strikes are on a percentage basis very close together. So on a $6,200 index, the difference between 6,200 and 6,205, that $5 is meaningless.
Nothing.
And from a theoretical standpoint, the theta is very low. They have the same theta, okay? when you look at the monies, now I'm collecting. So I don't collect enough credit for, let's say, a 5 or a 10 point vertical way out of the money. But if I look at the monies, selling that at the money strangle, and then buying the wings to reduce capital, that generates enough capital or enough credit to make the trade worthwhile.
Yeah, and so I don't know if you and Jenny dug deep into this one, but the crux of this, which I loved, and this is why I had my son do it. Now he's, like I said, he's doing it in E-mini S&Ps, is because if you're getting $8.15 for this trade, you put it in and you take 10% out. Like you immediately put it on and then immediately close it for just round numbers, $80. Okay, so you're going to take $80 out of it. You're only risking $185. So if you do this every day, it only takes 2 winners to make up for 1 full loss around.
Yes.
And so that's why it's an easier, it's a less bitter pill to swallow than something like this.
Let's double check. So the max losses is about
The max loss
1,600.
was okay. So
It's about 1,600. The buying power effect is 195. So all right. So the max loss is 190, right?
Yes.
And that's the
your
same
buying
thing as
power.
the buying power effect.
Yes.
I'm sorry, Liz. I would look at the.
You were thinking E-mini S&P futures, but so people have to understand their like risk parameters. So this is like a good baby starter iron fly for the 0 DTEs versus like a Jack Tucker. Now, granted, I'm extrapolating here, but he's going to go pretty far out. So when you're looking at something like this, you're going to do 20 of these. You're going to take in $8,000, but I can even move it to a 20 lot. But you have a much wider win range, but your drawdown is a lot more.
Yeah. Right. So and when I say it's the same trade, what I mean is that, of course, the metrics are different on it and the strikes are different, but it's the same thing where you're betting that the SPX is not going to move as much as the world thinks it might. Okay. That it will not move with an 18% volatility. It'll move with a 2% volatility. And so what tends to happen is when the iron butterfly makes money, by definition, the iron condor will make money.
Correct.
When one loses, they will both lose. And so and you say, well, no, I'm doing the different strikes, so not exactly. I get that. I get it. It's not exactly the same, but you're betting on the same thing. You're betting on the index not moving.
So this is taking the field, because like if you see that brown bar right there, the brown bar is where the expected move for the cycle is, and then it's built in, right? So the implied volatility says that the SPX is not going to go beneath 62.20 or above 62.50. That's what the volatility is saying. So this is betting on it that it's not going to. It's kind of like being a weatherman, where it's like sunny skies, sunny skies, sunny skies. I'm going to bet it's sunny skies versus I bet a rain's going to come through. Do you know what I mean?
Right. And as you were saying earlier, it's wash, rinse, repeat. So don't do 10 if you can't stand to lose $16,000. Okay. If $16,000 takes you out of the game, don't do 10. Back it down to 1 to 1,600. And if 1,600 is too big, tighten up the strikes. Yeah. So don't try to be a hero with this stuff. Don't try to be like, don't try to trade like you have a bigger account. It's more important that you learn how this stuff works and see how you feel when you lose money.
Yeah.
Okay? Because you're going to have a loser. And if you fall apart and like, oh no, I lost about money. I lost $160 or $1,600 or I lost $180. I can't do this. I worked so hard for that money. I don't want to lose it. Okay.
Change your trading style.
You don't want to lose sleep over this stuff.
No.
And that's why I'm saying that, define the risk to what you're comfortable with. And by doing that, then, you take whatever credit you get, right?
I agree. Well said, TP. Well said. I love it. I love breaking those down, and it's so fun because we got to one tweet. Okay, Bob on Fire's coming in. He's actually in Texas too.
Yes, he's closer to it than I am. I think he's down in San Antonio.
Oh, he is.
And San Antonio is closer to that. They had some flooding. A few people died in San Antonio last week.
Did they really?
If flash flooding is scary.
It's got to be scary. That's got to be.
I mean, you don't and I said people do understand, and hydrologists and weather people understand, but they don't. People don't realize how fast the water rises.
Yeah.
You know,
Don't.
it's just like boom, there it is.
Yeah, and I know you said you don't live in a flood area, and it's so funny when we built our house, we're on the top of a hill. So I'll never forget when we walked in, my father-in-law's like, "This is the lot for you. You'll never flood because we're so high up." But we don't have any water around us, but our sump pump never even goes off. Because I was like, okay, top of the hill.
Yeah. So what is Bob? So there's not a big earnings week. Last week we got through a big earnings cycles. Wednesday, Delta Airlines, and what's CAG?
Conagra, I believe. So there's really nothing. We're on deck. I think JP Morgan and a lot of the financials, which I'm going to be on bated breath watching next week. I think they all come out next week.
Yeah.
Okay, and then Ajit. I love Ajit. Okay, top 20 large cap names with the highest IV skew. And he is wonderful. He comes in with all of these every day for us and gives us the implied volatility with all this stuff. Ajit is the best. He's going to get a gold star.
Very cool. Very cool. Thank you, Ajit.
And he comes in with more information too, kind of along the same lines. But we love this.
So Etsy with a high IV rank.
Oh my God, Jenny loves Etsy.
Did we do an Etsy trade last week?
She loves Etsy and Campbell's Soup, which are both on this list, Ajit. So
I don't have an Etsy trade. We talked about Etsy last week. So what? To what Ajit's point is, product doesn't really matter. I really don't care that we're trading bonds or Etsy or Tesla or Conagra or SPX or whatever. It's the strategy. And if I can collect enough credit for doing the trade relative to the capital. So Campbell's Soup.
Take a look at that. I will tell you, I think liquid products, once you learn the strategy, you kind of got to stay in liquid products. That's the only thing I do think matters.
So
but
what is
Campbell's
the liquidity on Campbell's? Campbell's
take a
has
look.
3 stars.
It's got 3 stars. Let's go overview. 3 stars.
Yeah.
Scott's just handing out these stars lately.
I mean, the markets are kind of wide. There's not a whole lot in them that I'm looking at 0DTs. Looking at the Augusts, the
problem is, look at these.
They're not
underneath.
great.
30 is fine. The 30 put is 80 at 85, but no bid at 20, no bid at 50. You almost have to close it up.
Yeah, I don't love this.
Yeah.
This is too hard to trade. And I remember when I was trading on the floor and a big trade came in, and like, I didn't know if we as a company wanted part of it. So I called upstairs and said, "Hey, Jared, do we want and should I do this?" He said, "Yeah, do it." I said, "How many?" He said, "Do as many as you can get out of." Okay.
Oh, there you go. That's a good thing to say. Do as many as you can get out of.
Now, granted, I could, I had a small account. I was doing 2 lots and 5 lots maximum, right? And the broker, the broker takes 1,000 lot, 100, that sort of thing. And he would take pity on me and give me 2, right? But that's who it is. But it's, do as many as you can get out of, because it was a little convoluted. It was like a 7-way option spread with futures. This is kind of wacky. Do as many as you can get out of. And when I look at Campbell's Soup, Liz, I'm seeing me stuck in that trade.
Yeah, I think
I'm not getting out of that trade. I'm married to it. I'm putting it on and keeping my fingers crossed.
And I mean, there's a difference here. This is pretty liquid. Where you're looking at 201, you're a penny wide with the stock has some liquidity, but the options don't. But I agree with you. Do as many as you can get out of. That's a great line. I'm gonna steal that from TB.
Please.
Okay, we got another person. This is Eric. He's very, very, very much Jack Tucker-esque. He does the same thing. He's got different tranches of 6 lots. So I'm hoping everybody's kind of pops back in. And all you need is 1 pop back up into it. I know the SPOOs are down now, but that doesn't necessarily mean they're going to be down all day.
No, and looking at what other people do, it's a great way to learn.
It is. I love the Twitter segment because people are just putting up what their actual trades are, not being like, I made so much money.
Liz, I know I am, and I don't like to speak for you, but I will speak for you because I know you, Liz. We don't stop learning.
Never.
Okay. Trading never ends. Trading, there's no retiring. There's no like, got that figured out. Next.
Never.
No.
We're doing it. We're learning as long as we live.
You are only as good as your last trade. Okay?
Yes.
So
I do feel honored to see and have everybody post what they're doing in real time. I mean, that's kind of pretty raw. You have a lot of people and a lot of networks, TP, that'll just be like, oh, we made X amount of percent, but they don't tell you the losses and the wins and the road to whatever you did.
Because they're not doing it.
I agree.
Doing it. When I listen to somebody who has nothing but winning trades, yeah, if you do 2 trades in your whole life, and if I sell out of the money puts in the SPX twice in the past 5 years, they're both winning trades. I have a 100% win rate.
Yes.
Okay. Great. That is factually true. Yes, you won 100. You made money on 100% of your trades, but you did 2 trades. You're not paying the bills with trading. That's what I do. That's what you do. That's what our customers do. We need to do it again and again and again.
Yeah.
And I think watching people on Twitter, it's like, oh, what's this guy doing? What's she doing? How are they adjusting it? I hadn't thought of that before, and I've been doing this forever, but I'm always looking to learn.
I know. I agree with you, TP. We have 1 minute left. I want to make sure we got to everybody. There's Frank the Great. We've got, these are coming in from. Do you know what movie that's from?
No.
Better Off Dead. I quote that this was one of my favorite movies. I do it all the time. I was like, $2. I want my $2. This kid shows up at the guy's house like 50 times trying to get his $2 because he's the paper.
I got to look that up. I've never seen the movie.
Oh, it is so good. It is so funny. I'm sure it's inappropriate now because it was a movie from the 80s. But
I've never seen that.
But back in the day, it was appropriate. Okay, the one thing, and I know I don't want to cut into the boys' time, but back to your point, talk about putting your money where your mouth is. And I'm not saying this. Nothing we do is a trade recommendation, but you can see what we do, the good, the bad, and the ugly. You see the wins. You see the losses. You see everything.
Yeah. And and losing money is okay. It stinks. I hate it. I hate losing trades. But it's part of the business, and seeing how you personally respond to a loss is going to tell you whether this is for you.
Yeah,
really.
Absolutely. And watch this, just because we're talking about it, I'm pushing all mine to the follow feed right now. And look at this, TP didn't even see these. 2 of our GTCs that were for a profit hit. So that's why I like having those in. Didn't even know it, just got more money in my account. So there we go.
All right, now I got to check my little bond trade. Where is it?
The bond trade, we're not making money in it yet. We're down.
No, down 2.5%. Do it down a little bit.
But I am going to push it through so everybody can see it. Right?
That's how you do it.
Okay, TP, I want to say thank you from the bottom of my heart for joining me. I'm very happy that you guys are in the safe plane area. And for those of you who we did not get to your tweets, your questions, you got a second shot on Friday. You can even put in a request for TP.
Hit me with your best shot, people.
I got a request. Flame Shirt Friday. Flame Shirt Friday.
Flame Shirt Friday. Okay, flame shirt. I'll make sure it's clean. I'll make sure it's clean because I know you're a stickler for a clean clothes list.
Yes. You've got 4 days to get that shirt cleaned. Flame Shirt Friday coming with TP and the LD. All right, everybody, thank you for watching. Remember to trade small, trade often. Laugh with us, learn with us, and watch TP and the LD. Thank you, everybody.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Craig in New York City, what's up?
I just want to say I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. It's like losses could have been catastrophic, and they're not. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batiste. I got my man, Mikey Butler, and of course, Ryan Grace is in the house with us today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. More importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend with my guys, Mike and Ryan. Ryan, good morning. How are you, sir?
Good morning. I'm doing well. It's good to be back here in the studio.
I know.
You guys. Yeah.
We got blessed with a Friday 4th of July. It's always like,
Yeah, middle of the week.
Middle of the week kind of throws it. Yeah, it makes it not as good. Thursday would be fine, but we should keep Friday 4th of July somehow. We should keep that.
Yeah, but we all went separate ways for the weekend, and we found our way back for the studio show.
I couldn't wait to get back.
Yeah.
Oh yes. You think about it all weekend.
You're sitting in Michigan, just drinking Oberon. You're like, God, I can't wait for that 11 a.m. slot.
Mm-hmm.
It's gonna be good.
Thinking about what I was gonna say, what we'll put on the slides, on my mind the entire time.
I get it. I see red on the screen.
I know, it's the first one ever.
Oh, it's sad.
Yeah.
It's crazy. And it happened really on Friday, the half-day session.
Mm-hmm.
E-minis were down like 50 and change at one point, and rallied into the weekend. You had all sorts of, it seems like anytime anything like any sort of dip happens, we're back to kind of the Trump pump. We had the Trump dump. So we had him talking about, not looking at the stock market, this Joe Biden's economy, blah, blah, blah. Now we're back to like the Trump pump, where if something, a little micro dip on the charts, you get, tariff headlines or some sort of kind of pumping of the market. It seemed like that was kind of the recipe this weekend. You had a little bit of a sell-off on Friday while markets were closed, stocks were closed. It was just the futures trading. And then you had, tariffs getting pushed back, tariffs getting done. I guess we have some tariff announcements that are happening like momentarily right now. I think it was 12 Eastern, which is right now 11 a.m. Central Time. He's sending out those letters, the tariff letters. Snail mail, baby.
It's the future.
We're going back to the future.
Yeah.
Coal is back, no more EV subsidies.
Guess not. Yeah, I'll see if we can get some live data. But if anyone in the YouTube chat has live data coming in or live news, let us know. Because we are streaming live on the Tasty Live YouTube channel. You can throw in your trade ideas, questions along the right-hand side chat.
Yes.
I got the Tasty Crypto newsletter pinned to the top of the chat. So go sign up for that for free.
What's up with the chat though now? I see there's an update to YouTube possibly.
Yes.
We've got number 1, number 2. Is that who's leading in the chat?
Yeah, these are the kings and queens of the Tasty
Oh,
Live.
hell yeah.
Yeah.
And
Okay.
this is a Google thing too now. So
Yeah.
like they do like a ranking. I don't know if it's I have to read up on it more. I have in my many tabs that are open currently on my computer, I have an article that I have to read about it. But I think it's some sort of combination of not only like watch time, but like comments and that's
Oh, there's a whole algorithm.
yeah. So there's a whole algorithm, and I know.
But it resets daily, which I think is nice.
Yeah.
Because you can be the king or queen for the day. And then if you actually have to, if you have to go do stuff another day, you lose that title.
You got to show up, maintain it,
Yeah.
really prove that you're a dedicated chat member.
Yeah.
Okay.
We're looking into ways that we can kind of incorporate this a little bit more.
I like this. This is fun.
Pretty cool. It's a good idea. I mean, got to reward the chat peeps.
Indeed. Bitcoin down, but
I know,
still around
shocked.
110K. So I don't know. It's like that thing where it's like, ooh.
It's coiling, as you would say, Mikey.
Yeah.
Come on.
It's like that meme where the line of people trying to get Bitcoin when it's down to like 30K, there's no one there. And then it's like about 100K and the line's like out the door. It's incredible.
Yeah, as you'll see, not much has changed week over week from the last time we did the show or when we had our weekend update. But we'll talk through that in a moment.
Very nice. I'll give a quick little market update. E-minis are down 34. We were down about 40 at one point about 15 minutes ago. That was kind of the low of the session here. A relatively wider session compared to what we've been seeing. Everything's been pretty much straight up. We've had a little bit of two-sided action today. NASDAQ down 110. Nothing like huge moving besides Tesla. Obviously, you saw the Elon Trump spat 2.0. Round 2 of that going down. You've got Tesla down 21 and change right now. Apple was another one that was like kind of weak. It started up on the day. It's now down $1.55. You have Amazon going the other way, up 75 cents. Meta has kind of been stronger today too, 7.23. Nvidia as well, selling off a little bit, but not a ton of volatility in any of these names. Not a ton of movement here. Just kind of a chop fest. Dow down 318. You've got the Russell down 20. So everything down, between 0.5% and 1%. It's a very, very much a nothing day today. Volumes continue to be abysmal. They were abysmal last week. They're continuing that here. It's very much summer trading, it seems. Oil up a tiny bit, 67.65. We're up 65 cents. Volatility in oil has just been absolutely smashed. It's back down to, the lower end of where it's been trading relative to the whole Middle East kerfuffle. Volatility futures up small. They did get into a 19 handle into Friday's kind of sell off. 1865 right now, up 25 ticks, a little over 1%. The VIX itself at 1764. I dare to say this is much of a move in volatility. Bonds down a full point. They've had a swift sell-off from the 15 handle. They were at 115 in the middle of last week. We're down to 113-ish. Not quite the lows, but certainly bonds coming off the highs that they've had here recently. Gold down $11. You have silver down 20 cents. They've both been kind of chopping around this kind of 100-point range here in gold, $1 or $2 range in silver. And then as Mikey alluded to, Bitcoin selling off a little bit here. It's been the risk on asset. It's certainly moved with the market through the up move. A little bit of a pullback today in the market. You see risk assets like Bitcoin moving the same way, $1,500 to the downside on the futures. Spot down 900 and change, but it's maintained. We haven't seen a huge move in Bitcoin. It's been very much like a choppy coiling, as Mike would say.
Consolidation.
Yes.
Consolidation.
Sideways here, waiting to break higher, my friends.
Exactly. Coiling, consolidation.
Yeah.
Tomato.
There haven't been like a ton of headlines. I know don't we have Crypto Week coming up? Isn't that a thing coming up here?
Every week is Crypto Week.
I know.
in my world.
This was This is a Trump crypto week thing, I think, coming up sometime in July.
I didn't see that. No way.
No,
We're having like a U.S. sanctioned crypto week.
Something along those lines.
Yeah, actually, next week, U.S. House of Representatives declares July 14th Crypto Week.
You see?
Okay.
I see the headline.
Maybe some big
Oh, yeah.
announcements coming soon, my friends.
Yeah.
That's what we need to see.
But it's continued to be low vol. I mean, you have IBIT back to a negative vol here. Basically, not negative, but Ivy rank is negative. We did see a little bit of a spike in vol last week into the rally. I think we had a 3 or 4K kind of candle there on Bitcoin. Is there anything that I'm missing, Ryan? Or is
No.
it just Chop Fest, summer?
I don't think so.
Just kind of.
Yeah, it's Chop Fest. I mean, you're entering into a period here where you could see a little bit of a growth slowdown, kind of sticky inflation. We got the tariff-induced kind of risk-off moves possibly on the horizon, so that's going to be back in focus, whether it truly matters or not. We've gone through these periods. We should learn from them.
Yes.
But you will have that kind of top of mind here. You're right at the top of this range, right? That range is basically 110, 111 on the upside to about 75 on the downside. So if you did get a big correction, it does take you back down again about 30%. That's pretty normal within a bull market, at least historically, when we look at Bitcoin. But no, I don't really read into this. If anything, it's trading pretty well. Every dip in here,
has been bought pretty seriously, like really quickly.
And I mean,
today we were down. I mean, the lows of the day on Bitcoin on spot was 107.8. So we had it, about 15, 20 minutes ago. You're not having these huge moves.
No.
To the downside. It's sustained.
You see that with Bitcoin implied, ETH implied vol. You see that with the VIX as well. There's a little bit of a positive correlation here in the short term between equities and crypto. We were underneath 100,000 if you go back to the end of June, or third week in June. I think it was the 21st, 22nd, whatever that weekend was there. Move started on Friday and then quickly bid right back up to 107 into the 110 area. I think that's pretty constructive price action. You look at the S&P, for example, you've been up for like a week straight or whatever it is, 7 of the last 9 days or whatever. And so you're going to get a little bit of a pullback. When you look at the S&P, when you look at equities, you will see over a 3-week period, very short-term time horizon, but you have a pretty strong inverse correlation with the dollar. So you got a little bit of a bounce in the dollar here. You got yields up a little bit, so some slight bond market volatility. I really don't read into this other than that, you take a breather every now and then. I don't think we're entering into an economic environment in which you don't want to be long this. We've talked about kind of the potential for that stagflationary environment. That's one in which, right, you have sticky inflation, accelerating inflation, but you have a deceleration in growth. You want to be long things like Bitcoin, or at least historically they've done well. Gold has done well. Crude oil has done well. I'd keep an eye on crude, on energy stocks, XLE as an ETF, for example. And so again, I think it's an environment in which you want to own crypto. I don't see any signs of this being a top when you look at on-chain data. You've had very constructive flows here. When you look at the ETF space, you're starting to see that around some of the ETH ETFs as well. So aside from, it's frustrating for any bulls that want to just see this rip higher. When's it going to happen? Blast off mode coming soon. We've been trading sideways within this kind of, call it 100 to 110 range for the last couple of months. You are seeing, as you mentioned, dips are being bought, and I think it's just a matter of time.
Yeah, when you look at like Ethereum is the other one that has, is kind of top of my mind. It's been the same sort of thing of just kind of a chop fest, which is, I feel like is kind of rare in the crypto space to get these periods of time. Like, is this a normal, like, in a 3 or 4 month time frame to have this sort of
you definitely see some of these periods. I think we get used to those larger realized vols at times, but volatility certainly is low here. It's not uncharacteristic what we're seeing in terms of the price action. We saw a period like this if you go back kind of, let's say, summer of 2024. So almost reminiscent of what we saw a year ago, and then we got that Uptober in October, big move there. Post-election, and then you saw a pretty sizable correction into the beginning of the year and into those tariff announcements. But like I've talked about before, this is largely on the margin driven by liquidity, global liquidity, and financial conditions. And when you look at that, and there's been charts making their way on X, you look at M2 as potentially a leading indicator. Yeah, so you would have, if that's true, if that correlation holds up, it implies in terms of where we are from a financial conditions perspective, where we are from a liquidity perspective, it implies, a price that, let's just call it arbitrarily, between like 130, 150. Whether we get there or not, that's what this correlation implies. So you have much more conducive liquidity conditions in the market, and you saw the opposite of that really if we go back to the end of 2024 and into the first quarter of this year. And so you saw a lot of weakness in the market. Again, I think the macroeconomic environment is supportive. Liquidity conditions are supportive. It's just that, we've been trading sideways, and like price is what it is, right? If we do get that break off of, call it, 2,800 in ETH and, kind of the same setup here, 110, 111 in Bitcoin, I do think you run. And then you do see that probably materialize in, in the vol space.
Yeah, and I think it's interesting timing too, because we've seen very strong months in the second half of the year, closer to the holiday season, and I think the more we believe that rate cuts are going to happen and the market participants may increase and investments may be pumped into this market due to that, I think that can create a narrative of Bitcoin, E-minis, NASDAQ going higher.
Does the crypto space and Bitcoin specifically, do you see the lower volumes typically in the summer that you do in equities? Or is it or is that just because of the 24-hour market's just not as much of a thing?
Oh, I definitely see a correlation at times around holidays and around kind of seasonal components that might exist in participation in the equity markets as well. So you would see that. But given that this is, at times can be, I should say, a very detached asset class, an uncorrelated asset, there is the potential for some kind of outsized moves where you see those correlations break down. But recently, it's been pretty positively correlated to the majority of risk assets, and I think driven by a lot of the same variables. Ultimately, liquidity, interest rates, macroeconomic conditions. The more institutional participation you get, the bigger the participants are, the bigger the market becomes. I would expect that to be the case. I don't think that you get a market where you have sovereign wealth funds and large financial institutions participating in a more regulated environment, and you also have consistently high levels of historically elevated implied volatility. I just don't think that happens. I think you do get off of the 30 level here, and it doesn't mean that you can't go lower. But I think the days of pretty consistent 80, 90, 100% implieds are probably over unless there's just this absolute FOMO trade.
Yeah.
But I don't think it's because of the downside.
And that would have to come with some sort of big regulatory change or big sort of like a sovereign fund really, getting in there and squeezing price higher.
Yes. Yeah, I think for now, this just, it remains, the best analogy is digital gold. And we can take Bitcoin and put it in its own bucket versus the rest of the alts. And there are different use cases, and some of these things maybe never come back after an 80% drawdown. But when you look at the debt picture, not just in the United States, but globally, you look at the slowing demographics, you look at just the debasement of currency, generally speaking, I think there is reason to want to own an asset, a hard asset, even though it's digital, something that has the characteristics of a hard asset that's somewhat untethered or outside of that existing space. Now we're seeing a lot more participation and this kind of convergence with the existing financial system and this role of Bitcoin as collateral within that system. But it also is something that truly sits outside of that current system here today in terms of the fact that you can hold this in self-custody, right? We've talked about the risk here is like EMP, the internet goes down, right? So as long as we kind of put that to the side and the the quantum kind of compute side of this. Can the chain be hacked, right? Like for now, here today,
it's not a thing that you were worried about.
Something where I think, generally over time, you probably grind higher at lower levels of volatility does not mean that you can't have huge drawdowns. By huge drawdowns, go to $300,000 per Bitcoin and back down to 150. I just think that, you continue to go higher. Arguably the same thing that you see in the S&P. It's all driven by the same thing, and that's the debasement of fiat currency, expansion of central bank balance sheets, right?
Until that stops, the stair step continues.
Your dollar will buy less at the store, unfortunately. Your wages might not keep up, but this is at least a hedge to that environment.
Yeah.
Gold is arguably very similar. And when you look at what's happened here year to date, if I just take a quick peek of the markets, year to date, I've got gold up almost 27%, Bitcoin up 15%, the NASDAQ up 8%, the S&P up about 6%. If my prices might be slightly delayed, you want to own assets.
Yeah.
In most environments, and you want to take profits at certain times as well, and we'll do that in crypto. I just don't think you're there yet.
Well, the E-minis just sold off like 15, 20 handles. They've rallied back about 10 from that point. Bitcoin was moving a little bit to the downside. So maybe we got our first tariff letter sent out. I want to see a copy of that letter. And get the rest of the list that's going out. I will say the crypto space, one of the things that I've kind of adopted as a weekend look into Monday's open. Crypto has been, I think, with the 24-hour markets, has been a pretty decent indicator. I wonder what the correlation is exactly for the Bitcoin movement over the weekend relative to the Monday open. I'm sure that the correlation is very, very high.
Yeah, I think, certainly in recent times, we've absolutely seen that, right? If you get a geopolitical risk-off move or related move over the weekend, something happens, you get an announcement on Sunday, those 24/7 markets reflect that. And it typically is what we see with the open.
Yeah, we're seeing some reports of just market chatter.
Nothing yet.
Nothing substantial, but
no impromptu press conference.
Not yet.
Not yet.
But yeah, I think this week especially with new tariff rates are supposed to be set by July 9th.
They move that though. August 1st now, they'll move it again. Yeah.
Well, the July 9th would take effect August 1st is what I'm saying. But I'm sure you're going to see some volatility in these markets as news comes in for sure.
Looks like you got 25% on Japan here, as you guys mentioned, starting August 1st, and then a threat included here that it will be raised if there's any increase in tariffs on the Japanese side.
Yeah, it looks like 25% for Japan and South Korea.
Okay.
Letter is almost identical. So
were the letters made by ChatGPT? What do we
know.
think? I would guess that's certainly a potential.
Potentially.
Non-zero probability.
Non-zero probability on that.
Big non-zero.
Yeah. You're seeing some of the currencies moving as well. Bitcoin near the lower end of the session, 107 and change. You got the euro down. We just talked about Japan, the Japanese yen falling off a little bit. UUP is one of the ways you can kind of look at the US dollar. It's up small. You could also use DXY, which is the dollar index. It's moving a little bit higher, helping some of my positions. I did want to tee one up for you, Ryan, because I don't know if you've been following this or seen this, but Tom Lee, CNBC, mega bull, always bullish, small caps, Bitcoin, tech, always bullish. He's doing or at least starting a sort of micro strategy type fund for Ethereum. Is he the first, not the last type one for this start of for this like new era of crypto companies?
Yeah, I think so.
Are we going to start having like 20 of these competitions?
I think in the same way that you're going to see more ETFs, you're going to see more companies add crypto to their balance sheet, hold crypto in some capacity, participate in the crypto economy or participate on chain in one form or another, possibly in DeFi. Yes, I think it's likely that they're not the last. I think that you'll see more of these vehicles spun up for this purpose to acquire these assets, and there'll be a bit of financial engineering around it. That said, not all of these assets are the same or created equally.
Yeah.
Right. Maybe with Ethereum, you see more of that. Certainly with Bitcoin, we're seeing that. I don't know if there's an argument for corporate treasury to hold another token, but I do think that you're going to see a little bit more of this for sure.
Yeah, you got some single name stocks moving. Tesla down 23.
Yeah.
Still down. Corn down 4%. Seeing some interesting moves here. Yeah, the Japanese yen taking it on the chin for sure.
Yeah, the only thing I've done today is manage some Uber positions in some of the airlines, Delta and UAL. They have earnings coming up. We're starting the next leg of earnings season. Middle of next week is kind of when everything starts. So I took some risk off the table, closed out some short puts there in Delta, and then bought in some risk on UAL.
There you go.
But no crazy moves. E-mini's down, just about 1%. Nothing besides Tesla. Tesla's kind of like the only one really bucking the trend here by all that much.
Yeah, it is. It's almost like everyone was so afraid of what might happen in April, and now we're actually getting things happening, and the market's like, oh, whatever.
Yeah. I mean, this is still within implied volatility. When you look at the VIX at 18 and change, 1% moves, even if it's to the downside, is within within expectations here of implied volatility. But I think we've gotten lulled to sleep here a little bit with just the 9 straight days of low volume.
I mean, yeah.
Base ripping. I mean, 5-6% to the upside in a week. Pretty incredible.
It is quite something. But yeah, vol futures not really moving. They're up like 20 cents.
No, we're not going anywhere.
Which is basically a non-move. Lovely. What else are you looking at in the crypto space?
Well, if you guys want to throw the slides up here, we can run through a couple. I put a couple trades on recently as well, just going off of the signals. I think there's a good chance that works, but it's not perfect. We can talk through that in just a second. But yeah, Bitcoin update, as you guys talked about, right? Not doing too much week over week here. If we jump into our performance dashboard, pretty much flat at the time, down slightly from this spot price. Up off of those lows in the last 3 months when we saw everything hit hard at the beginning of April, beginning of July. You're up, almost 40% on Bitcoin, up over 50% from where we were with ETH. Solana, same thing here. So you've got, these prices that have moved back to the high end of the range that we've been in. We've talked about that consolidation. Volatility remains low. I think when you look at price momentum here, it's definitely a bit more positive than it has been. Bitcoin over everything continues to be the trade. It's outperforming on a year-to-date basis versus just about everything else that we track. You are seeing now those bullish signals, I suppose, momentum inflecting back to the upside here on the daily for ETH, for Solana, for XRP.
So maybe alt season.
It's possible that you have seen all of these bottom.
Yeah.
Right. I don't know if we're off to the races just yet. I'm waiting for kind of a further confirmation there. I'd want to see that in terms of our longer time frames. On the weekly for Solana, you're still bearish. But structurally, right, it's still a bullish market that we've been in here for some time. It's a market in which I would feel very comfortable buying dips unless you were to really see a change, not just in crypto, but across the board, right? We have to get back to an economy that's seeing a significant slowdown. I don't think that's what's in front of us here today, at least for the next couple of months. So not seeing any signs there that would make me feel, afraid or anything to buy the dip. I would expect that you do get a little bit more volatility at some point, and your dips, if you get them, will be a bit larger. But low vol has remained the theme. Bitcoin outperforming has remained the theme. I do think, there's some signs that some of these larger cap alts have probably bottomed. Probably use ETH as the best example of that. On the signal that's flipped back to bullish for Solana, bought some Solana here. You can see that on the follow page, probably long at 152, 153, a little bit higher than where we are.
Been chopping around that range. I mean, we got it down into like 130-ish for a short moment in time.
Yeah, those are obviously much better dips to buy. Going back to the end of June, 125 or so.
Yeah.
But yeah, just looking at the chart here, I'd look to try to trade this, up back to 170, 175, 180, 190 is kind of your recent or local high in there. Going back to April when we put in that low underneath 100, your range has been about 95 to almost 190. So almost $100 range in there. Kind of
love that 100% implied volatility in a month.
Right.
Realized volatility. The implied was probably higher than that.
Yeah, so these certainly can move. You've got a realized vol on a 30-day basis of 67%, but Solana's another one that's hasn't been doing too much here. But yeah, outside of that, guys, just jumping to the next slide. I'm in Aave, so when we got the signal there, put that trade on the follow page. You can see that as well. I just jump into the follow page.
285 and change right now.
Yeah, I want to see where I put that on at. So went long at 267. I'm trying to target, let's say 300 or so on that. These things can move quite a bit.
Yeah. You can see that in one candle.
Yeah.
For 1 minute.
So that would be, it'd be a pretty good trade. It's just on one. Same thing on Solana. Just trying to take, 10. If you can take 10% out of a trade, I think that's fantastic. You can quite often do that in crypto.
When you're trading these sort of things, do you put like when you say I'm trying to get out at that 300-ish? Do you put in an order to sell at 300?
Yeah, I actually have one in for. I'm long some gold right now that I'm trying to get out of, and I'm long some Aave that I'm trying to get out of. The Aave price target for me, just put it in right now, and I might reassess that. But on my working order, it's a $300 limit price.
Yeah, I figure with 24-hour markets, it's a little bit more, usable. I feel like when I'm sitting here watching my portfolio, I don't need like my stop orders in. But if you're at 24-hour markets where stuff can move 10 or 15% in a candle, it might be.
If I came back to this afternoon somehow and we were up another $10 to $295, I'd probably hit the bid and just get out.
For sure.
But yeah, I'll just work orders in here at kind of arbitrary levels that would be decent. If you bought it at 267, you could sell it at 300. Like I'll take it and come back on a dip if you get it.
Yeah.
Outside of that, though, again, and as we go through these next couple of slides, when you get into the smaller market cap stuff, it looks a little bit worse. At this point, memes look worse. So Bitcoin at the top is leading the way. Bitcoin market cap dominance stuck at 65%. Not seeing much positive price momentum here short term. When you look at a lot of these other tokens, if we go back just one slide, you will see that it's a little bit better for some of these. But Sui just went from red to gray, so that's a step in the right direction, I suppose. But yeah, I've mostly just been trading some Bitcoin on dips, Aave, as I mentioned, Solana, ETH, just kind of sticking with what's working, like we've talked about for seems like months now. That said, if we jump to the next slide here, we've got, I think we get our expected moves.
Yeah, one more.
Or yeah, let's look at this relative performance here. Same thing, right? ETH BTC, a little bit better week over week. The rest of this stuff, it's Bitcoin over everything. Bitcoin market cap dominance is still up. If you measure price momentum in there, it's pretty bullish. The trend is strong with this one. Jumping to the next slide, again, kind of a boring update for you, but not much has changed week over week. These expected moves are low. We talked about
39% implied volatility. That's like a NVIDIA.
Yeah,
I mean,
this
Nvidia
is
and
a
Vol,
much
like-
different crypto market than I think what's in people's minds. They always talk about how this is so volatile and so risky, and it can definitely change. But at these levels, you're well off of what some larger market cap tech stocks trade like.
I think the numbers skew that a little bit.
Yeah,
When somebody says, "Oh, it's down," Bitcoin's down $5,000 or $3,000. It sounds like it's like this huge number. When you talk about it in percentage terms, it's much lower.
Yeah, it's like a 5% move.
Yeah,
which is not
big.
crazy.
Obviously, that is a move, but it's wild that Nvidia in the August expiration next 39 days has 40.9% implied volatility. So you have, the market projects volatility and price movement to be more volatile in Nvidia with an IV rank of 6 than in Bitcoin, which is, I don't know how many times we've had that situation.
Yeah, you haven't seen it that frequently, but recently here it's been the theme. There is still a bit of a premium in there, 30% implied volatility or volatility risk premium when you look at implied versus realized on the same kind of 30-day time frame. But as you mentioned, IV ranks low for both Bitcoin and ETH. Expected moves here, apologies, that shouldn't be 26 for ETH. It should be like 267, somewhere around there. So that's a typo on my part. But that's been the norm. The expected move on a weekly basis for ETH has been about 250 to 300, rarely 300 anymore. That could change. Bitcoin, 5.8, 5.9, 6, wherever you want to round up to. For context, you get back to the top of that implied range, implied volatility range, and that's closer to about 70% implied vol. So you're going to see not quite a doubling of the move, but you get closer to a $10,000 move at this price. Solana stuck in the mud there. That range really hasn't changed much. Same thing for the rest of these. So kind of sleepy right now.
Yeah.
But don't let that fool you. This stuff can change, and I think it's important just to understand what prices would you see in the market when you start to model these higher volatilities. Even if we were just back to move back to like a 50% implied vol, definitely an environment where you want to take profits a little bit quicker on the upside, or kind of let it run and look at that as your signal. If you get that expansion in volatility at the same time that you get a pretty sizable upside price move that maybe is supported by some volume. But haven't seen that in some time.
What do you think overall? Because the Bitcoin market cap dominance slide is one that's kind of stayed the same, 65%-ish, basically for most of the year, if not the most recent couple months. What do you think long-term that looks like? You think that gets wider, meaning it gets bigger, or it gets a little bit smaller? Like overall, obviously you expect the crypto space as a whole to get bigger. You think that the dominance of Bitcoin remains that high, if not goes higher, or do you think that kind of comes lower as just in the space as a whole?
That's a great question. Yeah, 2/3 of the market, Bitcoin and Bitcoin only. I do think that comes down, but I don't think it's a situation in which it's back at.
It doesn't mean prices go down, because the market is going to get bigger, or that's our expectation, is the market gets bigger.
I think it remains a pretty sizable component of the market, north of 50% for some time. You will see this come off of the highs, I think, and you will see some rotation. Does it last? We'll find out.
Yeah.
I just think it's a reflection of these new participants, right? And you get back to this idea that for this market to grow, to get bigger, it needs bigger and bigger participants.
Mm-hmm.
And these are the sovereign wealth funds, the nation states, the central banks, the institutions. It's not your retail investor kind of makeup that it was all the way back at the beginning.
Yeah.
And that's necessary. It's required, really, for this market to get bigger and bigger. You need those capital inflows, and they're going to come from likely larger players. Those players are probably, in my opinion, going to venture into other areas of the market, not immediately. It's been around for a while, but it's still very early in that sense. And so I think as a result, you do see this kind of persistent Bitcoin market cap dominance. Probably comes down a little bit, right? Last time that we saw a pop in in a lot of alts versus Bitcoin was back right at kind of, I guess, when we kicked the can on tariffs, beginning of May. A little bit better economic environment moving into at that point as well. And so you get down to 60%. I think you probably get to mid 50s and hang out there.
Yeah.
But I don't see an environment in which, Bitcoin's only 25% of the market, just given how early it still is and where those flows are going, primarily into Bitcoin.
And I think it makes all the sense in the world when you consider
It's almost like a Mag 7.
Yeah, the number one fear for people that are just now investing in this is like, what is it? What am I even like buying? But if you see Apple or Amazon invest in crypto and it's specifically Bitcoin, that draws people to Bitcoin itself. Like, and that's why I think you're totally right. I think it stays above 50% for even if it's just for the reason of safety and numbers, where people are investing in it long term and they don't want to have it in some kind of shitcoin. They want it in crypto. They want it in where everyone else is investing the big money.
It's truly decentralized. It's proof of work. There might be institutions that build on Ethereum, and you see Ethereum does securitize a lot of value. I think that grows. And I do think that you could see something where, let's say that the price of Bitcoin gets closer to 200,000 from here. You could see, you could see Ethereum go 10x, 5x, right? And that gets you, a 10x, not quite $30,000, but would get you up there into the 20s, 25,000 really. And then you look at, well, what is that in terms of the ETH BTC ratio? And it would be at a new all-time high, but it's not insane.
Yeah.
It's not like the ETH Bitcoin ratio is 0.5 or anything like that. It's going to be closer to, at those prices, somewhere closer to like 0.2. It would be quite the move, but I do think you could see that, and that would definitely push your Bitcoin market cap dominance down, whether you stay at those prices or not. But there could be that kind of, I guess what I'm describing is this like FOMO bid into things like ETH, into Solana for a moment.
That takes
they might get really rich at that price, where you're like, wow, these, if you look at it from a fundamental standpoint, these valuations are a little expensive.
Yeah.
But I think you could see that. You've seen that historically off of lower levels, price levels, where you do get that magnitude of a move in prior cycles. And that, again, maybe is a signal, right? Okay, if we believe that long term, we're kind of measuring this from the Bitcoin market cap dominance perspective, maybe I'm rotating in or out or trading around this based on where Bitcoin market cap dominance is. ETH might be very expensive at a 50 or 40% Bitcoin market cap dominance.
Yeah. And you see that in markets as well. And like what I was saying with the Mag 7, if you think of Bitcoin as like the Mag 7 group, like in the S&P 500, your Mag 7 accounts for 40 to 50% of the weighting of all the components. But underneath the surface, in periods like this, where you have kind of the Mag 7s that have kind of chopped around for the most part, are at new highs, and then you have like kind of the secondary, Ethereum-like stocks, your CrowdStrikes, your Datadog just got added. It's going nuts. I'm short some Delta and Roblox, which has 3x'd in like the same period of time. You kind of see that sort of rotation play out. I think that's sort of what you're alluding to with the change in market cap happening quickly, market cap dominance happening quickly with kind of an extension in some of those smaller players.
Yeah, some of these things are so small from that perspective that it really wouldn't take that much capital to
you put $1 billion
nominal
in
price
SUI
levels
and it
that are wild,
10x's,
right?
just on the move, because you have the volatility expansion, you have kind of the rush of FOMO, that sort of thing.
Yeah,
you move it bigly.
Whether that happens, anyone's guess. But I guess the setup, the structure is there in which, if it were to happen, you would get very explosive, momentary kind of explosive moves.
I like the logic behind Ethereum. I think Ethereum is the second most known coin to just someone on the street.
Yeah.
So I think
it's not so totally about retail anymore, because the retail side of it, like even our we talk about option trading. Option trading is such a small niche of trading.
Yeah.
I think retail they're already in. The next step is like what he says, the FOMO bid of $1 billion from Bezos into one thing, or Elon buys $1 billion of whatever coin, and that thing just.
I do think on the ETH side, though, applications being built on Ethereum and the use cases that will exist within the financial system, we're just barely scratching the surface in terms of participation, right? You look at the most recent Robinhood announcement, and this follows Coinbase with their base L2, Kraken, OKX. I believe other companies will launch their own blockchain networks.
Base rolls up into Ethereum.
That's right.
Yeah.
And so what you're seeing is all of these companies are building on Ethereum.
Yeah.
There are other chains that have fantastic use cases. High performance will be used for X, Y, and Z. But what you're objectively seeing today is that most of these companies are building on Ethereum to start with. Maybe these things are interoperable over time, but I think that's pretty bullish for ETH over the long term.
Yeah. And like you said, if ETH catches up just a little bit to Bitcoin dominance, and take some of that dominance from Bitcoin, it could be a multiplication of that price point.
Yeah, I think just to kind of throw out arbitrary levels, is ETH a $1 trillion ecosystem, right?
That'd be what?
Can you get there? Yeah, I mean, it's let's see what I've got. Coin market cap, ETH market cap is 305 million at the current price.
So you seven and change, 7 to 8. K would make it $1 trillion.
Yeah. Do you see $10,000 ETH?
Yeah.
Does it stay there? I don't know, but we're talking about $100,000 Bitcoin, where that wasn't anything that you could fathom at one point in time. And so we've seen.
Well, $1 trillion has become much lesser.
Sure.
Over the last year, everything is like $100 billion. Like you look at like these like Palantir is a perfect example. Over the last 6 months, it's gone up $200 billion. It's just like these numbers have gotten just so banana land that $1 trillion doesn't even seem like that much anymore. It's just like one other company, half the S&P.
Well, and if that's
$1 trillion in 5-10 years.
If that's a function of currency debasement, money printing, zero interest rate policy, and you believe that that's all going to continue, your cheeseburger might cost $60, but your ETH is 12,000, your Bitcoin's 500,000, right? Your dollar, you can look at the Venezuelan stock market. The dollar might not be worth anything, and that's not what we're calling for, obviously. But if you're pricing this in fiat currency and the fiat currency
goes up,
sure,
the asset goes up.
Yeah, and that's really if we believe that inflation is going to continue, sitting in cash is not the answer, obviously. So it's you have to be involved in something if you're trying to offset it. And historically, Bitcoin has been a strong performer, although it is volatile, or at least it used to be volatile. It will be volatile again, all kidding aside. But a couple questions in YouTube chat.
Yep.
Can Ethereum keep up with transaction volume versus Solana? Lower fees for the enterprise level stable coins like JP Morgan, Walmart. What's your take on that?
Are those going to be on Solana? Are those?
I don't know. I haven't seen. I know that JP Morgan has obviously been involved with their own blockchain.
Love that flip flop. They've gone from it's fake and it's the worst thing ever to it's great to now we're actually building on it. Surprise.
Yeah, I don't see. I don't know. I suppose it depends on the use case. If you're trying to settle high frequency trading transactions, ETH isn't going to do it for you. Solana makes sense, or something else down the road. I don't know. But if you're looking at this as a security layer, which I think you should for applications, and you have layer 2s that scale that right, you have sequencers which are going to be able to process all of these transactions on a layer 2, batch them all together, and ultimately settle that transaction and pay a fee to do that on Ethereum, then Ethereum itself doesn't have to be, when we talk about the L1, I don't think it has to be the fastest chain on the block. It's going to improve over time. There are Ethereum improvement proposals. There are upgrades that are happening every single year, as we've seen. And so there will be advancements. That technology, I would argue, is likely to evolve. Sitting here today and trying to argue over which chain is the best, I think is it's not really, I think, a valuable exercise. I think that's how early it is. Maybe some of this stuff doesn't exist. I don't know, but I think there's a paradigm shift underway where you're going to see the convergence of blockchain technology and a lot of the ways that we kind of work in the world. The financial system is probably the best place to start. But I think that this probably expands beyond finance. That said, I don't think ETH is the chain that would be, again, settling like high frequency trading in that sense. But you're seeing it as the chain that's securitizing the most value here today. And I think that you're going to continue to see more applications built on top of it because it is a little bit more decentralized than some of the other solutions that kind of give up some of that decentralization for the higher performance elements.
And really, I think another way to put that is like picking the right chain now is hard. But I think something we can all agree on is the future of money transfer is instant regardless of what you're using. Venmo, Chase, and I think that could bring us that whatever happens in the crypto space will be one of the catalysts, in my opinion, of getting us closer to that.
Yeah.
Because like the 3-day delay, it's like that's so 20 years ago.
Wire checks.
Yeah.
Checks are still around.
Yeah, I think that changes. I think, I guess it depends on your timeline. Do you see a higher degree of self-sovereignty, right? Do we still see the existing constructs and structures that exist today in another 25, 50 years? I don't know. We know that AI is only going to grow and expand. It's very difficult to predict what happens in 1 year, let alone 5 years. I think you can try to get the direction right and you can survive when you can identify the paradigm shifts. But to pick, one over the other based on what might happen in the next few years, it's challenging. And maybe there are people that can get that right. I think you want to own, in my opinion, a little bit of each one, right? You want crypto in the portfolio, first of all, in my opinion. And then you want to diversify across those positions. You don't just want to own Bitcoin, and you don't just want to own ETH or a smart contract chain. You want to own a bit of this, and that price will kind of give you a pretty good indication over time as well.
We have a battle in the YouTube chat between Takutsu and Gapper.
I love a good battle.
XRP that's why we love XRP, the bridge between fiat and blockchain. Gapper says negative, XRP is junk. What is your
He's also said 1% chance of eating 10K. So
I wish I had
the zeros.
I don't have all the answers. I think this is similar to who's going to win every technology battle / advancement between the existing companies, Apple, Amazon, Google, Microsoft. Maybe they all play a role. I don't own any XRP. It's not because I don't like the token. I just don't own any. I've had positions in Solana, in Ethereum, in Bitcoin, and a couple of other things. We're going to spend some more time on XRP. We're going to talk about it as well this evening on the Tasty Crypto Show with Katie.
Sweet.
But yeah, maybe there are use cases that emerge, and there's a great reason for a trading firm to settle and to use XRP. There's the cross-border payment side of it. Maybe that makes sense. Maybe someone else is building on this chain or that chain. Tough to say, honestly.
Are there any new coins coming to the platform coming soon? Any new developments in?
Yeah, we're hoping to get more.
Or anything else that you're excited about in the Tasty crypto world?
We're hoping to get more coins here this month. I've got to check in on that actually, but there were another 10 or so that were slated, and these are tokens like some of the L2s, Optimism, Arbitrum, some DeFi governance or utility tokens, things like Uniswap, a few other memes that we can quickly make available. So we'll let everybody know once we're a little bit closer there. we've hit on this a little bit, but stablecoin support coming very, very soon, coming this month. Team has just been absolutely heads down, working on this to deliver as quickly as possible. So we're hoping mid-month you'll be able to deposit on a variety of different chains and
withdraw too, right?
Eventually at the end of the month. So deposits first, and then withdrawals are coming. All this month though, 4 different tokens: so USDC, USDT, PayPal stablecoin, and the Ripple Ledger US dollar. So XRP, Ripple, however you want to think about it, the stablecoin there. Would imagine that expands over time as well. But definitely a big step for Tasty Trade in that direction, which I'm excited about. Beyond that, a couple other things that are in the works, recurring purchases. So if you want to set up the ability to buy 50, 100 or $1 million, whatever your preference is of
1 million would
1 million
Bitcoin.
daily.
Yeah, so if you want to put in your recurring purchases there, and then you're going to very soon see a lot of updates to the mobile app. The order ticket, going to make that a lot easier, obviously. It can get into a better spot. Got a lot more data coming to the platform. Hopefully some features that'll help people find trade ideas and surface more tokens that are moving as we expand on that list, right? If all of a sudden you have a list of 50 different tokens, it's tough to kind of understand what's going on. So you'll see we'll pull some of what we've discussed and presented on the show here into the app and really trying to build on that experience and really make it best in class.
Fantastic.
Love it. Love it, love it. Yeah, market's still down 60, Bitcoin down 2K. Nothing on the tariff front has really changed other than the letters to Japan and South Korea.
He did post the letters, by the way. So
see, you wanted to see the letters. Here's the letters.
Thank God that he posted these because I can't wait to read these.
Print them off first and then read them.
Yeah, they're on Truth Social though, so you got to go through the dark web to find them or wherever.
You don't have a Truth Social account?
I do not, no.
And that's where the alpha is,
No,
man.
Twitter is enough. I'm not doing the Blue Sky. I'm not doing the Truth.
Okay.
I'm not sending truths or whatever they call them on Blue Sky. I got enough. The doom scrolling is enough on Twitter.
Apparently there's a press conference in 1 minute live from the White House. If you want to find somewhere on the interwebs to watch that, I'm sure you can. But yeah, we'll see how this shakes out. We also have CPI, PPI this week, but I mean, the market itself, SPX, not giving us too much of an expected move. 80 points, just jumped up a little bit. 80 points through the end of the week. So we'll see. We shall see. Thanks for tuning in, though. If you have any further questions, you can find us on the Twitters. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Ryan's at Ryan Fred Grace. And give Tasty Crypto a follow as well. I got the Tasty Crypto newsletter pinned to the top of the YouTube chat. So sign up for that for free. And yeah, we've got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
right, Tom. All right, Tony. All right, Jamal. Do you remember the first trade that you ever placed in your life?
The first trade I ever executed as a customer, I bought 2 puts in McDermott, which was an oil and gas company. First trade I ever did when I was on the trading floor was I bought a one lot of calls in National Semiconductor and sold them at teeny higher.
My first trade ever. Now, you're asking me this without any time to prepare, but my first trade ever was in a stock called Superior Oil, and the gentleman who traded with me, his name was Tonto. T-O-N was his acronym. He was a broker, and he gave me a teeny, a 16th, $6.25 on a trade. Tonto was the first guy who ever made a trade with me.
First trade I ever made was a stock trade. I bought a natural gas stock. So this was like 2005. And the crazy part about it is this was during around the time of Hurricane Katrina. And so after buying that, the natural gas stocks went crazy. I was immediately hooked, immediately.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
We are back. It's Monday, July 7th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, Trump's got a new game, or should I say an old game, he's playing again at the start of this week.
Welcome the new boss, just as bad as the old boss.
Oh, I was going to say that too.
At least if you're a U.S. trading partner. Yeah, this is not great. Not great. Not great if you're Korea. Not great if you're Japan. Wait, are these important geopolitical partners for the United States? Right. We're trying to contain China, aren't we?
That's apparently what we're trying to do. Whether or not we're actually going to achieve that is a different story. Trump did indeed begin to send out letters today at noon Eastern regarding the tariffs that will be implemented on August 1st if there are no deals in place. So July 9th deadline doesn't really mean anything.
Right.
But the letters are going out. And to Truth Social, if you head over there, you'll find that Donald Trump has indeed posted letters for Japan and South Korea, implementing 25% tariffs effective August 1st. The market's not exactly a fan of said news. So we got past the bill last week, and now we turn our attention back to tariffs again. Whether or not he follows through is a different story. Ilya, you and I didn't have a chance to meet last Friday because, of course, it was Independence Day here in the United States, so markets were closed. Typically on the Friday episode of Futures Power Hour, we like to look at the calendar for the week ahead. So I figure that we do that at the start of this show because we're going to be spending more than enough time talking things that are unrelated to the calendar. A brief reprieve, or at least note here, we do have the bond treasury auction schedule correct this week. Apologies again for last week. 3-year, 10-year, 30-year note auctions coming up shortly around the corner. And I keep looking at this for the month of June, and there it is for July. July 8th, 9th, 10th, 3s, 10s, and 30s So just keep in mind for that on the bond side of things. That sets up an interesting set of circumstances, Ilya, because we do have the FOMC meeting minutes on Wednesday.
Yes.
There has been, of course, tacit talk that we could potentially get a July rate cut. For those that didn't see the non-farm payrolls report on Friday, it did come in a little bit better than expected. And the knock-on effect has been a market that's pricing in reduced odds of that July cut from about 19% down to 4.65% here at the start of trading today, or rather this week. Is there anything? This looks like a fairly light calendar outside of the FOMC meeting minutes, so maybe we didn't miss anything on Friday by not covering it for the week ahead. But are we really just honed in on what the FOMC says Wednesday, these Treasury auctions, how the market's digesting the tariff news in context of Powell saying he can't cut as long as the tariff uncertainty remains?
I think that's really the main kind of disconnect in markets that we're watching now. And whether it's the FOMC minutes or whether it's sort of how the atmospherics work out themselves in the wake of this NFP report, because the NFP report was, in fact, more eventful than one might have suspected, and in an interesting sort of way. I was looking for it to be eventful in that U.S. economic data, in particular having to do with the labor market, has been disappointing. And this was a report that not only edged out expectations, not by a huge amount, but edged them out on the headline. This was also, very interestingly, a report where the revisions came in a little bit interesting. The preceding 2 months here were revised down by 95,000 jobs. And that's, by the way, with the actual month-on-month revision being positive. So this was a very interesting report. May was revised a little bit higher, but over 2 months, lower by 95K, which is quite a miss if you take all of that together and you go, okay, well, so was this a good report? We beat by a sliver.
37K, yeah.
But you weigh that against a 95% or a 95K 2 month revision, and you go, wait, so we ended up with net 60-odd thousand fewer jobs than we thought. So is this good news? Is this Fed isn't going to cut news? Strange. The unemployment rate went down unexpectedly. That was a fun little twist on the whole thing.
But because labor force participation dropped unexpectedly.
But it's because labor force participation dropped, so it's not really a decline in the
falling for the wrong reason.
Right.
Yeah.
And so you look at the market response and you go, well, what have people come away with here? Less tightening? Why? Or less easing, rather? Why? Which part of this report suggests that the urgency that the bond market has been screaming about is any less urgent, whereas the dithering at the Fed makes any more sense? So this, I think, is the main disconnect. And whether it's the FOMC minutes where the message is probably going to be familiar, we're not cutting because tariff uncertainty, we don't know which way to jump. We've heard this since at least March. So we're going to know what that sounds like. Is it going to be that? Or is it going to be the markets kind of getting into what is now the second half narrative? Is it the economy is running a little bit warm, the Fed is not going to do anything, and this is fine because as long as the economy is running a little bit warm, why do we need stimulus? Or is it what the bond market has been saying basically since April? Inflation is not the real concern. Break-even rates are down. The market is saying the Fed is going to do 117 basis points in rate cuts between now and the end of next year to the Fed's 75. That's over by at least one cut, more like two. So I'm tempted, and looking at the bond market today, this point doesn't hold up great, but I'm tempted to look at this and say, there is a reason why the stock market doesn't like this. There is a reason why when you look at the bond market, they've been screaming at the Fed to cut for a while, and they think they're going to have to do more. It's interesting to me that the bond market this week kicks off with a jump in yields. But it's tempting to say that at the end of last week, we had a really low liquidity environment and the market didn't really know what to do with itself. And so much of what we see this week isn't going to be so much about this piece of data or that piece of data. It's going to be about liquidity coming back. And the anchoring for what the second half of the year is going to be, what the main story is going to be, really start to take shape. And the laying out of capital, the balancing of portfolios for what people think the rest of the year is going to look like, to really start to take shape. I wonder if that doesn't ultimately mean that some of these moves that we're seeing today and some of the lead-in from last week doesn't end up looking kind of ridiculous.
Well, the end of last week, we get a basically good news is good news reaction to non-farm payrolls, which that was expected, I think, right? Yeah. Personally, leaning long deltas into non-farm payrolls, if it's a good report, it's going to give you a bounce because the market's viewing things through the lens that with which we talked about at the start of last week. So just to recap, in the first quarter, the S&P 500 fell by more than 8% from high to low at one point, only to finish the first half of the year green. That was only the 9th time that had occurred in history. The other 8 times, the only 2 times in which the rest of the year didn't finish green were 2 years marred by recession, 1957 and 1990. Okay, so no recession in the second half of the year. All other occurrences where you get that kind of V-shaped bottom before you reach the halfway point, they are consistent with a much bigger rally that unfolds. So what do we see for non-farm payrolls last week? We want good economic data. We want good news because it means recession's not happening. And superficially, you get this report that, Ilya, I think you broke down neatly there. It's a little hollow. It's a nice top-line figure on the beat, but with the revisions and why the unemployment rate declines, there's clearly something lacking there.
Yeah.
The NASDAQ is able to push over 23,000. So for the position that I had been nursing for the better part of the past month or so since the beginning of June, the long 23, short 23,500 call spread, once we crossed 23,000, I got out. I saw no reason to be in it going into a holiday weekend. It was posted to the Tasty Live follow feed, so perhaps people caught that on Thursday morning. But I just didn't see a reason to stay long here. And so serendipitously, we have this news that Trump is thinking about putting back on these tariffs. The first question I think a lot of people are going to ask themselves today is this another Trump chickening out moment? Now, I'm not going to say taco trade because I would never do such a thing. Particularly
Don't go demand.
Yeah, exactly. We're not going to do that. But the fact that this is an August 1st deadline now and not a July 9th one suggests that they understand, the administration understands that these policies would be negative and destructive in some form or fashion. And so perhaps this is a kick in the pants to get something across the finish line. You can see the dip buyers are perhaps interested in coming out to play today because while volatility is up over the course of the session, has it really done anything substantial since we opened? I mean, we gap open higher, right? We're 20 cents higher than where we gapped open right now. We had a little bit of spike when the letters were released, and I'm sure we're going to have more letters released now as we pay attention to the Truth Social feed. But is this worth getting bent out of shape for right now? Ilya, maybe this timeline, my whole idea was that the market would go up, we'd rally through July, you think about getting some bearish exposure on the other side of August 12th because the Fed can't come save you during the Jackson Hole month. Maybe this thing's kicking off a little bit earlier, but I'm currently neutral, nothing flat here in terms of equities at the moment. I'm waiting to see how this shakes out. Do you think this is an echo of March? Is this early April? Or is this where we were in May, where these tariff threats are just threats that ultimately are never realized?
I think the tariff threats may not be realized, but the vulnerability in markets, I think, is at this point less about the tariff threats per se. I mean, obviously, we're seeing something of a knee-jerk reaction today. But if you had to if you had to make of this year a movie in two parts, then sort of season one or episode one was, okay, let's see how this new administration is going to go. Oh no, the rollout of their policy is chaotic. Oh no, business and consumer confidence don't like it a lot. That's a growth risk. And then you sort of get into the Liberation Day crescendo in the arc, and the story becomes, oh, they blinked. They are amenable to market discipline. This is, in fact, step back from the precipice of utter chaos in the 11th hour. And so you get a sentiment recovery. One of my go-tos watching all of this has been that stocks were falling with break-even rates, which are the inflation expectations baked into the bond market through the growth scare. And then from April onward, stocks rebounded, but break-even rates didn't. They've diverged. That is to say, the market's assessment of the actual underlying economy hasn't changed. The growth risk is just anchored where it was near peak holy moly in early April. But sentiment in the stock market has clearly recovered around this idea that no, the administration does not intend to purposely take apart the dollar-based and the U.S. Treasury-based financial order that has existed basically since World War II. And so you look at this then and say, all right, the sentiment part of the story is over. We had the scare. Sentiment has recovered. We're basically back to the starting line. We're essentially where we were when the year began, give or take some index points on the S&P. Okay, now what? Well, now I think you get back to a conversation about growth. And so I think these tariff headlines might be good for a day or two, but now that we have a sense of what the intent of the administration is, you get the sense that they're going to, at the 11th hour, find a way. And as long as they do that, the real question is, what's the economy really doing? And the bond market has been saying since April, hey, listen, the economy has slowed meaningfully since the second half of last year. And what you need to be doing is cutting rates because the business cycle has already turned. Nobody's screaming recession, rightly so. Growth is positive.
But there's deceleration in the data.
There's clear deceleration. It's just like obvious and plain to see.
I pointed out here in the two GDP trackers that I like to follow from the Fed because historically, particularly post-COVID, the Atlanta Fed has been the most accurate in my estimate. New York Fed is close second. A lot of the other ones have been just so wacky. Like the St. Louis Fed one has been wrong directionally and by order of magnitude, it seems. Yeah. But when you look to the Atlanta Fed GDP Now growth tracker, we were at 4.6% and change back near the start of June. Directionally growth accelerating. You can see it's been cooling off. And then the New York Fed Nowcast, which really didn't get as excited as the Atlanta Fed one, it's been much more modest and it's push higher in growth here at the start of June. It's actually showing a much sharper deceleration now as we make our way through the second quarter. And we realize the data that's been released. Now, granted, we're not going to have that GDP report for the second quarter until a little over 2 weeks' time. So there's still some ground to cover here. But we're now in the territory where, not this week necessarily, but next week, you really look at these GDP trackers and you say, okay, this is probably where we're, in the ballpark for Q2 growth, just like it was for Q1 when you could see that it was going to be perhaps in negative territory, even accounting for the gold import estimate changes. But Ilya, narrative aside here, right? Because if this is all just a stick, the carrot hasn't worked. The 90-day pause carrot hasn't worked. So Trump needs to take out the 25% tariff stick. have we seen any significant technical damage here yet? Right? It is still pretty cheap, and the expression goes, buy flood insurance when it's dry outside, not when it starts to rain. We've used that here a number of times on the show, right? If you're going to get downside protection, don't do it when the VIX is 50. Do it when the VIX is below 20. Okay, so we see this uptrend here. 1 week moving average is holding in ES. 1 week moving average and NQ, also holding, right? So we have a small pullback. They are inside days. Volatility is up a touch. There hasn't been a real significant loss or breakdown of momentum. And even in the Russell, which is up by 1.26%, that brings us back down to the 1 week moving average, something that we haven't closed below since June 17th? June 17th? Not even. No, it hasn't been there. We have to go all the way back here to April 23rd. Okay, I'm just looking at that 1 month moving average now. There are a few things in play right here, Ilya, where if this is just a bluff, and I think a lot of people are going to think it's a bluff, first blush, I'm sure we could see a little bit of a pickup here. August 12th to me is the one that sticks out, though, because it's the China one. And if he's willing to do this with Japan and Korea, two of our trading partners that we are heavily reliant on for a number of things, vehicles, machinery, plastics, electrical equipment, those positions a little bit further out here for the S&P all of a sudden don't seem so ridiculous to get some downside protection.
Yeah.
Just to keep it in our pocket.
Well, take a look at, let's say, a 4-hour chart of this same ESU5 contract, and you start to see a little bit of a different picture. You start to see some real pressure on the underside of this most recent congestion range. It would not be at all a stretch to see this break today. Now, is that going to necessarily find follow through? Maybe not. Maybe it's a little bit flimsy. But what you certainly see, name an index. Is it ES? Is it NASDAQ? Is it Russell? When you look at momentum studies, you look at, name your oscillator. It doesn't much matter. You're starting to see fading momentum at these highs. It's the most obvious when you look at, let's say, 8-hour, 4-hour charts. So it's not quite showing up in dailies yet, and that tells you it's early days yet. So if you were going to be buying protection, if you said, you know what, 14 IV is real cheap, I can lay on a real nice risk reward put vertical here, just straight up buying puts. And it's not going to be very expensive. And if it works, the risk reward can probably be better than 2 to 1 with vol this cheap. Why would I not do that? Especially if I have a core long position. Now, I don't have a core long position, but for some really sort of longer term, expiring at the end of the year, call options outside of the U.S., mainly in Brazil. But if you had core exposure, long ES, and you liked that, and that was your opinion, and you thought the trend is still good, when vol is this cheap, yeah, maybe you take a loss on these verticals. But at the very least, if something goes completely haywire on you, the early stages of a move where you'd be unwinding your core position, you'd be covered, at least to some extent. So it seems like the prudent thing, especially if you are generally long.
Not related to the equities here before we go over to bonds, but I did see just a note come across the wire. The U.S. Treasury is experiencing a technical issue with the 13-week and 26-week bill auctions. That's not going to I don't think that's going to have any significant impact on the market, but just keep an eye on that here. It's 60 to 69 right now for the S&P 500. It seems like this is an area where the market would find some support if it's going to. Otherwise, breaking down from here, Ilya, as you know, that wouldn't be a shock. We found resistance at the end of June and early July, right around 22,900 in NQ and starting to pull back. If so, that puts support closer to 22,350 again, which we think about the range that we were in for basically the entire month of June, or at least 3 weeks of it, where it was 21,600 up to about 22,350. And that becomes support. The Russell's a little bit of a different cookie here because it has crumbled a little bit more than everything else, down 1.35%. That puts the recent range top closer to 2210 on an intraday basis, so perhaps another percent lower here, and you find some support. I'm personally going to wait before I re-up exposure in either NQ or RTY. I'd like to see how this shakes out. A small flush wouldn't be the worst thing in the world, given how strong July is. And like the way that this market is set up and the way that the sentiment has been behaving, which I'm, remiss to say that unfortunately the CFTC does not work on July 4th Independence Day, and so they did not produce a positioning update for us. That's coming out today at 3:30 Eastern, 2:30 Central. So at least we'll have something to talk about on overtime, Ilya, with respect to how positioning in the market changed. But right now, a little bit of a drop here, given the fact that this is a market that's still very much in chase mode. July gives you that push higher. You can trade it long tactically for the next few weeks still, and likewise talk out of both sides of your mouth where you think August gets a little bit messier when people go on vacation and the junior traders run things. As how many summers in a row have we seen late July into August into September just been a really messy period for the market? So
well, and this is sort of when you were talking earlier about, is this more like May? Is this more like March? Is this more like April? It's probably more like this time last year. Where we had a growth scare and a reluctant Fed, and as you
got a 50 basis point cut in September.
Yeah, as you got into the summer months, the markets went, whoa, off the rails. You guys got to go, and then the Fed goes, okay.
That's not what you want.
Then they go big, and the market goes, oh, too much, and you get a rebound aggressively in the other direction. For what it's worth, I've started to nibble long on the U.S. dollar because I think there's some weirdness afoot here.
Well, before we head off into the bond market here, just a quick look at the sector breakdowns. Basically, everything's red today. Only 2 are in the green, 1 is neutral. GDXJ is up by 0.25%. GDX is unched. XLU is up by 0.09. Everything else is red across the board. A lot of it's related to materials, mining, metals, commodities. On the growth side of things, even seeing construction rate-sensitive items with yields moving up today. Those are getting hit decent, right? Home construction is down 1.61% here. That's no good. I do think we should turn our attention here to bonds, though, because we talk about home construction being down, potentially dragging down the broader indices. Bonds don't like trade wars, and they don't like these deficits, which Trump signed the bill on Friday. It's going to increase our debt and deficits. It's the bottom 80% of income earners are going to see a tax hike. The top 20% of income earners are going to see a tax cut. That's just the math. And so the bond market here is looking at everything and saying, well, that's a quick trip from 116 down to 113 here, Ilya. I had abandoned my short
move today.
No, we see here that you got this very interesting evening star candlestick cluster last week where you got the green bar doji after the breakout and then back into the consolidation. Now below the 1 month and also below the 50-day. So a potential
here today.
Yeah, this isn't a very fun place to be right now. But when it comes to notes and bonds, I think the broader perspective is, at least for notes, we're back close to the 50% mark of the year low high trading range. I mean, this has been the trade that we've been tilting on for the past several weeks. And this price action we've seen over the past week or two, it's great. We're back to the midpoint. So I still have long deltas on in ZB. It hasn't been fun the past few days, but they are out of the money calls. So it's structured in a function where it's very risk defined and high convexity. So if they lose, it's a small loss. This is still short iron condor. And even with today's news, I think really the important point here throughout all this, when we had the trade war tilting up last time, right, end of February into March, end of March into April, you had these big swells in volatility down here, right? IVRs start creeping up. That's not happening today. Volatility is actually in. So, before we
IVR is only 8.8 here.
I think that's really the key observation. If this was really like, oh, the market has totally misread the tariffs wrong and the taco trade is dead, I'm not calling it that. Didn't hear it from me. But if the market was really of the mindset that like we're going back into sell America, it would be dollar down, stocks down, bonds down, gold up. And gold is up by 0.03%. Notes are off by 7.5 ticks.
And frankly, gold's been having a bad day. This sort of unched adjacent performance for gold, that's a rebound after a significant sell-off overnight. So gold's not exactly screaming sell America. Neither is the dollar, which is up pretty much across the board.
Right. And this week with these treasury auctions, 3s, 10s, and 30s, Tuesday, Wednesday, Thursday, the FOMC meeting minutes on Wednesday, maybe it's not that the Fed is going to tell us that they're likely or unlikely to cut in July. It's the fact that the lens that they're providing us is that as long as the noise remains, it's too loud for them to cut. Yeah. And what does today's news do? Does it make them more likely or less likely to cut? Less likely to cut. Is that good for bonds at the long end of the curve? It should be good. So you could see how if today's news is just like carrot stick kind of behavior from Trump, 90-day pause is ending. You guys now have a final clock before 25% tariffs kick into place. Please get a deal done. Bonds probably don't stay down that long. So I'm not going to fade the move lower yet. I'm going to layer into a new long delta position in ZB, but not here, not today. Maybe by the end of the week. Right. Maybe get us down to 111 or so, but not at this level. But directionally neutral in ZN notes has worked, still works. I think it will continue to work. The trade makes sense. It's like a 3-to-1 risk to reward right now. I'm in the 109, 108, 114, 115 again. It's a little bit wider today, but if you were to just pinch this in a bit, you could get something in the neighborhood of like risking 3 to make 1 in that classic 60 to 70% probability of profit. And the bet is that you're not breaking the yearly high low, which has worked. So keep tilting on it.
Yeah, I mean, I got out of my my call vertical here. It had some nice P&L to it. I didn't think there was any reason to sit in it. I am still bullish bonds. So much like what you're describing, I'm expecting to layer this back on once some of this fuzz starts to clear away. And I think it will ultimately resolve that what this is a pullback in an uptrend that's developing rather than something that is a more meaningful reversal. But I'm not going to sit around and find out. I'm going to let the price action tell me. So if the price action wants to do this right here, I'm not going to stand in its way. I'm going to let it find wherever it's going. And when it does, I'm going to be looking to be a buyer. But what I'm not looking to do is get long yields. That is to say, to become a seller of bonds, because very clearly the bond market is telling you in its pricing for policy, in its pricing for inflation, that that's just not the path of least resistance. And whatever fuzz this is more retracement than trend development.
Curiously, this pullback in notes and bonds has coincided directly with basically 80% of a cut through the end of next year coming off the board over the month of July. So something to keep in mind right now. Better economic data, pushing back the Fed's cuts. Is that instructive for the stock market? I think so. Haven't we learned the last few years that a Fed that can't cut because of good economic data is not a problem for stocks? So when we think about what happened on Friday, rate cut odds go down, bond yields are up, but stocks do trade higher. Of course, we're now reintroducing this tariff noise, and granted, the jobs report was probably hollow. But you can see this dynamic at work right now. So if there's, looking for contemporary evidence in real time that this theory is perhaps the way the market's viewing things, good data, bad for bonds, good for stocks, that's a normal world. You introduce tariffs, it adds a layer of ugh. But last week, when you had rate cut odds going down, the stock market wasn't suffering. And I think that's an instructive lens. But beyond that, Ilya, the volatility here is really lacking. I don't think that's worth dismissing. It's a 14.1 IVR. We talk about where volatility was, say, back in April when we were trading at we're at what, 113.08. I mean, those were the days when you had IVRs up north of 100. So I think it's just important to contextualize this here. Selling puts at 113 in ZB back in April was a very different risk to reward than doing it right now when volatility has not surged and you are just starting to see signs of that technical breakdown coming into play, right? We talk about that evening star. That evening star now produces a break of the uptrend from the May and June swing lows. It gives you a break of the 1 week, 1 month, and 50-day moving averages. No one be a hero, catch a falling knife. That's not my view. Right, I'm not going to jump in today.
No, I don't think today's the day. I think the bias holds, and now you just wait. You just let it tell you where the time is.
Right, and just as a point of
really
just
quick,
real quick,
a factoid from our friend of the show, Mr. Daniel Charts Dubrovsky. He did a great study on the jobs report on Friday and found that 90% of the jobs increase came from only two sectors, government and healthcare. Government was 73K, healthcare was 58.6K. Whereas white collar jobs were actually down.
You know what's funny about the education number? You know what's funny about the education number? It's largely skewed because the way that the accounting around teachers is interesting when it comes to job numbers. And so because there were a number of states around the country that had inclement weather over the winter, their school years were extended a little bit longer. So teachers who would have otherwise been getting off of payrolls because of summer break were technically still on it. And
that's how you end up with the government jump?
That's part of the reason why you see the jump in government jobs, because at the state level, teachers were employed a little bit longer than they would have otherwise been in normal years. So again, is that like a good reason why the number beats? Because of like an accounting quirk with the reporting window, which is always the 12th, the week that has the 12th of the month in it for non-farm payrolls.
Yeah. Not great.
Talking about the risk to reward about ZB, right? If you're looking at a 150 plus IVR, right? The peak was a 154.03963. All right. It's a different endeavor if you're selling an out of the money put that's, well, we just had this big spike low. I can go a little bit more out of the money and cover myself. Here at 109, the yearly low, if I wanted to bracket trade a short put spread around there, it's 46 days to expiration. Yeah, it's an 84% probability of profit, but the risk to reward here isn't great. And so pulling this back into a territory where you're talking about getting within 60 to 70%, only going 1 point wide, you're doing the 111, 112, and 111, 112. Yeah, that's an interesting point to work around. Okay, we do have like a base here that forms after we break the wedge. We never really get back down below 111.5. I could work with that. That's a little bit more appealing, but you're still catching a falling knife. So how about this, Ilya? My view for the next few days, I'm going to put this in my watch list, the 111, 112 with 46 days to expiration. I'm going to go down to this 4-hour time frame here. I'm going to want to see signs of momentum turning. Okay, clearly not turning just yet. Stochastics are oversold. MACD's now trending lower in its bearish territory. But if we were to see signs of momentum break and turn higher, okay, going into that 111, 112 short put spread, maybe this is the moment to try to put it on. Just not right now.
Yep.
Okay.
Yeah.
Gold, silver. I think that's where we want to go next because metals don't like slower growth implications, particularly copper, silver. Gold, consistent with GDX and GDXJ being positive, or at least not as down on the day. Gold is having a bit of a moment here the last few hours, pulling back up. Ilya, where are we in the gold trade? Is it March, where when the tariff headlines are raging and percolating on approach to the April 2nd deadline, gold rips from 29.50 up towards 3,200? Or are we more in the April 2nd to April 9th window where gold gets absolutely slugged, keeping in mind that volatility has gone absolutely nowhere today?
It's an interesting sort of setup here for gold, right? Because you end up with this situation where gold vol has been easing, and my exposure has been to sell puts and to get long that way. So I'm not terribly put out by the fact that it hasn't gone anywhere because the vol has come down. And that's sort of been the idea. So it's working-ish, but it's also not going anywhere. And I think you have a little bit of a conflict that emerges for gold, and sort of part of the reason why I'm suspect of what bonds are doing here today. We have today a higher dollar and higher yields. What could possibly be more akin to kryptonite for gold markets? And yet it isn't selling off. In fact, it tried, and the attempt was readily aborted. So this seems like an interesting tell about whether, when you look at the bond market, you're actually seeing what you think you're seeing. Because it's the bond market that's kind of out of step. Stronger dollar, weaker stocks, gold rebounding off the lows. It's all kind of risk-offish in the classic sense. Higher yields kind of clash with the whole thing. So let's see how this goes. But I'm not prepared to jettison my gold exposure. It should be down today. I should be annoyed. It isn't down. On a strong dollar, higher yields day. This is not a market that wants to fall. At least not yet.
I think that's a really good observation because gold in other currency terms actually is perking up right now. Like gold in euro terms is up by 0.46% on the day. Gold in yen terms is up by 0.98%. Gold's actually doing quite well, all things considered. Up versus the Australian dollar, 0.72%, versus the British pound, up 0.2%. So gold has just gotten back into positive territory today, in part because it was such a strong dollar session. But yields are on their lows. Excuse me. Bonds are on their lows. Yields are on their highs, and gold is now crossed in a positive. Feels like I've seen this story before, and that story says, we did this around these levels last week or a week and a half ago, where we got long around 35.50 or 33.50, and then the market flushed. But during that flush, it gave us this very handsome, rectangle, gave us this very handsome morning star candlestick cluster-ish type of thing to get us back into the 1 week into the 50. And then we've been pinning there. I don't know. This kind of feels like a hold. It's not quite the beautiful hold that you had here in April or in May, where you never crossed those thresholds. But then again, you did with the 1 month for a few days in both occurrences.
Yeah.
I don't know. I feel like I made a mistake getting out of the long gold swing trade here. We'll go back in.
You do have an opportunity, nevertheless, obviously, because you're still locked up in this range. So you could get a clean signal here, and then rather than saying, you know what, I shouldn't have gotten out, but my best risk-reward hope here is to get to something like, 34.30 to 34.40. Instead, get a little confirmation and start looking for a much larger swing, saying, okay, well, I've paid for certainty, but now my ambitions are to see a much more substantive rally. So it's not necessarily like all is lost here. I'm constantly battling with my own instinct to look at a market that's run some way further than I thought and to say, well, I can't buy this now. It's too far gone. There's always more to go. Just because something has moved doesn't mean it's not going to keep going. There's a good risk reward opportunity somewhere. Just a matter of how you structure it.
Silver today was down big earlier, but it's coming back as well. It's only up by 0.4%. That's a nice long lower wick. Earlier today, it looked like it could have been a key reversal. Technically speaking, a key reversal is where the current candlestick moves above the prior candlestick high and then closes below the prior candlestick low at the top of a trend. And for the sake of conversation, this was at a relative high, pretty darn close to where we were in the middle of June. So key reversal, bearish engulfing, however you want to paint it, that would have been below 36.57 today, and we're now back to 36.92.5. The bounce, if you notice here, very squint, that wick comes right up against the 1 month, which the 1 month here in recent sessions, we have not been able to put a close below there. It's been a point of notation, and it's pulling us up through the former October and March swing highs. It looks like resistance becomes support. It's not a head and shoulders pattern up here, just left shoulder, head, right shoulder with a bigger right shoulder than the left shoulder. That's not it. That's just not how they look. So I'm still leaning long here. I still like silver. I think that the upside has some potential to it. The vol's really cheap at 24.6. But you know what the most beautiful thing about this is? When we look at that 4-hour time frame once more and we see how we're showing resiliency above former resistance becomes support, you know the volatility is starting to tick up here? That has been the precursor for silver. Exactly. As we're coiling, the spring is compressing right now for silver up here. The volatility is increasing. It's getting ready to break out. I think it's going to break out to the upside.
Maybe. That would be relatively consistent with the gold-silver ratio having coiled up too. We've seen gold significantly outperform. We're kind of back to below 91 on the gold-silver ratio, so we're basically back to a kind of neutral-ish from the past, let's say, year and a half, going back to maybe the beginning of last year. But markets don't tend to hang out at the midpoint. They tend to overshoot. So if you were going to see an overshoot here, the path of least resistance may well be silver outperforms. And that, by the way, doesn't mean that I'm jumping in long silver. I'm not. But I'm staying long gold, and I would not be surprised if both of these things move, because both of them are, again, holding up better than you would expect. For silver, it's doubly interesting because it tends to be sensitive to what stocks are doing, at least in part. And there, it's a triple score against it. Stocks are down. Dollar is up. Yields are up. Silver is rebounding off the lows with emphasis. How? Why? This is not a market that wants to go down. So I can see how you would have a parallel rally in gold and silver, but where silver goes faster.
Copper price is back to an interesting level today. The closing high post-Liberation Day comes here on June 5th at 4.9830. Today's low comes in at 4.9825. The 1 month moving average is 4.9924. So there's a bit of support in play here right now for copper. Ilya, it's a 39.4 IVR. Before we turn into energy, give me a 10-second. Is this a place where you sell puts down here, as one Mr. Westwater was talking to me about today, or is this the uptrend about to break?
I don't think we know whether the uptrend is going to break here or not, but also we don't know that it isn't. And so if you want it to be a vol seller, maybe, but I would not be taking a directional bet here. If I'm doing anything, it's directionally neutral, as covered as possibly can be. That isn't my way of trading, so I'm not doing anything here.
What would we have to do to get something directionally neutral here in copper? Let's go to the 5.5, 540, and pull you in to say 470, 460. 470, 460, 540. So basically, you could do something directionally neutral around these levels, which would effectively be the June 13th swing low, right? So the June lows aren't broken, nor do we see the highs cleared out from late March. There is a trade in there around the technical levels. It's only a 50% probability of profit. You're risking 5 to make 7, right? A little over 1,000, 1,400. It's something to work with. It's not for me, but I get if people look at that 39.4 IVR and say, I don't want to fade like we've seen in the past. Do I want to sell calls in silver here as vol's rising? I think that I will never put that gun to my own head. It just, right? Just look at the past 2 years. It's been a very difficult trade to make work. You've had to get very lucky doing that. So I will not sell silver calls or gold calls when vol is low. In this case, copper, Ilya, when we were gearing up for April 2nd, what was copper doing? This is a commodity where we consume, about 800,000 more tons than we produce annually. Okay, so if we're putting tariffs in place, but we're not doing world-ending tariffs, we're just raising prices on stuff. And that has been good for copper in the past. When it's world-ending level of tariffs, copper really hit the fan in early April.
Yeah.
Energy zigging and zagging before we turn over to FX. I know that you want to talk the dollar today a bit. Quickly on crude, there's talk of OPEC increasing production again by 400,000 something barrels, 411,000 barrels or so. Oil prices, they start the day lower, they come back in, and they cover the gap. That's interesting. But that's how it was in March, mind you. It wasn't until you get to the April 2nd tariffs and it looks like the world is going to grind to a sudden stop that oil really gets hit hard. When we do have the tariff talk going out through March and the teasing, oil prices, they did inch up throughout. It was a slow, steady rise, but it still gave you about $4 or $5 from low to high during that bit of a trend. So, the fact that oil's a bit weaker today and bouncing back, I think that's kind of consistent with what we've seen in the past. Yeah. As for me, right, still short iron condor. We're near the 50% mark of the April low, of the June high. I don't see a reason to get off that shtick right now, considering there was no good reason to get off of it on Wednesday or Thursday last week. And we're at the same price.
I don't have exposure here at this point. Obviously, I traded the vol contraction off the Israel, Iran, U.S. kerfuffle right alongside. I think you and I basically put our trades on within maybe hours of each other that Monday. It's a good move. It ran its course. I'm looking to see what the refocusing on economic growth is going to mean for this, because if the bond market is right, then we should be seeing a break lower just around demand, just straight up demand. This doesn't look like it cares very much about OPEC, rightfully so. So there's a gap down. We fill it. We don't do anything. Ultimately, we don't go anywhere. Ultimately, that is the correct response to anything OPEC Plus says, which is to say, oh, they were talking, whatever. They don't matter. And so I think as you look at this, for me, I'm waiting for something directional. I'm biased lower, but I don't have any confirmation to actually make that into a trade at the moment. I have been getting a little bit more constructive on kind of proxies for industrial metals countries-wise. So looking at Latin America much more, but that's more like a hold for a year flyer kind of an idea, rather than a 45 days in, 21 days out. It's not a trading vehicle. It's more like a thematic bet.
I just saw a Wall Street Journal headline that Trump's officially extending the deadline from July 9th to August 1st. August 1st. The pause on reciprocal tariffs has been extended to August 1st. So July 9th doesn't mean anything anymore.
And the letters are clearly like, won't you please strike a deal with us? We're gonna posture really hard, but also like take a step back and retreat. It's like that guy who wants to start a bar fight with you and is constantly jumping back at his friends, going, "Hold me back, hold me back," and they're not doing anything. Starts to look like that.
Natural gas here continues to loiter around a deciding line for me personally. 3.4 is the bottom side of the range here in NGQ5. I'm still nursing some short put spreads against here, which aren't suffering terribly, all things considered. I think they're like about $60, like 6 cents on them. So I'm going to just ride them for a little bit here. If we close below 340, I'm out. That's the same view from last week. Volatility is decent, 44.3 IVR. So at least it's something to do that seemingly unrelated to trade. Although, remember, the tariffs go into effect in April. And oh my gosh, we're going to stop trade. We're going to flood the domestic market with our LNG. That's going to crush prices here in the U.S. Oh, tariffs are off? Okay. Well, tariffs coming into purview again, and natural gas prices, they're lower. Dollar gains for now. It's not exactly a sell America day, and I think that's one of the important observations for today's bit of action. Yes. Although I will tell you, as someone who just absolutely loathes the Japanese yen at this point in his life, and because that big position, right? We're going to see what happened in the recent week when the yen was rallying, if more people got net long. But I'm leaning short because this thing is as stretched as we've ever seen in its history. Okay. So getting long the 0068 put spreads last week, right around there, is now worked out very neatly the last 2 sessions, taking the rally. Higher yields, weaker yen. Higher oil prices, weaker yen. I see it's working out very nicely. Will this become something that we have to reconsider if we go into an April 2nd type of spiral? Yeah, because the yen walloped the dollar there in early April.
Yeah.
Something to consider. Although when you think about the stories of Japanese funds blowing up and you think, okay, hold on, treasuries melt down and then the yen goes up, these funds are repatriating yen. They were levered long treasuries. They had to get out of the market. Funds blew up, get the money back home, selling the treasuries, converting the dollars back into yen. Oh, okay, maybe that's not a function or factor this time around, Ilya. You have a British pound view, though, I believe. Are you still?
I do, and also euro, and now also Aussie.
We've got
all of them
30 seconds here, so go through it quickly. And we'll cover it on overtime later.
I've started to buy dollars. Is the short story here, and I was a little bit earlier than was ideal, but I think the pound was the early tell. That's been working for a bit here. I've been holding it for a little bit now. I'm long the dollar against the Aussie just overnight because the Aussie looked like it broke down overnight. The euro is starting to break down. I've sold some of it. It's an interesting story that's developing here where ostensibly it looks like yields up, dollar up. The bond market is still questioning whether we're actually going to get fewer cuts. It looks like they're still calling for more. So the bond market reaction seems incongruous again, and you get this idea that you're maybe going into risk aversion classic here. And
we're going to go into that later, though, because we're ready. Yes. We're out of the time now on the clock. Ilya, calendar for tomorrow, not a big deal at all for the U.S., so nothing to pay attention to. We'll be back later for overtime, though, 4 Eastern, 3 Central, right after last call. After this, we do have some segments coming up here. Skinning out options, abstract applications, followed by market measures. Be sure to stay tuned, take a quick break, and come back to Tasty Live.
Tomas, we are back, my friend. You know what that means? Nothing says Monday like this, man. Dr. Jim in the house of scan options, abstract applications. How are you, Dr. Jim?
Man, I'm well. You know, we were just talking about before the break. So, Tom, when you hired me back in late 2015, I said, okay, man, like, let's do this. I mean, you kept calling, and I wasn't really sure. And I finally said, all right, man, let's do this. But look, here's what I'm going to need. I'm going to need you to bring in a makeup team in studio in 2016. And I got to hand it to you. Like, you made it happen. And so we had the makeup crew there. It was nice, man. I appreciate that.
I'll get you a makeup team, all right? Don't you worry about it. You just sit there, look pretty, then we'll see what we can do.
Well, I mean, they're the ones that told me back in the day. They were like, listen, you would look so nice with long hair. Like the short hair, you're really rocking it. But if you really grow this thing out, like it's gonna be next level.
Well, we have
like a chia pet.
Like a pet rock. Yeah.
Like a pet rock, yeah.
Usually we get our interns from a lot of really good schools around the country, but this summer we have an intern from the cosmetology school in Chicago, and just to work on you.
Is she coming to Boston? Because, hey, Boston is Sunday. This Sunday, we are going to Boston Sunday night. You can still register, tastylive.com/events. Totally free. Tom, it's a good day to be alive, man.
Where is the event? Where is the event in Boston? Do you know?
I think it's the Sinclair. I'm not 100% sure.
Oh my God! It's a week away, and he doesn't know where it is. Tom, this is not. He's not going to get there.
Brittany's going to be there, Tony. Brittany's going to be there. Don't worry about it.
The Sinclair.
There you go.
I don't know that place, but I'm sure Bostonians do. Do you have your food plans for Boston? Are you Red Soxing it? What are you doing?
Well, so my flight, I'm going to try to catch the game Saturday, but I don't know because of my flight. And it's not a night game. If it was a night game, it would not be a problem, but it's like an afternoon game.
Oh.
So I don't, with when I land and stuff, I'm not sure. It's going to be kind of a last second decision. But food wise,
with the stealth way you move through the airport, Dr. Jim,
I'll make it. No, you're right.
You'll make it. No problem.
You'll make it.
No problem.
I'll be early. I'll be in my seat.
Right.
It is probably.
Don't change in the airport. Change on the plane bathroom. It'll save you some time.
And Logan is about the closest airport to downtown of any city in America. It's literally like, I don't know, like 2, 3, 4 miles. It's nothing.
So Logan to Fenway is how long?
Ooh, it depends. It's Saturday, right? So I don't think the traffic will be that bad.
Saturday.
You're talking best maybe 15, 20 minutes. I think you can do it.
Really? Oh,
yeah.
Okay. Well, I have to go to the hotel first because, again, the makeup crew that you promised me should be waiting for me at the hotel. So I'm going to go to the hotel first, and then I might try to catch the game. But food-wise, the only place I want to go, do you remember when we were there in 2017, there was this pastry shop called Mike's something or other.
Yeah, we went there.
Yeah. Me and Brittany went.
It was
and we
cannoli
stood in
shop.
It was a cannoli shop.
But it was way more than cannolis.
No.
They had cookies and cake.
Tomas, we are back, my friend. You know what that means? Time for a little bit of a market measure. Even the S&P is making their first four-handle move. They're down 28 and change. Apple, after opening closer to 212 and climbing to 216, is back near 212 again. So I don't know if that was one of the higher stocks for the day. That's why I mentioned it. Tesla holding steady, down just about 21.
Yeah, the Tesla Strangle we sold this morning has come in 40 cents.
It's not bad for a guy like you.
Not bad at all. We'll take it.
You probably should.
We have a few short deltas here today. I came in a little bit short NASDAQ, covered some of the futures, still short some NASDAQ. I don't know. Got a little short on
NASDAQ's
Friday.
the weakest of the group by a slight margin. It looks like they're really having a big tug of war here.
Yeah. The only thing we're off on is bonds. They're weak.
Yeah, bonds near their lows, 113.21.
Other than that, not much. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks for spending your morning with us. Thanks for spending your Monday with us. We'll be here all week. We started the shows last night, Victor, myself, and Ilya on the Sunday night show, and now we've got 5 full days, and we're here all week. We're not on the road. I think we're on the road the following. Let's see. Yes, we will be on the road the following week. We'll be in Denver. So a week from this Friday, the Bat and I will be in Denver, and really looking forward to it. So that's July 25th. We'll be in Denver, Colorado at the Summit Theater. So that's our next road show, and looking forward to seeing everybody out in Denver. It is not too late to sign up. tastylive.com/events. tastylive.com/events. So the Bat and I will be in Denver, and we can't wait. And then, of course, Dr. Jim's got his show this Sunday at the Sinclair in Harvard Square, in Cambridge, in Boston. And if you're, so we're covering at least 2 different parts of the country in the next 2 weeks, which is good stuff. And if you can make it to Dr. Jim's show, I strongly recommend. And if you can't make it to ours, Dr. Jim's is at 5, doors open at 5 o'clock at night. Our doors open at 8 o'clock in the morning on a Friday. We'll be back at work at 11. All you Denverites, you can't be telling me you want to go see the Rockies play. That's not an excuse. I watched.
No, it's not an excuse for sure.
Oof, that team is brutal. Brutal. I was surprised how many fans showed up. I got to give them credit. Those Denver fans, they came out on a nice Sunday to support their team. Man, that team's bad. Even though they won yesterday, it's bad.
They're not fair weather fans like the rest of us.
Fair weather fans. 6 million people in Chicago and the 1,800 of you, blah, blah, blah. Going back to the greatest rant of all time. Anyway, we got a market measure today. It's a tough one. So you got to get your helmet on for this one.
Okie dokie.
We are going to be covering skew. Gotta love a little skew.
Skew you, Sosnoff.
Yeah, skew you. Skew means sometimes if you look at like the SPY and you go to the at the money and you go, let's say $10 away on each side or $20 away on each side from the at the money, and you look at the strikes and you say, why are the puts like twice as expensive as the calls? And you're like, why is that? That's called skew. That's because the market prices what we call the velocity of risk into option prices. And then you look at some crazy stock, like you might look at PLTR as an example, and you might say in Palantir, why are the calls so much more expensive than the equidistant puts? That's called call skew. Right. So the indexes have put skew, some options have call skew. You'll look at something like a commodity like crude oil, and you'll say, why are the calls so much more expensive than the puts? It's called call skew. And then you'll look at the NASDAQ.
Equal distance away from the stock is the point you're
right.
making.
Then you look at the NASDAQ and you go, why are the puts so much more expensive than the calls? And that's how the marketplace adjusts for what it believes to be the velocity of risk. It's a perception. It's not, it's just how the market prices in the speed of movement. Let's go to the next slide. So we know that equity indexes, which is where our focus is going to be today, have one of the most put skewed option chains on the market due to the nature of the downside velocity of risk. We also know that equity indexes generally have a strong inverse correlation with their implied volatility for the same reason. So what that means is if implied volatility is high, equity indexes go low, right? And if implied volatility is low, like it is now, equity indexes generally go high, right? So they have an inverse correlation. High volatility, low price, low volatility, high price, right? All right.
Yep.
Just so
that's the way it should work.
Just so we're all kind of on the same page. Let's go to the next slide. So next, is there a relationship between an underlying price and its implied volatility correlation with the underlying's direction of skew? Does that make sense to you? Is there a relationship?
Yeah, so they're looking at the underlying price, meaning higher or lower price versus IV correlation with the underlying direction of skew, call versus put. I imagine there has to be. Wouldn't you agree, Saz? I mean, if you have a lower price stock, are they doing like a sub $50 stock versus a $500 stock, that kind of thing?
I think what they're asking here is a little bit different. Is there a relationship between the price of a stock, let's say, and the implied volatility's correlation with the underlying direction of skew? So, so does skew impact price, basically? We're going to take a look.
Okay.
Now, this is a very hard graph for me to read because I can't see the, let me see something if I can blow this up. Hold on one second.
So they're looking at the graph there, Sosnoff, to try to look at I'll read it to you. The price movement for each underline under different movements. So they're looking at UNG as the first one, the Qs as the second one, Tesla the third one, IWM, TLT, Amazon. The big one is gold, and that's a plus. That's a under 1%, over 1% move, gold, USO and SPY. So it looks like gold is the most volatile that I can see here, with probably one of the lower IV ranks too.
And based on, and really based on this, on my trading this year of all these different products, I would argue that this is pretty accurate because of all the different underlyings we traded this year. I feel like gold was the most difficult to fence in.
So it has like the biggest daily 1% type moves. Like you look at Tesla has the most 5% moves. That's the red line.
Yeah.
So in gold you have relatively low commodity monthly implied volatility. Forget about IV rank for a moment, but big 1% moves just about every day. Where Tesla, you have high monthly implied volatility, but much larger moves on a daily basis. Pretty interesting kind of look here. And then SPY is all the way at the end.
Yeah, and if you traded gold this year, or if you traded bonds also, because bonds are the same thing, kind of same thing. But gold really more so than anything else, it was really a tough trade because you can handle a few outlier moves, but every single day this thing felt like it was a 1% move at least, with volatility that didn't justify that size move. Let's go to the next slide.
Yep.
So we did a study and we looked at the SPY Qs, IWM, Amazon, Tesla, TLT, USO, UNG, and gold. Everything that was on that last chart. We computed the last 6 months from January 2025 to present, and we looked at the correlation between price changes and how the implied volatility changed. So, for example, if implied volatility goes down, does price go up or down? Correlations, positive or negative, but greater than 0.5, imply a measurable relationship between price and implied volatility. We recorded current price ratio of a 16 delta call and a 16 delta put in the August cycle. A ratio greater than 1.2 implies put skew, like in the SPY. A ratio of less than 0.8 implies call skew, which I'm guessing would be USO, UNG, GLD, and maybe Amazon. Maybe Tesla too, I'm not sure. Tesla probably a little less so. So a ratio of 1.0 implies little to no skew. Okay, so if we're gonna look at this thing, we're gonna say that just on the basis here, SPYs, Qs, IWM probably all have put skew. I'm gonna guess that USO, UNG, and GLD all have call skew. And Amazon, Tesla, and maybe TLT are probably somewhere in the middle, but let's take a look. Let's go to the next slide. So the underlyings with strong negative correlation all show put skew. And so that is the SPYs, Qs, and IWM. You can see it down below, 0.9, 0.87, 0.85. The underlyings with weak negative or positive correlations all showed no significant skew. So that's gold, UNG, and USO, and TLT, just like I said. And then the ones kind of in the middle were Amazon and Tesla, which I guess probably doesn't surprise. Not much of a surprise there, right?
No, not much of a surprise. They are who we thought they were.
Yeah, and that just so all we wanted to do was show you how accurate kind of that whole line of thinking is. You know, that where you think there's call skew, there's call skew. Where you think there's put skew, there's put skew. And where you're a little unsure, there's probably no skew at all, or closer to no skew. Let's go to the next slide. Currently, it is difficult to find an underlying with a strong and positive correlation to its implied volatility. So it is difficult to prove if strong and positive correlations would imply call skew. That's the issue with Amazon and Tesla. However, for underlyings with weak price implied volatility correlations, there's virtually no skew. That was UNG and gold and bonds. Let's go to the last slide. Like I said, this is a little heavy, but it really does a good job of explaining, you know, how skew can be so different in two different underlyings in the same ecosystem, in the same environment. For an underlying with strong and negative correlation to its implied volatility, it seems the inverse relationship would imply put skew for that underlying, S&Ps, QQQ, IWM. However, for an underlying that has a weak correlation with its implied volatility, there is also insignificant option skew. This would imply a symmetrical volatility of risk, which would be something like a Tesla, for example, in this example, like an Amazon.
Very good, my friend. Good job out of you. Good job out of the team. And you know who's going to do a great job? That's right, my friend and yours, Mr. Scott Sheridan, coming in. It's immediately following these short messages from our sponsor, Tasty Live. We'll be back in 90 seconds. Peace. Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&P is down 17 handles, Sadnov, 63.07, 62.90 to 63.15 last night. They're actually a little bit lower than that on Thursday when they gave back most of the move today that we had, and now they're giving back about half of the move, a little bit less. NASDAQ down 105, Russell down 11, Dow down 45, and volatility up by 23 cents. You can see volatility over 19 at one point, 1910, now 1863. Bonds are the big mover to the downside, down 12 ticks to 113.28. Oil trading up 31 cents near the higher end of its range, or right now on the high end of its range for the day. Gold down 22 off of its lows, flirted with 3,300. It's 33.19. Silver down 56 That's a bigger mover on a percentage basis, just about 2-to-1 versus gold. Corn lower after the bat tweeted out a picture of corn being almost 6 feet high, Sosnoff, when I was in my travels, saying short corn. Hope you got that. Corn down almost 3%. It's supposed to be knee-high by the 4th of July, which I found out is really as high as an elephant's eye, which means corn is really the height it's supposed to be, which means my picture meant nothing, but I was lucky.
Okay. Whatever all that means. Let's take a look and see. We're running late. Let's see what we got here. Monday.
But then I'm long-winded all the time.
Monday, July 7th. Let's see. Confirm and send. When determining the notional value of your positions, how do you account for positions with naked calls? Those have a theoretical unlimited risk. So how do you account for them if you're trying to figure out notional value?
That's a great question. I mean, listen, we figure out notional value for pairs trades. I typically don't use notional value on a position. I use the buying power of that position to quantify my risk. I mean, I guess you can look at it as 30 shares of stock if you're short a 30 delta option, but you know, I think it's a futile effort. I don't know what the cause or effect would be of knowing that number.
I mean, in a perfect world, if you needed to figure out notional value, in a perfect world, you would convert the delta of the option position into shares, just like Tony said, and you would come up with some number. That's a perfect world. In a more general world, you just take if you're short calls, you just count it as being short 100 shares. If you're long calls, you know, well, he says naked calls. So if you're long calls, you just count as being long 100 shares. And if you're for each call, and if you're short, you just say you're short 100 shares for each call that you're short. The perfect way is
Have you ever gone through the notional value of your portfolio?
No.
Okay.
No. But the perfect way to do it is to basically just multiply out the deltas. But if you want to do it a different way, no problem. Then just count each call as 100 shares. Let's go to the next slide. There's no perfect way for that. Are there advantages to declaring myself a professional trader?
You know what? I've never done it since I was a market maker. There are some tax advantages to them. I'm not an accountant. I don't know them, so please, this is all old information that I'm spewing out here. There are some tax advantages to it, but there's some disadvantages too. Like your quotes aren't free that you get. You got to declare other things. To me, I've never done it.
Yeah, you know, the advantage is that you get to, if you do it before the end of the year, you get to, if you're professional, you get to mark your positions to market, which is a little, which potentially could be advantageous for you for tax reasons. The negative side is, like Tony said, first of all, you open yourself up to potentially being subject to audit if you're truly not a professional trader and you have other businesses or other things going on in your life. On the negative side, you will have to pay for professional fees because you don't get free data when you're a professional. That's an exchange rule. That's not a tasty rule. So that's an exchange rule. On the positive side, if you're a professional, you'll be able to write off certain expenses, like, you know, maybe building an office in your house or something like that. You know, certain expenses you get to write off. So the positive side is write-offs and mark to market. The negative side is higher fees and then opening yourself up to potentially, you know, some form of audit.
Mm-hmm.
We're not saying it's good or bad. We don't do it. Let's go to the next slide.
That's all I can tell you is what I do.
Earnings season is coming up soon. With volatility this low, what are your thoughts on trading earnings with low volatility?
Carefully, if at all. You know, between the two of us, Tom does a lot more of it than I do. So I would look for a little bit more of a directional bias and probably smaller positions.
You know, this is a tough one because earnings season always pumps a little vol in, gets us excited about binary moves. There's more stuff to do. That's the good side. The bad side is with volatility low, man, earnings are so hard. They're just so hard. With volatility high, earnings are a little easier. With volatility low, earnings are just so hard. Just my thoughts are going to be to trade them. We will trade earnings for sure, but we will trade them much smaller this time. Much smaller. Unless something pops in volatility between now and then. I can't say.
Sure. I mean, markets move, right? I mean, things change. What you anticipate today might not necessarily be what you get when you want to do this, right?
Yeah, 2 weeks from now, it could be completely different. Let's go next slide.
Sure.
Do you normally recenter by just rolling the untested side or by rolling both strikes? If you roll both strikes, would you still do that if you had to pay a small debit?
I mean, I'm normally recentering, especially my first move on a strangle, which is assuming this is what we're talking about here, is always to move the untested side and not move both strikes. And I reduce my delta by 50% of the overall position. Now, if I'm rolling both strikes, which I have done and do usually closer to 21 days, or if I've rolled up the untested side all the way to a straddle, or I'm about to go into a straddle, which is being short the same 2 strikes instead of being short 2 out of the money options, then I definitely will roll to a different strike, new strikes, both sides. And I don't care if it's a debit. It's always going to be a debit when you do that.
Yeah, when you buy the guts and sell the wings, you're always going to pay a debit. And it doesn't matter how big your debit is. It just matters that you're also selling some premium.
You're left with another strangle, which means you're left with short premium, right?
Yeah, right. So it doesn't matter how big your debit is. Forget about debit and credit in that case. If you're recentering by just rolling the untested side, which means you're just rolling up or down, you're rolling up puts or down calls, that's totally fine. Those are always going to be for credits. When you're rolling one side, it's always a credit. When you're rolling both sides, it's always a debit. We're indifferent. If we're too close at the money, we'll roll both sides and widen them out. If we still have some room to play, we'll just roll the untested side. It doesn't really matter. This morning, I've done absolutely both. I've rolled up, out, sideways to the next month. I've rolled one side. I've rolled both sides. I've done it all on different underlyings. So, and only with futures
all
options.
Before 8 a.m., Sosnoff. Look at you.
All before 8 a.m. Yeah, we've made, only 13 trades so far this morning, but they're all adjustments or a few opening trades, but that's it. Yeah, so we don't care. So if it's one side, credit. If it's both sides, debit. But when they get too close at the money, we'll widen them out. Let's go to the next slide. This person writes, I've started selling covered calls against my long-term QQQ position. Lately, with the market rallying, I keep having to close them at a loss. He's talking about just the calls. I'm unsure how to think about this. On the one hand, my overall position is up, but I'm not sure if I should view the calls as a hedge or if I'm doing something wrong. Should I be adjusting my covered call strategy, or are these losses just part of the process?
They're not losses. I mean, you sold a call, you bought stock, you had long delta. If you're doing it the way that we do it, you're selling the 30 delta call, you had 70 long deltas instead of naked long 100 long deltas. You benefited when the market went sideways to lower. You benefited when volatility contracted. You didn't benefit when the stock went through your strike price, which is the best thing that can happen to you. I know it's better if it happens later than earlier. And you could have definitely made more money if you were just naked long stock, but you did this because you wanted to have that theta decay in your position. So you should hope that this happens forever. I don't think you're doing anything wrong. I think you should stick with the strategy. And at market highs, it's probably prudent.
Yeah, I mean, that's the right answer. I mean, first of all, you're not closing anything at a loss. You're just... Right. You're just rolling the position.
It's the net position, not the...
Yeah, it's a net position. I mean, the way to think about this is, man, I'm good. I'm long stock, short some calls. So instead of being long 100 shares of stock, I'm long 70 or 65.
Wow, this is how Sosnoff must feel every day.
I mean, there's nothing better than this is, this is the best thing that could ever happen. Don't even, these losses are not, there's no losses here. Winning is part of the process. Yes.
Yeah.
You should not be. You should just keep doing what you're doing and hope it works forever. Trust me, you're going to feel a lot worse if your calls expire worthless. Trust me.
And you're rolling down.
And you're rolling
say,
down.
My covered call didn't help me enough.
Yeah, you're going to feel a lot worse. Let's go to the next slide. And the last one. I have been very fortunate in growing a small account into a larger account. However, as my account has increased in size, I find it increasingly difficult to move the needle. How do you balance staying small while achieving meaningful gains?
Yeah, I mean, one investor's floor is another investor's ceiling, but I get your quandary here. First of all, good job out of you for growing the account. Now, what do you have to do? Now you got to slowly, if you've already increased your directional bias by the strategies that you're using before you're increasing your contract size. Now it's time to increase contract size. I mean, that's what it comes down to. I mean, that's the only way to do it if you've already changed your strategies by having a higher probability of success and using more capital on those trades.
The way I thought about this one is, first of all, you're not fortunate, you're skilled. Growing a small account into a larger account is a skill. And that means you're doing something very right. But it is a lot harder to grow a small account into a large account than it is to scale a small account into a larger account. Like, you've tackled and you've been successful at the most difficult part of this business, which is growing a small account into a larger account. Once you do that, learning how to scale is just another skill set. And you've done the most difficult skill set. This is a much easier skill set because A, you're going to add more positions, and B, you're going to slightly increase size. It's not just about scaling number of contracts. It's also about putting on more positions. And for you to do both of those, it's relatively straightforward compared to what it takes to grow a small account into a larger account. So you're in the right direction. Just keep your head down. Keep going.
I like the way you worded that, Sadnov. I mean, you usually don't get those kinds of nuggets from you. You're usually a condescending prick, but that was really good and endearing. I like the new Sadnov. I like the change. We're going to take a quick 90-second break and come back. We got more Tasty Live. I'm going to even write that down, Sadnov. That's one I'm going to use in the future. We got more Tasty Live. That's right, with Oh Joy. Nothing says pre-Monday like this, man. Kai in the house. We'll be back in 90 seconds.
It's option. Jive.
That's right, Sadnov. It is an option jive. Nothing says pre-market Monday like this, man. Kai in the house. Kai, how are you, brother?
I'm doing great. How are you?
I'm doing wonderful. Thank you for asking. You got all your fingers? You good for the 4th of July? Okay, yeah. Beautiful. Beautiful. Yeah. Beautiful.
Just enjoy the chilling weather this morning. It's only 60,
It did go down from the 90s into the 60s yesterday.
My goodness, yeah.
Yeah. Mm-hmm.
Yeah.
It was hot. It was hot. I don't like sweating. It was hot.
You've never sweated a day in your life, Sadnov. Your hands are like butter. They're so soft and beautiful.
They are. And
so I have visitors from my mom's side of the family here in Chicago. We went up to 95, right? Somewhere between 91 and 95 for a week or so.
Yeah.
They said that was cool. That's fine. But we were living in Chicago for more than 11 years. I feel like a 90 and 95 is probably a little bit too high for me, but they're fine. They're like a 100 to 105.
Wow.
I was at the Cubs game and I was drenched in sweat just sitting there. I was very uncomfortable.
Yesterday?
No, Saturday.
Oh, Saturday was a little bit hot, yeah.
It was hot.
Oh,
Well, are you guys ready for the market?
I am. Let's go. The Weather Channel's over.
Cool. All right, so I add a little bit economic news for the past week and also the upcoming week, because right now we're kind of in between some transition and special period. Everything can be changed suddenly just based on certain news. So let's take a look at what happened last week in the market. So for the market, definitely the equity market, S&P 500 and NASDAQ kept going higher. They kept going, making new highs. Dow's only less than 1% away from the all-time highs. IWM Russell is a little bit far away. I didn't calculate, probably 2 or 3% away. But still very strong equity market. And a lot of the assets are start to move sideways with lower volatility. So the next main theme in the past week is the reduced volatility and the implied volatility. Yeah, for the macroeconomic news, definitely the Fridays, not Friday actually Thursday, we have better than expected job reports. Although it's still one of the weakest in the history, but it's better than expected. So what can you say? The market's still going higher.
Still going higher until Thursday, right? I mean, when the market was kind of closed there, we actually sold off a little bit. We've taken back half of that rally so far.
Right.
Yep.
And we had a Vietnam trade deal, so 20%, and originally it was 46%. And of course, the biggest one is the big beautiful bill passed, and it's adding $5 trillion to our debt ceiling. And nothing happened other than the bonds and the currency, as the equity market is still strong. Down probably 0.5%, less than that.
Yep.
And the upcoming week, definitely the most important thing. Can we go to the next slide? Is the deadline of 90-day tariff. It's Wednesday, July 9th. So let's see what's going to happen. Are you scale down your sizing in your portfolio, or how would you hedge against this?
Our positions are very small now based on implied volatility, not based on any news. We don't scale positions down based on potential economic reports or news, things like that. Those are already priced into the market. We only scale positions.
Actually, if you want to look at it, Sadnov, we, not inadvertently, but obviously inadvertently because volatility expands, we try to take advantage of that economic news with volatility contracting, right? After the event.
No, I understand that, but I'm saying we just do whatever the market gives us. We don't take into account like a July 9th deadline or a 10-year note auction. None of those are relevant to us because they're known, they're already priced in.
All right. So one quick question: did you add up a position right before the election? Because the implied volatility increased, but there are so many uncertainties. Did you?
We did increase our positions before the election because that's an opportunity. Just like Tony just said, that's an opportunity. Like a pop in implied volatility, we view as an opportunity, but a date doesn't mean anything to me.
But I remember the last time when Trump elected, the implied volatility was high, but the realized implied volatility was even higher the day after. To the downside.
Yeah, well, sometimes you will get, sometimes that'll happen. This particular time was the opposite.
Yep, exactly. Okay, so take a look at the what happened to the market from 4 indices. We definitely had another strong week. If we take a look at the next slide, So all the 4 indices is up somewhere between 1.8% to 3.6%. Still very, very strong. This leads to the next slide, and as the realized range is definitely higher than the expect trading range. Expect trading range is about 1.1%, and realized is definitely more than 2%. And today the implied volatility is slightly higher. It finished at 17.5. I think it started 18 or something this morning. It went up to 19 already. So the expect move up this week's 1.3%. I personally think that the realized range is definitely going to be higher than that, considering all of these things doesn't happen. What do you think? or it's going to be quiet? Oh, you don't care.
I mean, I don't care. I care that I assume that the market's going to be pretty accurate. I think if you were to look at anything on this slide and think that it's interesting, it would be more that the market went higher and the VIX is higher.
Volatility at 83 handle moves enough for the week, relatively low. I mean,
No, I'm not talking about that. I'm
Yeah.
saying the actual VIX number at the bottom. That's the only thing that stands out to me as interesting.
Yeah, but we had the roll in there, Sadnoff. You got $1 of carry or more. I mean, it's basically the same.
Oh, okay. I didn't realize that's different VIX then.
Well, I mean, a 40-year veteran of the trading world, you would think you'd be able to realize it. But you know what? I can send you a reminder. I know as you get on in age, things take a back seat to memory.
That would be interesting, except the roll wasn't last week. But nice try.
Well, the roll was the week before, and you've got a $1.50, 1,000 and change in premium between 1 month to the next, don't you? Oh, screw you! I'm going to look right now. Keep ahead.
Going. Go,
Keep
Kai.
talking.
He's out of his
Okay.
mind.
All right, next slide. Implied volatility rank. Following the week before, the implied volatility rank across the market actually decreased again. So S&P 500, Euro, and Bitcoin, I would consider they didn't even change. 11, 12, 1% is not changing. Bonds, gold, crude oil, the other assets actually kept going down. So right now, I think the market is going to wait and see. The implied volatility is not going to change that much, maybe increase a little bit tomorrow. But overall, the IVR is low right now.
Yep. Agreed.
Yep. Okay. So some major assets movement last week. The first one is S&P 500. NASDAQ kept going higher. So right now, let's go to the next slide. So right now, S&P 500 is 2.3% higher than February's high. And the NASDAQ's 3.3% higher than February's highs. That's actually very strong. Unlike the bonds, which didn't even change, this is pretty strong. Any comments?
No, I mean, the market's been crazy strong. Agreed.
And he's disappointed in his bond move right now.
And Japanese yen.
Disappointed in that too. Throw that
Japanese yen? No. That's fine.
Well, he's been doing good in the yen as of late.
It's fine, yeah, but it hasn't moved for a month or so, right?
Hasn't moved. It really hasn't moved all year.
Yeah.
All right, next slide. Something interesting is the discrepancy or the difference between implied volatility and historical or realized volatility actually is pretty high, right? Although we're trading, the slide. Yeah, although the VIX trading around 16, 17, right below the medium of the long term, but the difference between IV and HV is still high, which means the IV still overstated HV for pretty decent level. So right now the IV.
So what are some things that we know? We know that time will pass. We know that the hourglass will empty. We know that the calendar will march forward. So what do? We sell premium. We generate positive theta. We take the short side of the options contract. Before you ever think about generating returns, you need to control that risk. The returns will come. You need to make sure your risk is mitigated in the most efficient way possible. Now, the fun stuff. Let's talk about managing those winners, right? You have a long put spread on and the stock goes down. That's going to work out pretty well. You have a long call spread on and the stock goes up. That's also going to work.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tariffs are back and markets are responding in kind, at least at the moment. Who knows what it really all means? So we're going to talk about it here on today's show. Welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler. And I got my Monday guest back. Josh Fabian is in the house. What's up?
We're back. We're bad. You're black. I'm mad.
What's going on, man?
How was your weekend?
It was good. It was good. Always go for the last several years. We usually go to northern Wisconsin, hang out. Deer. Like, I mean, literally, from me to you, like, deer kind of come up to us. It's crazy.
Yeah.
Well, it's because my father-in-law feeds them.
Okay. Well, that makes sense. Yeah.
So he drops corn, and like he works this bagel shop. It's kind of his like post-retirement job, and so he like throws those type of things out in the field, and they just like kind of come up close. I mean, they won't come up. You can't pet them, but they will kind of come close. Like some of them are a little more adventurous than others. They'll come kind of close. Like that shows you how far. Like we're in the woods. It's cool though. It's good.
That's
time.
cool though.
Good time.
That's
we
cool.
usually go tubing down this one river, which we did. We didn't go to any of the 4th of July parades actually this year. We usually do, but we just had other stuff going on. But no, it was good, man. It's a good time. Hang out, get away. What about you? How was 4th?
I did a lot of manly stuff. I disassembled some bunk beds.
Disassemble number 5.
People are gonna have no idea. We already quoted 2 movies, and nobody's gonna know what we're talking about. I disassembled some bunk beds. I flipped over in my wheelchair. I'm really embarrassed. I mean, like, I'm so embarrassed that I did that.
I should laugh.
I mean, I was in the privacy of my own home, but like, I pride myself on being a professional.
Were the boys around, or you were by yourself?
Oh, the boys were around, and they came running because I started. Saying,
You're like, ah!
I started saying some words. And, are you okay? And I'm like, no, my pride's wounded. but yeah, I did that. Put together a desk. What else did I do? That was about it. I mean, it was just it's a lot of stuff around the house. So, and I was on vacation the week before that. So read a lot. So just getting back in the swing of things.
I did let off fireworks. I should have brought a video. I forgot. I wasn't thinking about it.
Fireworks?
Yeah. So it's because we're out there, and it's like, again, we got a lot of land, and we got some areas where it's not necessarily near trees. And they do have a thing not far from us. They always show like it's the Smokey the Bear thing, and it shows you like the
only you can prevent forest fires.
Exactly, only you. It's
just me.
They show you this thing where it depends on like how dry or things are.
Oh yeah.
You tell if it's high or low chance for fires. So it was low, so that usually determines how many fireworks we got. We got a couple. I have gotten to the point. So I don't know. Did you light fireworks off as a kid? Probably not here, right? Like not
like a little kid, like.
I mean, I grew up in Miami, and in Florida, I mean, there's really no fireworks rules. And in Miami, it didn't matter. I mean, it's whatever.
We would light firecrackers and throw them at each other. Actually, what we used to do is we take the gunpowder out and we make one giant one.
That sounds
and we
safe.
blow some stuff up.
So I remember, you remember the little rockets that you could light?
Yeah.
We'd have a bunch of those.
Okay.
We'd have a bunch of those, or like, the little like.
Yeah.
The little whatever they.
Oh yeah,
they things on they spin. Yeah.
Yeah.
We used to do those, but now in my older years, and now that we're there, I can get some bigger stuff. It's safer. I mean, it's they make a lot of these boxes now where you like basically have a box, you just light it. So we just we usually do those. So last couple of years I've gotten some, and they're like maybe this big. And it's you know what? I never really paid. I'm bringing this up because I honestly have never paid attention to the amount of powder in there. And they say it. So like those are like 200 grams of powder, right? And so I got a 500 one this year. Just one. It's pretty big. It's kind of cool. Again, it's a box. The reason why it's important it's a box is literally you just sit it down and it does what it does.
Who's the football player?
Pierre Paul, yeah.
Yeah, Pierre Paul, because every 4th of July I see it's like
I don't know how he did that. I don't know what he did. I don't remember the story, but dude, he
had his hand.
I mean,
wrapped
when I
around
tell
it. He
you,
had a fist.
this is what. So it's usually me and my youngest Austin. We literally, it's like this. It's like. Nah, dead serious. Like I don't mess around. I don't want any JPP. You know what I mean? Like I don't want to lose any.
I think if I remember,
you're not gonna see me on the show like this.
If I remember correctly, he had it in a fist.
That's
the only way you can really.
That's the only way I can imagine. No.
If I remember correctly from Armageddon, when they were explaining how to blow up the asteroid, imagine a firecracker going off with your fist in a fist, it blows it up. Now imagine your hand open. Nothing happens.
Yeah, right. So it was good, man. It was fun stuff.
That was cool.
I did. You know what? I had planned to like not look at markets, but I did kind of glance at them, and they were just drifting higher.
Yeah, it's been a slow, steady.
Last week.
Yeah, it's just been like this quiet, just up until today, of course.
Well, and you know what's funny though? I do have a couple of long delta things in the portfolio, but I do have this SPX put spread. I don't necessarily want this to happen, but I'm kind of glad this happens. I think this needs to happen. I think, like you said, we've been drifting higher for the most part in markets. You could call this, this down move as a result of, you have to say part of it is tariffs, because we were watching markets, they were down 23 to 25, and then the news came out about the first South Korea and Japan, and
Kazakhstan.
We dropped. You were the first one to know what happened. We're down 55 all of a sudden. So that's obviously part of it, but I also think some people are just taking the opportunity.
Some people are looking for a reason to take some profits.
Yes.
Because, what do you think explains the drift higher? Like, what changed to cause the drift higher? And then what would have changed to cause it? I just think this was profit taking, and the tariffs are may be a convenient excuse. Kazakhstan, really? Borat?
I know, right? I don't know.
What do we import? I really want to know. We got the chat open. If somebody would please tell me what we import from Kazakhstan, I'm genuinely
legit
curious.
asking.
Yeah, I really want to know.
If we could pull the platform up, I want to show this. So what explains the drift higher? Well, honestly, in my opinion, the drift higher started between these days right here. I know this is the area where I started. I think right here is where I decided to get long, 513.
Okay.
I think this was a CPI. I can't remember. We came in. I can't remember what it was. We came in this week. I'm sure CPI, given the dates, 12, 13. It's usually when we have it. It was somewhere in this week. I don't remember if it started on that Monday. But the point being, once it started going, it gained momentum, and it is what it is. And we started the further away we got from Liberation Day, people were less concerned about tariffs. And as I know, like once bullishness starts, bullishness begets bullishness, right. And that's what really happened. And this was the late stages of it right here. So you could arguably say this is the late stages of the bull run, and now we're going to either chop or maybe have some pullback.
Yeah. And I think the other thing we were talking about just before we came on air is this week, the calendar, there's nothing. There's no earnings. There's no economic stuff that's really all that important. And those are the weeks when something unforeseen that might normally, like if this had happened on a heavy earnings week, this just gets dusted off.
Yeah.
Nobody cares. But it's one of these weeks where there's nothing going on, and all of a sudden, little tiny news thing that normally would be ignored has a sizable impact. And
look
weeks
at
like
the
this scare me. Weeks when there's nothing on the calendar scare me more than the weeks that are packed.
Yeah, look at the volume. We're not even at 1 million contracts, and we're almost at 2 p.m. Central, 3 p.m. Eastern. So that tells you everything. Like, it's pretty low volume.
Quiet.
You talk about, nothing. We talked about, like, essentially not much going on this week. Prior to today, everybody was basically waiting on Wednesday, right? July 9th.
Yeah.
That was supposed to be, okay, that's D-Day for what's going to happen with the tariff. Well, that already started getting... I don't necessarily know if they've gotten pushed out. I know they said to August 1st, right? I think that's
said August 1st, but then he gave the numbers. It's like
I don't know.
Pick a
Doesn't
deadline.
that kind of make you feel like all of it's kind of bullshit when you say there's this one date, but I don't know if we're going to extend it or what we're going to do. That's been the talk, right? Yes. And then now it's been extended, but you're still throwing out numbers. These are the numbers that you're going to potentially get if you don't come.
If you don't come to us by the next day, if we don't change it by then, and we don't reduce the numbers or increase.
So to that point, and I think we both sat here like, why are we down 50 something?
In the wording we've decided to allow you to do business with us.
I'm gonna use that at home. I'm gonna use that in like regular life.
Stay in my home.
Yeah, I'm gonna use that in regular life somehow. No, I've decided to allow you to give me $1 million. That's cool. I'm gonna let you.
So it's hard to anticipate the impact that stuff could potentially have because
I don't know what we get from Kazakhstan.
Kazakhstan.
Whatever it is.
Anybody figure out what we get?
Borat.
Oil and minerals?
Oil and minerals. That sounds like something you could say for anything.
Yeah, well, okay, I'll take that. Though.
What makes your skin look so good? Oil and minerals. What did you eat today? Oil and minerals. What do we get from
oil and
Kazakhstan?
minerals.
Oil and minerals.
I'm still gonna say that Borat. And I understand he's not from it. Like I get who he actually is.
What are you talking about? He is from there.
Yeah. Okay. But just the concept is probably the best export we've ever gotten.
Yeah, I'm on the one hand, I'm a little surprised that we're dropping this much on tariff news, but at the same time, I welcome it.
I use a shopping cart analogy for days like this. Like light volume is like an empty shopping cart. It's really easy to push it around, right? So price moves pretty easily. You fill up that shopping cart with a lot of volume, it's a little bit more difficult to move that thing around. And I think that's kind of what you're seeing today. It's a light shopping cart. You get the tariff thing. And all of a sudden, boom, we had dropped, 70 something points, I think the lowest. I can't really see my screen because my glasses are really dirty. You can't tell that. I don't feel like cleaning them.
You've worked on this shopping cart theory for a while.
I've been using this for a long time.
Practice this in the mirror, haven't you?
I've been using this for a long time. I've got a couple that I can fall back on. That's one of them. Yeah.
Yeah, it's you know what? I will say this. One of the things that gold did turn around. Yeah. This is the dangerous thing about markets. Sometimes I believe you think that there's a playbook, right? Like sometimes it feels like there's a playbook. As soon as the market drops on tariff news, we see the dollar jump. I guess bonds have dropped in the past. Yeah, bonds did drop before. Bonds drop. Gold and silver outperform. Oil.
Dollar gave back some of its gains too.
Yeah, it's not, the playbook is not exact, right? And so that's my point of dangerous, is because if you think that these tariffs are going to affect the market again the way they did in April, you would just try to put all those trades on, right? You'll just get short SPUs, you'll get long volatility, you'll get short bonds. I don't know if I want to get short bonds here, but again, that would be the playbook, and I just don't feel the need to do that. So,
no. If anything, I want to get long bonds. If they get into that 112 handle.
Yeah, I'm already long. So I was long some in July. I think I had to change that trade. I'm long the 115, 118, applied those today. 115, 118 in September. I figure at the very least, damn, did I mess this up though? I mean, I may have. When is that September meeting? Oh no, that's good. No. I'm long the September 26th expiration. September Fed meeting is on September 17th. That makes me feel good. So at the very least, maybe something could happen in between now and again, even though I don't think the Fed's going to cut. But
I don't think
as long as the market thinks it's going to cut, that's all that matters to me. That's all that matters in my bond position. So
and the Fed's not going to cut based on what we're seeing in the bond market today.
Yeah. I saw somebody put something on Twitter that I thought was kind of, it didn't make sense to me. Dare I say it might be dumb. He said if they had any sense in the government, they would just push the timeline for tariffs out to October. That way, what did he say? I think he said like late October. That way it would encompass two Fed meetings, and the Fed couldn't say that there's inflation tariff that they're worried about. But that doesn't make sense, because as long as there's a deadline.
Yes, then there's a concern. Yeah, and I get it. I mean, you can't realistically expect the Fed to take a position when there is that uncertainty out there.
No.
And it's a giant uncertainty. Whether you agree with the idea of the tariffs or not, it's introducing an uncertainty that we really haven't dealt with at that level, at this level before. So I'm with you. I'm not, I don't think they're cutting anytime soon.
I don't think they can. No. Meanwhile, I think that's going to create the new floor of the VIX, which is like 16 to 17. And I think that's what you're seeing. And you're seeing a market where, we could easily move 1% on any given day. What is our range today, by the way? It got to be close to 1%. 69 handle range. There you go.
Yeah.
Yeah. I mean, I think that's just kind of the new normal, 1%.
Yeah. Now, if you really wanted to give the Fed a chance to cut rates, you would just go ahead and enact the tariffs right now. So that way, by the time September does roll around, you would actually have an idea as to what it's going to do.
If we really put those tariffs in effect right now, you think we would drop again like April?
No.
No?
I don't think anybody's...
I think we would drop, but I don't think it would be like April.
The only reason I think that is because I don't think the market would have rallied from April to now. I think they figured out, the market realized that somehow we've priced it in some way, shape, or form. But who knows? I don't know.
I feel like I said, I think we would drop. I don't think it would be on the scale of April. we would probably drop.
Maybe
because then it's like there's still some kind of uncertainty of how that would really play out if we have tariffs. You know, I suppose. Yeah, I got a long gold position. I've had this on for a minute. Further upside because I like being upside in metals. I don't want to be at the money. Still got that. Still got a silver position. Same deal. Craziness. I don't know if silver's going to do it. But as long as it's holding, it's been, ever since this big move, which is when I put it on right around here, it's been holding in here. I'm okay with it. As long as it doesn't tank down to here, then it's like done. As long as it's still holding out above the big breakout, I'm just going to have to withstand the day-to-day moves, which silver can be noisy. I don't know, anything trade-wise you watching recently?
I got short the euro.
Oh, yeah. Today. I did too. You did.
I sold M60.
You did, yeah.
Yeah. Let's see.
I've been saying, and I would mention this last week on Futures Power Hour on Tuesday. I said, look, I've been talking about it. I've been looking for a while, and I've been saying, like, I don't necessarily want to catch the falling knife that is the dollar. It's a hard trade, and I don't know when it's going to happen. I've been saying that for a while, and then last week it was like, okay, a lot of people are short the dollar. Commitment and trade reports talk about how many people are short the dollar. And then I started hearing like different tasty personalities that are trying to get long the dollar, and they're complaining about it. And I'm like, okay, yes.
Gotta wait.
But that's like the beginning, though. Like when you start hearing people who are already long, it's kind of like last year with the last couple of years with the 210 spread.
Yeah.
People were just complaining about all the time they had on, and I was starting to get interested.
Wait till they're on the ledge.
So that's part of it. Yeah. I do feel like once the trade happens, you're not going to be able to get in.
No,
it's going to be like a huge 2-3 day move upwards in the dollar. I did this like you. I decided to get long day. I am long October. I'm long a put spread in October. 117, 115. No, not this. That is it. But it's not the dollar show. I am long that. I decided to get long it. $700 in premium. It is out of the money. I understand all of that, but I'm playing it from the standpoint of when this thing really falls, it's going to fall.
Yeah.
It's going to be like 3-4 days in a row. It's going to get down to 115. I'm like, oh my God. How did that happen?
Yeah, I took about quarter position. I didn't want to jump all in. And there's a good chance I won't get a full position on. But, all right, there is a lot of complaining that's going on. And it's like, all right, hopefully, I let everybody take the pain and I'll get in for, I'll probably suffer a little bit because that's just how it goes. But
well, first of all, you got to be patient, which you don't know how to spend.
I'm not very good with patience. No,
I could envision this being a trade that doesn't necessarily work until August, personally.
Could be a repeat, like time wise, around the same time they had that Japanese.
That's also an interesting time in the markets every year, August, September, like something.
Something always happens in August. Yeah, I agree with you on that. That's the only thing new that I've really. I think that I've done, and I've got some. Yeah, I've been scalping. I always scalp, but that's not something I can even talk about. I couldn't explain to you how I do it. If you held a gun in my head and said, "What are you looking for?" I couldn't tell you.
I mean, if you got your thing, and it works for you. You know what I mean? You saw F1 this weekend.
I did see F1.
What'd you think?
I wish I had seen it in IMAX, but it was good.
Yeah, you did saw it in IMAX, yeah.
Yeah, it was good. Yeah, it was, it's crazy the trend that the actors, these older actors too, doing their own stunts. Like, I don't know how much total driving Brad Pitt did in that movie, but I do know he did some. And because I saw an interview with Jerry Bruckheimer where he said the best day of filming for him was the last day that Brad Pitt drove. Because he was driving 180 miles an hour.
But he's on the track by himself, I'm sure, right?
I don't know. But you're driving 180 miles an hour in one of those cars. Just a little that, and the car rolls, right?
Yeah.
So, and it's like, okay, I don't know what Brad Pitt. He's got to be 60.
Yeah, he's 60. I think 61.
Okay.
60 or 61.
But I mean, it's like, that's not, like you got Tom Cruise who's just insane. Like, I mean, Tom Cruise, I think, has a legit death wish. He wants to die while filming. He wants to make a snuff film, ultimately, is what he wants to do. But I'm impressed by it. It's like that takes a lot of dedication to do that. You saw it, you liked it.
I liked it a lot. Yeah. I saw it in IMAX. It was great. I enjoyed it. Storyline was good. Obviously, the action sequences were pretty good. Fun, watching the interplay between, the older and younger actor, Brad Pitt and Damson Idris, which, again, I like Damson. I remember seeing him in Snowfall. It was a great show. I liked it a lot. Carrie Condon was great in it, too, of course.
It's great seeing, like, Brad Pitt, now that he's the older guy. Like, you can think back to when he was the younger guy, giving the older guys a hard time.
What's the first movie you saw him in?
Oh my gosh.
I remember exactly when I first saw him. I don't know why. It wasn't necessarily anything that really it's a terrible movie.
I don't even know. I mean,
so most people remember him from what's the movie with the two ladies? And they drove the car off the cliff at the end.
Oh, Thelma and Louise?
I've actually never watched the whole movie.
I've never watched the
Thelma
whole
and Louise, so he's in that.
But I respect how they went out.
Yeah. But I remember seeing him in this movie called Cutting Class. It was like 1990 or 89. It was on late one night.
Is that the one where he wasn't supposed to speak and he spoke?
I mean, he was in the movie. No, it wasn't like
his first movie. He didn't have a speaking line, and he said something, and he got he got.
I think I've seen that story before. Yeah. I saw that story. Yeah. It was called Cutting Class. It was this guy who some dude who was going around killing people. It was like one of those bullshit horror flicks. And I just remember seeing him. And honestly, I felt like he had his skin wasn't that great. I felt like in the movie. And the next he's in Thelma and Louise, and women are like, "Oh my god!" And I'm like, "Really, that guy?" And I was like, "Oh wait, what did he do? Like he looks different." I don't know.
I saw a photograph recently. It was Jason Priestley. Yeah, a couple other guys, and Brad Pitt, and it's all before they made it.
I mean, they're all the contemporaries.
Yeah, and they were all. It's somebody's apartment. And it was before any of them had made it, and it's just kind of like, oh my god, these guys they were broke, just broke. But I don't know what the first one. I mean, when did 7 come out? I
was 95, I think.
Yeah,
95, I believe.
Yeah, I mean,
I was on recently too. I had to watch some of that.
My older son's been watching that. He's watched it a few times in a row. He's like, such a great movie.
It is. Yeah. I know.
Yeah.
I know. What's the first age you could show a kid that movie?
I don't know, but did you know that they wanted to change the end? And he had a clause.
Yeah. Remember, I think we talked about that.
Oh, yeah.
So it was dope.
The what's in the box?
Yeah.
What's in the box?
What's in the box? What's in the box? Can you imagine if they didn't do that? Oh my god,
it would have sucked. It would have sucked.
This is somewhat of a weird kind of beginning to a week. I'm not really putting too much thought into this though. This move today.
If anything, I think I would get long today's.
I would wait until tomorrow, and we could have another one of these. Again, we talk about it's all week. What we got? I mean, really nothing tomorrow. Literally, that's going to be fun. I already know how that's going to go. I just hate creating content on days like that, dude. Come on, man.
Well, there's nothing to talk about. Unless there's nothing going on. No.
Ugh.
For a trade, I don't mind getting long for a trade for tomorrow, doing something, but no, you got nothing. You got the FOMC minutes on Wednesday, which
FOMC minutes and 10-year note auction. So
and then I think you got a 30-year auction on Thursday, if I'm not mistaken.
What'd you say?
I think there's a 30-year auction.
Yeah, correct. 30-year bond auction. I know some Fed people are speaking. Who gives a shit? I don't really care unless it's Powell. I don't really care anymore.
No.
And then Friday is also nothing.
Friday,
you got the WASD report, but who trades on that? I guess Westwater does.
I was going to say Vecchio.
Vecchio. He's totally going to mention that this week. Yeah, watch. You're producing tomorrow. He's going to mention it. I'm just going to look at the camera. That's all I'm going to do.
I think Delta has earnings on Wednesday.
Do they?
Yeah, they have earnings this week.
Yeah. Wasn't it you were asking me about earnings and what I plan to trade earnings? I thought you were asking. This time around?
Yeah, with the low VIX, would you do it?
Well, you know what? Oddly enough, I did place a couple of trades today that are, I guess, sort of early earnings trades, if you will.
I won't.
One of them was, and they're the calendar calls. Look, this. I mean, I know this is like one of those you ever see, what was that? It was that M. Night Shyamalan movie with Bryce Dallas Howard. You ever see that? And the one where they're in a they think in like the 1700s, but it turns out they're in present time. They just like this whole families went and just like went to the woods.
Oh yeah.
You know what I'm talking about?
Yeah.
That's a great movie.
That was a good one.
That was a really good
What
movie.
was that called? I know exactly what you're talking about. And they finally like they break out and like there's a street or something like that.
Yeah,
right?
well, like I mean, it doesn't matter. We can give it away. The movie's 20 years old. If you haven't seen it by now, whatever.
You shouldn't have tuned in to watch us.
Somebody got hurt. What's his name? Phoenix. Not
River?
Phoenix. Not River, but the other
He's
one.
dead.
Joaquin. Remember, he got hurt, and so they needed some supplies, and they had to go into the town.
He's
it's
in
called the
that one
town,
too?
actually, right? Or no, not the town.
He's
It's
in that
the
one
village,
too
the
because he's
village.
also in the
Village,
Sonic.
yeah. See, Gregory V. Dub knows. He poured.
Yeah.
That's what we do here, okay? In case for those who don't know about engineering trade, we talk about old
movies. We reference movies. If anybody knows the movie we referenced at the very beginning, we're back, we're bad, you're black, I'm mad.
Yeah.
I'd be impressed.
In the village, yeah, she was. She had to go. Now I forgot even why I brought up the movie, but yeah, no, she had to go out. Remember, she's blind. She was blind.
Yeah.
And she's the one who had to navigate through the forest and go out and get
Why did you
something.
bring it up?
I don't remember.
Were we still talking about Brad Pitt?
No, we weren't. Don't confuse me. Don't confuse me even more.
It's such a slow day.
Oh, this is why I brought up because I got Robin Hood up on the screen.
Oh, yeah.
Remember what they called the people who are like the people who are the monsters? Those we don't speak of.
Oh.
This Weeble, Etor from now on. When I say those,
Jackie
we
W
don't.
got it.
When I Lethal Weapon and Short Circuit.
You got
Jackie
it.
W. Oh man.
Had to have Googled that.
Oh yeah. Nice job, Jackie. These from now on, these companies are going to be whether it's Robinhood, whether it's eToro, whether it's Weeble. Okay, these are the last time I'm going to say these names. From now on, these are those we don't speak of when it comes to Tasty. These are those we don't speak of. But one of those we don't speak of has been on the move. This stock has been on the move a lot recently. I am.
This one's been crazy.
Again, I'm not doing. I have a bullish play on earnings, not because I'm bullish on the company, but because I'm watching the stock, and it's kind of ridiculous. So
It's insane, is what it is.
yeah, so I've got a couple of calendar calls. Again, I didn't want to. I feel like that's the cheapest way to play it. If it doesn't work out, cool. I don't lose a ton. That's kind of how I know.
Knew it off the top of your head.
That's good. That's good.
You can come join the show sometime.
Okay. All right.
We'll do better.
We'll make it harder. We can make it harder.
We can dig deep. This moving, that moving hood. I mean, and it's all based on the rumor of it going into the S&P. Like,
yeah.
I mean, but hey, props. I mean, whatever. I'm done.
Yeah. Nah, it's been on the move. That's one of the few earnings trades. But other than that, I don't know. I may play the well. Speaking of, it's a full week. It's probably 10 days from now, right? Earnings for the 15th. Oh, it's not 10 days. It's
earnings?
The
Morgan,
middle of the
JP
next
Morgan.
week. I didn't realize it was middle.
Yeah, it's 10 days.
It used to be like I thought the bank earnings used to start like on a
Friday.
Thursday, Friday.
Yeah, they did.
So they changed it again.
Yeah, I don't get it. Like,
I don't get it neither.
I don't understand the cadence of it all.
I don't know if I'll be
They
playing.
must have something good to say. Like, I always thought that if you did it on a Friday, it's because you had something not so good you wanted
True.
to share.
Yeah.
But if you're doing it earlier in the week, like maybe there's something good you want to tell people.
Maybe.
I don't remember. Hey, somebody, because I have no memory whatsoever at this point in my life. I'm getting up there. Somebody remember I just said that. And if JP Morgan says something good in the stock rallies, remind me of that come third quarter earnings.
Yeah. Stack it away. Yeah, I don't know how many. I don't know how many earnings I'm going to play.
I will not be trading earnings with the VIX. Well, what's AX at?
But things actually move around a bit, you know. Like I like. Well, you're talking about selling earnings. I'm certainly not selling any earnings.
Yeah.
I haven't sold earnings in a while. Although I did last quarter. I think it was. No, I did last quarter when we
I
were.
will not sell earnings unless I sell
No, but
them.
you remember why? Because VIX was up. Because things were crazy. And
Yeah, see,
remember
that's when I'll
exactly
sell
what we were
it.
talking about. Because the vol was even higher than earnings vol, and that's why. But other than that, I mostly buy earnings, as everybody knows on this show.
Yeah.
That's how I roll.
Cut me off. It's 2:15.
Oh, yeah, it is 2:15. Time flies when you're having fun. Folks, thanks for watching the show. As always, be smart, be patient, trade them small, and trade them often. Peace.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hey everybody, Tim Knight. We're back from our holiday weekend, and a lot has happened since Thursday. Some good, some bad. On the financial scene, of course, the big news today was the tumult about tariffs once more. As I had said a week or two ago, July 9 was stated clearly as the deadline should just be ignored, and sure enough, like 72 hours beforehand, the administration came out. It's like, August 1. I fully expect on July 29 to be like, September 1. And they're just going to kick the can down the road in perpetuity. There have been some letters going out today, evidently, with random capitalization and talking about, hey, country, you're going to pay these tariffs. The market doesn't seem too fazed by it. If this were April 8th, and these letters were going out, I guess, we'd be down 800 points on the ES. But as it is now, it's like, we're down fractionally, just a little bit. But yeah, Taco wins again. They just, move the goalposts as always. So it was supposed to be, literally the day after tomorrow. And now it's like, push back into August. So we shall see. We got a late start on the show today, so I'm going to go at a brisker pace than normal. We'll catch up on charts a little bit. But the good news is that we have no holidays until September. Yay. So we'll get 5 days with each other week after week. So beginning with the spider, we had a lifetime high on Thursday, and we do not have a lifetime high now. We basically gave up those gains and some more. And we're daintily resting right on that multi-decade midline right now. The IWM is down harder than the rest. This line doesn't mean too much. It's just anchored to Thursday's high. That's all. It has no technical significance. But we've retreated from that as well. And the cubes are also on the weak side, although only half as weak as the small caps. These are down not quite 1%. And as with everything else, backing away from Thursday's lifetime highs. So just really not a lot going on. We've undone Thursday. We've kind of jumped back to Wednesday's close. Big deal. Not too much to report. Another big event, of course, was ostensibly Elon was forming a new political party, which evidence looks like that is not the case. He ran a poll, and about 2/3 of the folks said, yeah, start another party. But it seems that he didn't actually file the papers to do that. And, his boards of directors and his shareholders probably would prefer he just kind of stick to the knitting and not do the new Ross Perot thing. But Tesla is the one, of course, only public company of his that you can look at to see, well, what's the market think of what's going on? It's not thinking too good. It's down about 7%. And these gyrations recently have been sort of a, is he doing politics? Is he not doing politics? And so it got a big lift once he sort of exited stage left and be like, I'm out of here. I'm going to go back to what I'm supposed to do. And the market cheered. And that kind of stopped back here and has been tumbling since then. So a real grind. And it's interesting, especially when you think that the price we're at now is the same price the stock was at in January 2021. Think how much has happened since then. I mean, I think if you really looked at it hard, I'm pretty sure that the price is the same now as it was while Trump was still in office in his first term, I think. So, I think so. So that's sort of extraordinary that many years would have passed and net, no change in the price, even though the world is like radically different than it was 4 years ago. Semiconductors, SMH, also down. Same deal, lifetime high on Thursday, and we have done away with that, and we've eaten into some of Wednesday's very big gain. And you can see this more dramatically, as always, with the SOXL, which is down almost 6%, and it's just went exploding higher like so, and is reversing away from that. So all in all, I mean, I guess people are trying to assess how real are these tariffs, how much do people care anymore? And of course, as we move forward into this month, we can begin to actually pay attention to something different for a change, which would be earnings, which people like in the 70s and the 80s could actually understand. Something to focus on that has meaning. Real quick, the wonderful world of quantum is still trading heavily, although it's definitely given up some of those recent profits. QUBT, which I think is especially vulnerable, is down a little more than 6%. And QBTS, which I think is obviously very vulnerable because of the sector, but less vulnerable from a starting perspective, is also down, but not quite as much. Actually, pretty modestly, all things considered, a fraction of what its compatriot is. Ratio chart we look at from time to time that I wanted to highlight again was XME over GDX. That is to say, the metals mining ETF divided by the precious metals mining ETF. So the first is kind of a superset of the second. And we are kind of on the high side in this cycle. This goes back for decades. And we've got kind of an interesting pattern going on here, because if this were just a stock, you might think, well, this is an interesting short position, a short opportunity, because we've got this beautiful topping pattern. It fell, it retraced. If that's true, if this is going to fall following this pattern, what that would suggest is that GDX is going to do way better than XME. In other words, short XME, go long GDX as a pairs trade. Or you could just short XME and hope for the best. But the point is that over the long haul, this ratio does tend to cycle, it seems. And that would be kind of where things stand right now. So individually, XME looks like so. It's down not quite 2%. We've got a price gap today. And then GDX is down, but only a little bit, which, it's just one day, but that sort of rings true with what I was just saying about that ratio chart. I wanted to, as my puppy destroys my carpet, oh no, that's a toy. Carry on. I wanted to thumb through some of my short positions. It's actually a little bit more than this. I have been kind of judiciously picking up some new items here and there. So I've got like 16 positions now, but I think I wrote down 12 of them to share. And so let's thumb through these quickly in alphabetical order. Some are ETFs, some are straight equities. Here's AMD. And I'll just, as you go through those, I'll just sort of highlight over what my own stop loss level would be for each of these. The diamonds, DIA, zoom in here. And really it would be not very sophisticated, just the lifetime high on Thursday, I guess it would have been. Dick's Sporting Goods, DKS. Here's the sloppy top. And in this instance, is this dashed line, which I'm using as a stop loss. Estee Lauder, EL, which admittedly has lost the majority of its value already. But this looks to me like one of those long slogs that goes on for years, a whole series of lower lows and lower highs. China, FXI, which is actually up a teeny bit today, kind of surprisingly, but I actually increased my short position on this today. Halliburton, HAL, zooming in, and there's the stop loss on that one. HIMS, HIMS, zoom in here, tightened up the stop on this like so. Bang, just above Thursday's high. Nike, this is a new one, NKE, beneath that big right triangle pattern right there. So there's the, it's a pretty wide stop on this, way up at that peak. On semiconductor, you can see kind of a theme here. There's definitely some semiconductors from place to place. 57.13 is my line limit on that one. Few more. Pepsi's back, PEP. This one had broken below this beautiful top and had retraced. I've gotten back into that one. The cubes, got a good price on these earlier today. Stop on this one, very simple, just above Thursday's high. And finally, probably my favorite, and the biggest one, Tilt, TLT, the bonds. Zooming on here, tighten up the stop also, expanded the position, and I know you've heard it many times before, but I'm watching this pink zone here. I want to see if it can break below that zone. Because if it can, I think we'll have yet another extension of what is already a half-decade long bear market. And as I mentioned in the past, it's oftentimes people might look at a chart like this. It's a little deceptive because in your mind, the bottom isn't that far away because that's how the chart's scaled. And it's more helpful in a situation like this so you can actually see, no, there's a lot of empty air under there. You know, 0 is always the limit. And I think it's an interesting setup, not quite as huge as this one. And obviously we're down a lot already. But if we should break below that, I think that'd be quite the big deal. And that, to put it, not to put too fine a point on it, but 82.88 is the actual level itself. And one other perspective on that would be this chart here, U.S. Treasury bond futures, continuous contract, ZB. And we can see top, top, top. The first of which didn't produce that tremendous a result. We had a small push down here, somewhat bigger one here, and this was the big kahuna where it was just like transforming. And now we're engaged in that kind of thing. I've talked so fast, we're actually going to end on time. Hallelujah. Last chart, and one you've seen before, but I just got to drive this home. I've got a lot of different flavors of this, a lot of different, some kind of equity divided by some kind of precious metal. It could be silver, gold, platinum, palladium, anything like that. And the dividend, I guess it's called, it could be the Dow Jones Composite, the NASDAQ 100, the S&P 500, doesn't matter. Equity divided by precious metal. They all look sort of like this. They all have prior rounded tops. They all have big falls following those rounded tops. And some, just by virtue of how far back they go in time, might be 2, 3, 4, varies. This one happens to be the Dow Composite divided by silver, which is still in progress and process. It hasn't finished yet. But should we break below the bottom of that semicircle, I'm without a. He's telling me to end. He's telling me to end the show. Back up. If we should break below that, then we'll have, I think, a hard fall. And so before all hell breaks loose again with this animal, I think I better go. But anyway, it's good to see you again, metaphorically speaking. And sorry if your eardrums just got busted. It wasn't planned. It wasn't part of the show. This is unscripted, as you can tell. But I'll see you again tomorrow. Hope you're doing all right. And looking forward to a nice, long July and August with you. Bye.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
Question for you guys.
Yes.
Vanetta this morning was giving me a little flack. It was lighthearted. She meant well.
Okay.
For my particular baby face.
Yes. You are young.
Just
young
question for you guys, because I look up to you both. How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing I can hear John laughing out there. See, the thing is that you either have it or you don't have it, and
All right.
you just don't.
I could put together a pretty gnarly neck beard.
It's a manly thing. But
The last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
every time I leave Tasty, I miss it. Even like when I go home after work, I think about Tasty. I'm like, I wish I was really in the office.
No, you don't.
I don't.
You just went abroad. Were you able to just fully disconnect?
Fully.
Yeah.
We saw several artisans, but the sword maker. 3 months to make a sword.
Yeah.
That's
when
one
does yours get delivered?
50,
You didn't do the sword?
50 grand. And there's
But that's,
and a 2-year wait list.
It's a couple spoons.
Yeah, that's, come on.
I'm going to Rockford for a wedding. It's going to be a very fun wedding.
Your friend that's getting married or is your girlfriend's friend?
Girlfriend's friend.
Do you want your girl to catch the bouquet?
No. That never ends well. Like in movies, that happens. The guy's like,
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Ring the alarm, hey, ring the alarm. Boys, turn up the charm. Listen up, y'all, get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with the last call. Don't worry, you look beautiful. Stop checking yourself. You're amazing. I mean, you look a lot better than the market. Even the S&P is down 59. So I think we both said we were looking for a little bit of weakness today. We got it. I mean, it's only 1%, a little bit less. Not really that big of a move. Not a lot of velocity either. And we are 20-ish handles off of our lows. Volatility's been staying bid all day. It's up about 2.25%, up 42 cents to 1882, the high end of its range for today. Nasdaq's been the weakest of the group, although the Russell took that title today. Russell down 37, Nasdaq down 202. That's a 2 times larger move on the Russell than in the Nasdaq. Remember earlier this morning we talked about the expected move on the E-mini S&Ps. Well, you almost had the weak move today, Sadnov. Bonds have been weak all day, down 29 ticks to 113.11, about 7 ticks off of their lows of 113.04. Last 3 days have taken out about a week and a half of up movement in the bonds. Volatility, IV rank 14. Bitcoin, 1085, 1086 hasn't really moved since the last time I quoted it. Oil took a little bit of a rally up $1 to 101, just about 30 cents off of its highs for the day. Gold up $7 after looking like it was going to go under 3,300 this morning. It's actually up $6.80 just off of its highs, 33.49, $3 away from its highs. Sad enough, we had a couple of movers today. The big ones were to the downside. You had the Tesla down 21. That's where it kind of opened for the day and then really kind of stayed there. Goldman Sachs down 16. Lululemon down 10 and change, even though Lulu's having a 25% off sale. ARM down $8.60. Netflix down $8. TSM down 6 and change. MSTR down 5 and change with crypto lower, and JP Morgan down $5 to the upside. A little fewer and far in between. Numbers are a little bit smaller too, although Oracle is up 16, Palantir up $4, Roblox up just about $4, Costco, you must have gone shopping there this weekend, up $3.50. Sad enough, that's all I've got. Give me something good.
Actually, Costco turned around today. It was down this morning, and
you are right. Yeah. It was under 980. It's 990 right now. It was 976 on the low. Mm-hmm.
Yeah, it was interesting. Some of the stocks that turned around today. Apple was actually up this morning when the market was lower, and now it's down.
I mentioned it when it went red by $1 and change on the show. It's giving a little weakness to the market. I mentioned it to you. Down 4 now.
Yeah. Big down move in Apple. It's been really strong lately, so it just gave it up. I mean, look, starting with the indexes, I don't think there's a person that trades stock indexes that would be surprised by today's move. We've been straight up for 7 or 8 straight, 9 days, something like crazy like that.
New highs, sure.
Yeah, we were up 50 points on Thursday on the half day. We're down 59 right now. I mean, so I think that this is nothing other than just a little bit of, hey, we were grossly overbought short term. NASDAQ being down 200 points today, same thing. We're grossly overbought short term. The Dow down 500 is a much bigger move, and the Russell down 36. Those are bigger percentage moves, but the Russell's been super strong lately. So today's move actually surprised me a little. The biggest surprise for me personally was the bonds and the notes. Bonds down a point after being down a point on Thursday. They've dropped, like you mentioned earlier today, from 116 down to 113. That's a pretty big move, 3 full points, almost 3 full points.
That's almost $3,000, $1,000 a point.
Yeah. Notes, on the other hand, they were up all night last night, even with the bonds down, and now they're down 8 ticks, which is a quarter of a point, which is a pretty big move. Crude oil was unchanged. It was down $1 last night, but up $1 now. But it's unchanged all day, and then it just rallied slowly. And gold, the exact opposite way, was down 30 this morning, up $6, $7 now, and for the first time, the dollar a little bit stronger. I was expecting stronger dollar, stronger bonds, and we got stronger dollar, weaker bonds. So there's zero correlation between bonds and dollar. But I don't get the bond move. I'm starting to get a creepy feeling about the bonds. I'm long bonds. I bought them this morning.
I know.
I sold puts in the notes. I'm getting a very creepy feeling about the bonds.
Bonds could go lower, rates could go a little bit higher, you're saying. Or you feeling like you're getting them at a discount?
No. I have felt all along I'm getting a discount. I am now getting a creepy feeling. I'm not going to tell you why I'm getting a creepy feeling yet. I will tell you.
Tell me where the creepy feeling guy touched you.
I will tell you either tomorrow or Wednesday if they continue to go lower. But my whole case for bonds going lower was just that the dollar is in such a free fall that it makes sense that nobody wants to buy bonds here. And when the dollar starts to rally a little bit, the bond market will firm up. Well, that was not the case at all today. In fact, it was the exact opposite. And
so you didn't get what you wanted, and now you're starting to feel a little creepy.
I'm not feeling creepy. I said I'm getting a creepy feeling. There's a difference, okay? I'm getting a creepy feeling, but I'm not going to scare the children. The children are Tony and everybody else listening. Those are the children. And I am not going to scare the children with a stupid conspiracy theory or a stupid, something that's way out of left field. I'm not going to scare the children yet. So I'm going to wait. And I'm going to wait till Tuesday, tomorrow, or Wednesday. If the bonds continue lower, then I will tell you what my creepy feeling is. If not, I'm going to keep it to myself and make believe it never happened. Other than that, let me just take a quick look. Other than that, let's talk about just some of the stocks. So even though the SPOOs are down almost 60, there were a bunch of stocks that were very mixed today. Palantir being one of the stocks that's up like, $4. And you already mentioned Costco and stuff like that. But also like Baidu was up today. Weird Chinese stocks, rallying on, I'm assuming on that, all the stablecoin talk and everything else, but just a crazy little stuff like that. And the other thing that was weird today was, I traded some Tesla on the opening right here, down $21. It hasn't really moved much. It was down 23, 24, 21. I was trading in this range all day today. Usually Tesla, when it gap opens down 20, it's either down 40 or unchanged.
Sure. Yes. It was a pretty anticlimactic day for the magnitude of the move on the opening in Tesla.
Yeah.
I agree with you.
Yeah. So they killed some premium in there. And then I took off my position there, and I just reloaded in a stock that you and I have been trading a little bit of in UNH. I actually like the IV ranking there at 61, and the stock down $5.
UNH down $5 and change, kind of not back to its lows, but back down to this low end of this wide range that it's had since early May. UNH has earnings coming out July 29th. Thomas, just letting you know.
Yeah, I know that, but this stock jumped up into like the 320s last week.
Yeah.
And then it's just had 3 straight down days, and it popped a pop and vol here back to, the IV ranked to 61. I sold a strangle. It was one of the only opening trades other than Tesla that we made today. A very quiet day. We're not even going to make 40 trades today, now I will have to go on record that the ES volume's okay, and we did come in short. So one of the reasons I didn't do a lot today is I'm short a lot of call spreads in spiders and short a lot of call spreads in NASDAQ. So at least we had that much going for us, and short some futures. So we have the short deltas today. So all in all, it was a pretty good one for the good kids. But we did have some losers today. RBLX, I'm short that stock. It continues to never have a downtick. That's another stock.
What is going on with this stock?
I don't know. They got to have it. It's just
I don't get it. Yeah,
I don't get it either. My two biggest losers
earnings
today
July 31st. Yeah, God.
RBLX and bonds. Those are my biggest losers. But we can handle that. A lot of winners today. Let's just see. A lot of winners. The Qs and the spiders. It's one of those rare days. You get Qs and spiders. Let's see what else. For a Monday, I just thought, and I think you were on the exact same page. I think we both just thought we just got too overdone. We got overcooked last week.
Yeah, I think I thought so too, and I thought it was we were talking about it at the close on Thursday. We talked about it on the opening. We were down 20-ish or so. Do you think it would be higher or lower than this by the close? We both said lower. I mean, I don't think it's too. It's really actually. What do we do from here now? Now we're under 6,300, right?
Yeah. Yeah. I mean, we're under. Yeah, a nice move under 6,300. We held it this morning and then finally gave it up. I mean, let's put it this way: 6,200 would be a nothing down move. It would be 2%.
Yeah. No, but it is outside the expected move for the week. I thought the expected move of 80 some odd dollars was kind of low, but
yeah. So, okay. So here's my question on expected move: is expected move close or stay within?
I would say that it's weekly close, not stays within.
Okay. So
That's the way
it could go down.
that's the way I look at it.
I think so too. So it could go down to 6,200 and still close well within the expected.
Sure. And has on many occasions done that. Gone outside the expected move on a move, and then close inside the expected move.
Yeah, well, I mean, let's throw a little cold water on the market just for a second. I mean, the other day we talked about one of the reasons the market was rallying is because there was just a lot of chatter about interest rates going back to all these cuts on the horizon. Well, that's when bonds were trading close to 116, and we said, yeah, you know what? Now the Fed can do whatever they want. At 113, you do realize the game changes.
Sure.
At 113, the Fed can't do whatever they want.
Yeah, you had a big volume day in ZB options today. Matter of fact, SPX and Tesla almost had the same amount of volume today. Just a little over 3 million in SPX and 3 million in Tesla. You had 37,000 in bonds, which is 5 times the average in bonds. So big move in bonds, a lot of player in bonds too. So Ivy rank only 15, but they're all there.
Yeah, and those are not retail customers per se. There's some like me, but they're mostly it's mostly a different marketplace. All right, that's good. That's interesting little tidbits to kick off the session.
Sure. I mean, what I wanted to get to before you interrupted me is that capitulation 5 times the amount of option volume in the bonds. I think to your point of being creepy, that you might be onto something.
I didn't define creepy yet, so you have no idea what I'm thinking is creepy. Creepy. The bonds are not creepy. I was going to tell you what's creepy about what scares me about the bond market.
I misunderstood.
Yeah, you did misunderstand. Yes.
It's easy. It's easy to happen.
Yeah.
But you caught it. You caught it. Thank you for clearing it up.
You're welcome.
Yeah.
All right. Let's take a look at just a quick scan here to see if there's anything else that jumps off my screen. Let's look. We're looking for screen jumpers, and no earnings yet. But I did widen my Delta strangle out for later on this week. By the way, Delta was up big this morning too, and ended up closing down $1 today. United Airlines, another stock that was up big this morning, it's down $1.50 right now. So some of these stocks definitely turned around.
Yes, for sure.
Yeah,
and we're off of our lows too. So
yeah. All right, so let's talk about the rest of the week. This is a Monday.
Sure.
I'm not thinking. I'm for sure not bullish here, not short term. I'm thinking they got more room to go.
I'm in the same page as you, Sadnaf, and I've always been, a lot more optimistic to the upside than you've been. I mean, you've got some economic news coming out later this week. Kai talked about it. You got jobless claims on Thursday. I think volatility is going to stay bid through the week, and I think you're going to get down moves. And if you do get an up move, I think you could sell it. So for me, I think the highs are probably in for the week already. How about that?
Yeah, I'm okay with that. It's possible for sure.
Oh well, I don't know about for sure stuff, but I mean,
I said it's possible. It's for sure possible.
It's for sure possible. Got it.
That's the most worthless answer anybody's ever given. Okay,
for sure
it's
possible.
For sure possible.
Not what I said. I said the high is in. You could just mark that down. I said it. I'll own up to it when it goes wrong, if it goes wrong, because there's almost the 60-40 shot that it's going to touch there again. So there you go.
Yeah,
I didn't say almost sure, positive, maybe, if, like you did. And didn't you create expected move? And you're asking me what it is? I mean, for crying out loud. And my peeps are talking about Taco Tuesday. I'll give you an out.
What's Taco? What do you mean?
Trump, whatever, always changes his mind, whatever the case.
No, I
we
just
rally.
like regular. I just like regular Taco Tuesday.
The old Taco Tuesday.
Yeah, I don't want Trump ruining Taco Tuesday like he ruins everything else. And I don't want him ruining Taco Tuesday.
Are
I
you
love
getting a
Taco
creepy
Tuesday.
feeling because democracy is ending again on Wednesday with you and Dylan?
No.
Okay.
This has nothing to do with democracy. I've already had my creepy feeling.
Okay.
about democracy.
Okay. All right. Oof.
I have a creepy feeling about something else, but I'm not going to say it yet unless bonds. If bonds hold here, I'll be good.
Okay. All right.
Yeah, I want to see how the market. I want to see how the market closes today because I think it's important. I liked. I should say I liked. I actually didn't like the close on Thursday because I thought they would sell them off a little bit, and they didn't sell them off at all on the close on Thursday. And I thought they might sell them off a little bit on the close today, but so far, no bueno.
So far, nothing. No.
Yeah, this was a very orderly down move today, which makes me think that there's more to come Tuesday, Wednesday. I'm not willing to stretch my short-term perspective out to Thursday or Friday yet. Okay, so best play on the board here because there's not a lot of vol to sell. I mean, UNH kind of was the only thing I saw. There's not a lot of vol to sell. Best play on the board if you want to do something directional here. What do you do?
Sell any rally and you can sell it early. You could sell it right now, Sadnov, for tonight. Oh man, am I confident? Oh, you're so screwed if you do anything here.
Yeah, I don't like when
you
when
can sell 0-day calls right now, Saznov, SPX. Just sell them short. Just go ahead.
You probably could do some. Let's see, what time is it?
The only problem is you're going to have to sell calls that are like, $6 out of the money for a guy like you. You can't, for 40 cents, that's what you'll have to do. You got 8 minutes to make 40 cents. Oh, you can't even do it anymore. Now it's 35.40. You missed it.
No, I'm talking about for tomorrow. You got the
tomorrow.
VIX, you got the VIX 1 day popping up a little bit. I need some trades on. You had a pretty big move overnight. Maybe we'll do something in the 1 day. Just to give us something to trade tomorrow.
You got that. You're going to hedge it by doing a little bit of downside too?
No, I don't need no stinking hedge. I don't need no freaking badge. I need a badge and then do hedge. What's
Tasty wants to know what's creepy. You can't hold back on us. You never
I know,
hide,
that's why
anything.
it's a teaser, Tasty.
You never hide anything from us.
I'm hiding this. I'm going to go just outside the expected move, and let's see, $5, $4, $3, $2, $1. We got to sell something here. Have a little fun. I'm going to sell an ES strangle here into the close.
Oh, so you are going to sell the other side. You lied.
I sold
Rookie move.
Why?
6,300, 6,230 for $9.95.
Yeah.
What do you mean? Yeah. What do you think? I lied?
No, I just looked at it. It's something. To put some position on 1 day. I don't do it a lot, but with the pop and vol today, give us something to do. Have a little fun. Trade overnight. It worked the other night. Let's try it. We'll go back to the well one time.
Okay.
Usually you get a chance in the morning to get out. Something. We'll see.
Yep. If you're nimble and you're quick.
Jack, be nimble. People say a lot of things about me, Tony, but nobody ever says I'm not quick.
You're not nimble nor quick. I'm sorry.
My wife would tend to differ.
Touche. Well played. You're 100% correct.
All right. Let's bring in the boys.
Let's do it. Where are they? There they are.
Segue.
Speaking of nimble and quick, hello, boys.
I'm not liking our bonds idea from yesterday, Tom.
Yeah, I don't like that insinuation there. Dylan, you speak, not Ilya.
What kind of operation are you boys running over there? That's what I want to know. I want to know what is going on with this operation.
We're trying, Dylan. We're trying to keep the lights on.
All right.
Tom, you know what you know what I hear this morning? I wake up to a message. I get onto Teams at 6:45 this morning to pop in, see what's going on. And I get a message from Rich McDonald about how Dylan's using his airtime overseas to talk about Dylanism, the religion of Dylanism, how everyone's going to follow Dylanism.
Dylan is starting a new religion. I like that.
Dylanism.
Dylanism.
Yeah, I'm a Dylanist. You can't be too.
I mean, if you're a Dylanist, then we all have to become Dylanists.
I mean, I'll send out the commandments later.
Oh my God, that's.
I had to go. I gotta climb a mountain first and see what they tell me. I don't really know yet, but I'll get up on a mountaintop somewhere and I'll see what I hear, and I'll report back.
This is very exciting time.
You're gonna have to buy the rights from Cake's Comfort Eagle for a theme song.
Well, I mean, just to put it in context, the discussion was about Musk's new political party or attempt at a new political party.
Mm-hmm.
And I was just saying that the problem was trying to start a new political party, or the challenge of the problem, but the challenge is political parties are not it's not a business, it's not a startup, and it's not a commercial enterprise. Political parties are more akin to trying to start a religion than they are to trying to start an enterprise, so I don't think there's anything more difficult than originating a religion, although the Mormons did it with the whole spaceship thing. And, I mean, you just need a story.
Whoa. We haven't picked on any Mormons on this show ever, Dylan. This is a first. You've done a lot of firsts in media, Dylan. This is the first here on Tasty Live.
What's with the spaceship?
It's okay, man. Tony. It's okay. Mormons are so nice. They won't even get mad at you.
So nice.
Okay, they're so nice. They don't. They can't even get. They won't even get mad at you. They'll just laugh it off and say, you know what? It's just Dylan being Dylan.
Yeah.
Typical Dylanist.
Typical Dylanist. Exactly.
Figures. What are you gonna do?
Oh God, help us all. Speaking of which, Tesla put spreads, my favorite trade of the day. The other thing is I was yammering on with Angeline this morning in London about all these different trades, and it got so out of control that the lawyers got involved and had to come into the chat room and demand a disclaimer that no one should listen to me. It was it was an amazing moment.
That's great. Then you
got your Palantir put spreads, you got your Tesla put.
You've actually done something. If you can get the lawyers to jump on and scare the children, you've done something. In real time,
the lawyers got into the chat and said, interrupt him and make a disclaimer. He does not know what he's talking about, and no one should listen to him.
Magnificent.
Which only makes my trading recommendations. It's like a band album. Like once you say you don't listen,
we should play that. Compelling. We should play that every day on Tasty all day long. Every time Tony says something, I'm going to put it.
It's like the chorus to a song. You're like, trade, and don't listen to anything Tony says. Trade.
All day long. Anyway, just a reminder, Anthony Batista doesn't know any more than you know. That's it.
This is true. This is true.
And he might know less. All
right, boys. Ilya, more follow through tomorrow? Yes or no?
I like it. I got a little bit more short.
I'm
today.
Dead.
I thought this was pretty good.
I'm dead.
I got more long dollar. That's working. I don't like the bonds though. The bonds spooked me a little.
You liked them yesterday. You don't like them today? Okay.
I still like them. I just don't like this price action. I want to rebuy them a little lower.
Chris, follow through? Yes or no? Or is this just nothing? Just a reverse of Thursday, and they wipe the slate clean, start them all over tomorrow.
Yeah, for stocks, I think so. Not below your 1 week moving average yet, but the continuation, keep an eye on gold and silver. They've firmed up here in the second half of the day a lot. So I bought some new gold today.
Yeah, they did firm up a lot.
And they firmed up with a stronger dollar and higher yields, which is not what's supposed to happen. And that's That tells you gold doesn't really want to go down. Silver doesn't really want to go down.
That is for sure. So I agree with you based on the tape action today. So that's pretty interesting. Dylan, last words, or Tony, either one of you guys can have last words.
I defer to the I donate my time to the
opportunity of a lifetime. Sell any rally, sell any uptick.
The bat is not usually this sure of his. It doesn't have this kind of conviction to the downside. So we have to listen to him. All right, boys. Have a good show. We will talk to you later.
All right.
Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Our lawyers have advised us to tell you that you shouldn't listen to anything you hear. It's Monday, July 7th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan. We're here to take you through the rest of this hour. Futures market closes at 5 Eastern, 4 Central. If you're joining us on the platform, Tasty Trade on the website, tastylive.com. Thanks for joining the conversation. But tell us what you're thinking about this market today. A decline on the back of Laotian tariffs. Stocks fall. Come over to YouTube. Of course, that's where you can join the chat. Gentlemen, we get a bevy of tariff headlines today. The July 9th deadline is moved until August 1st. If you're South Korea or Japan, you're paying 25% starting August 1st. If you're a slew of other Central Asian, Southeast Asian countries, you're paying tariff rates in that same neighborhood a little bit higher. The market is taking it poorly-ish today. We're down nearly 1%, 0.87% in both ES and NQ. Russell a little bit more off, 1.6%. Risk appetite's not exactly firm elsewhere, with Bitcoin and Ethereum trading lower. But Ilya, something does seem different about this today, because unlike the tariff episodes that we had in March and even in early April, there's no consistent Sell America theme here across the board. So stocks are down and bonds are down, but gold's not soaring, and the dollar is screaming higher. So it looks more of a rate story than anything else because U.S. Treasury yields are up. I digress, of course. Dylan, I spoke with Ilya earlier today, so I want to go to you first. I haven't talked with you since Wednesday on camera. We now have this new weekend of headlines, of course, of the big, beautiful bill. Is this a taco trade? Should we be buying the dip here in stocks?
Yes. I mean, for me, there couldn't be a bigger I mean, all this stuff, whether there's a little pullback in Palantir, there's a little pullback in Tesla. I mean, maybe not so much in the market yet, although it is a little pullback. But I think any of the sort of, especially the real super performers, I bet when they get kicked even a touch, are full taco. And probably, for that matter, the indexes themselves. But for sure, like if you look at the Palantir pullback, you look at the Tesla pullback, you look at this RTY, all this stuff. I mean, even the Palantir is already on its way back, basically. But that just happened today. So I mean, we were talking. Angelina and I were talking about that this morning. I probably did that with the strength of my recommendation that no one should listen to. Yeah, for sure. I'm long the taco all day, every day, especially for names that are capable of extraordinary performance, which, you know, obviously the mega tech, the AI, the transportation tech, and for that matter, the defense tech are all sort of bullseye for any pullback, even if it's a put spread, especially when you get a little vol expansion, because like Tom was saying, so you have the vol expansion. Why not take a standard deviation below wherever you are and sell some put spreads?
Ilya, vol is up today a little bit. VIX closing in at we'll call it 1780 right now, relative to where we were at the end of last week. The close on Thursday, that was 16.38, so at about $1.50. The tariff headlines, I think, are surprising, not surprising in some regard. Surprising in the sense that perhaps some people like myself thought he'd push them back a little bit more, kick the can. Not surprising in the fact that he's not implementing them right away. So there's still a wide open lane of opportunity here for some deals to be made. And, you know, if July 31st rolls around, he says South Korea and Japan and Laos and Cambodia, they've all agreed to these deals. The August 1st deadline, those tariff rates never go up. So how as a trader do you reconcile that there's this threat out there, looming threat like there was throughout the month of March, but stocks were able to recover throughout the month of March? Yeah. It was only once April hit that things really hit the fan. I mean, how do you approach these headlines this time around, having now had the experience of what transpired in the first quarter?
I don't think the markets are going to care very much. I think what the first half of the year seemed to be all about was this idea that, oh no, the tariff rollout is bad. Oh no, the intent is to do something really, really damaging to the architecture of the global financial system. Okay, wait. They are amenable to market discipline. They will step back at the 11th hour. They don't mean this in earnest, really. Now, whether that's true or not, who knows? And by the way, whether it was true then and will continue to be going forward isn't a given. But what you seem to have extracted from markets, just in the seesaw that the S&P has done that we can see on the screen here, is the market said, wait, we need to be concerned. And then through painstaking experience, they decided, no, actually, we don't need to be concerned. There's going to be a step back when it counts. And I think the way that you and I described it on Futures Power Hour earlier today, I think that sort of still tracks. It's like the guy who's trying to start a bar fight, leaning on his friends, going, hold me back, and they're not doing anything. That's sort of what the administration here looks like. They're trying to sound muscular and threatening, even as they give the other side a bigger out. They don't look like they're prepared to start swinging punches. They look like they want to bark loud and not bite. So what this is, I think, from a market's perspective, is just noise. And what is much more interesting is what the economy itself is doing. And there, the record is at best mixed.
Dylan, before we go down that path, I did want to talk about the big movers today, and you mentioned one of them. Obviously, Elon Musk is back in the news for real news, fake news. Well, he said last night that the FEC filing was fake, but he also has tweeted about his intentions to start a new political party. Not to make light of it as we did at the end of First Call, but this seems to be a problem for Tesla shareholders, right? I saw Dan Ives, who's been a guest here on Network with me and Vic Jones previously, him of Wedbush Securities. He noted that part of the whole Elon Musk leaving Doge appeal for investors was that he'd be putting his time and attention back into Tesla, SpaceX, XAI, Boring Company, Neuralink, yada, yada. But launching a new political party, as you say, is akin to starting a religion. Should those of us who have been selling puts in Tesla be concerned that Elon Musk's eye isn't on the prize right now again?
I don't think so, no, actually. I think that Tesla is one of the greatest accumulations of engineering and technology talent on Earth. I believe that Elon Musk's role with Tesla is basically limited to sales and marketing. I guess you can say when Elon does the crazy political things or the crazy religion things or whatever you want to call this political party, it could be bad marketing or counterproductive marketing. But I think every time Elon Musk does something wacky and the stock sells off, I believe it's a buying opportunity. I believe that Tesla is not just a car company. I believe it's certainly the Western world. I have to kind of eliminate China because they've done so well in this domain. But I think outside of China, Tesla is the world's preeminent transportation technology company. And I believe that we're about to go into a massive transportation technology transition. And I believe that if anything, Musk doing crazy things to drive the stock down temporarily is an opportunity, in my opinion anyway, at the very least to sell some put spreads, if not to be nakedly long.
Ilya, it feels like if there's a technical level to work around, Elon Musk did accuse Donald Trump on June 5th of being on the Epstein list, which, as we found out yesterday from the Department of Justice, there's no Epstein list. But that low at 273.21 seems like an important low sentiment-wise in the market.
Even
right?
I was looking at an opportunity here today. I ultimately didn't like it because it looked expensive. You just end up with a lot of size. Tesla shares are expensive to trade, and I didn't want to tie up this much capital on what is, in my mind, a relatively narrow idea from a trading perspective, not from a buy and hold perspective. If our view is the transportation revolution, I mean, I get where that logic comes from. I get where that thinking comes from. Tesla has been really not so much on a mission to sell a better car, but on a mission to change the relationship between man and vehicle. And that's it's a compelling story, and it's a story you can see start to take shape all around us. I mean, I'm here in San Francisco. There's Waymos everywhere. It's not like self-driving cars are not already a thing. It's not like then the Tesla Elon vision of a new transportation paradigm, even if it's not them doing it, isn't taking shape. But 45 days in, 21 days out, that's a different time frame than that vision spans. And so but sort of with all that said, even I was looking at this today. with
But
my
were you really penetrating the issue? Were you going deep into the substance of it, or I mean,
I was
how
looking
deep?
at the price action and just going, you
Okay.
know what? We're at the bottom of a range. We're retesting a former range top as support. We held it once before. For a trade, this looks compelling. But I ultimately decided against it just because Tesla shares are so expensive. And it would be a big capital outlay, even with a vertical. So I ultimately decided, you know what? This might be the right opportunity, but not for my style and not my strategy.
I mean, what kind of an opportunity are you looking for? I mean, is it? Can you give and like what creates an appealing and attractive environment for you to really go deep into it?
For me, if I was going to do anything with Tesla here, I would just buy the stock and own it and come back to it in a number of years. I would not be looking at this as a 45 days in kind of a trade unless what I wanted was to have this either be a relatively small position in a larger portfolio or a very large position in a kind of medium size portfolio.
I mean, what would it take for you to get a really huge position?
From a trading perspective or from an owning and waiting perspective?
Either. I mean, whether
owning and waiting
in order to get you excited enough to just go huge.
Oh no, owning and waiting
right here, right now.
Owning and waiting, I get it. Owning and waiting, I totally get it. Buying a sizable position in Tesla, owning and waiting, I understand. If the time horizon is few years, yep, okay. But for example, would I buy a longer term option here a year forward? No.
I mean, I would love to have a huge position.
Yeah, and by the way, I want to be clear. I am not standing aside here because I don't think the setup is compelling. I think the setup is very compelling. I'm just not going to commit this much capital because for me to put on a small vertical here just to play for reversion back, let's say north of 360 would come at a cost of, let's say, 10% max loss. And I'm just not going to sign up for that.
And so how much would it have to tighten up or open up to allow you to go into the position with the confidence and depth that you would really want?
Dylan, I mean, I think like the consideration here, let's just, if I could take a step in for a second.
Please.
If we were looking at something like a short iron condor trade here in Ilia, there's two separate tracks here. Is this a good trade setup versus whether or not it's, for a small account holder, is this type of trade setup worthwhile to a certain degree? And I'm looking at this here. We're at the 1 standard deviation move 46 days out, basically selling a short iron condor to give us a typical 64% probability of profit. I like to aim between 60 and 70% for selling put spreads, call spreads, short iron condor. The risk to reward isn't terrible either, right? Risking 1,800 to make 700, so 2.5 to 1. Not the worst thing in the world.
Better than 50-50 odds of winning. Right. That's pretty good.
But this is the problem. The problem is that if you're a small account holder, right, if you're a retail trader, and we have this on the follow page here just for demonstration purposes, but like when Ilya and I are trading, like we're demonstrating trades in an account size that's $25,000 here on the follow page. Okay, so to put a position on, Dylan, that's going to take up $1,800 worth of buying power, and this single trade, if it goes wrong on us, could wipe out 7%.
Right. So it would just be too big to really deal with.
Yeah.
Well, I guess it depends on the definition of big, I guess.
Well, so
this is just one lot.
Big is ultimately a percentage.
Right. 100%. So if you wanted to look at this and say, okay, your max loss here is about $2,000.
Right.
On an account that has 200,000 in it, or even 100,000 in it as base capital, that's a 1 to 2% loss. That makes sense. On the model that is the follow account that Chris is talking about, where we're looking at 25-ish grand, that's a 7 to 10% loss. That's too much to lose in my mind on any bet.
And just too much risk ultimately.
In one bet, yes.
Yeah, like you could do a short iron condor in one of the currency futures right now and find yourself a similar risk to reward setup where it's like 2.5 to 1, and you could lay out a big enough position where it's like, if I wanted to lever up to $1,800 worth of buying power, I'm as my max risk, then my reward is actually going to be somewhere. It's going to be better, closer to even. It's going to be better than 2.5 to 1. Right? So like I don't need to lay out so much capital. But let's just, for the sake of this, we don't know who's trading what here. So let's just say this is like technically
with what account size.
This is the other.
But so
this
the
is the other side,
definition
though.
of big is 2%.
In general, I think if you were to talk to retail traders, and I'm sure people in the chat would acknowledge this, but most people are trying not to push more than, from the surveys I've seen as well, some of the stuff that we've done internally over the years, Ilya, not necessarily here with Tasty, but with IG, we've seen that most people are risking like 0.5% to 1% on any given trade. So so like for a retail trader, right, that's usually the high end of risk. And people are usually risking a little bit less than that because you're being conservative, right? You want to keep your powder dry. You don't want to throw away the capital. You got to stay in the game. Saying like, okay, this trade could potentially lose up to 7-8% of your account. Like that's just, so let's just assume that's not the case here. Forget we're account size agnostic here. Is this a good trade setup itself technically? Buying power aside, I mean, we're basically at that, the low point you have post Liberation Day, the high point you have post Liberation Day. Okay, the 50% mark's effectively 290. We're sitting at 294. If buying power is not a concern here, right? You have a lot of powder dry. Volatility's been low. You're looking for something to do. 64%, risking 2.5 to make 1. Technically it's sound, but position sizing may be difficult for some people. Dylan, you mentioned Palantir.
It becomes a relative kind of thing. If this can be a 2% of equity loss type of a trade, if you can structure that on your end as a trader, more power to you. Even, as I say, with all of my bearish inclinations, I was looking at this today because it's attractive. But
I mean, it seems incredibly attractive ultimately.
Yeah, it's attractive. It's just a question of how much risk do you want to tie up in one bet. And my rule of thumb is I don't structure positions to lose more than 2% on any given thing.
Right. Makes sense. No matter how attractive, no matter how tempting it is.
That's right.
You don't want to let one situation distract you, basically.
Yeah,
right?
I'm here to trade markets and make money over a long term. If I miss a trade here or there because it's too much of a flyer and too much risk, always another setup tomorrow.
Yeah, and the most important thing is to live to enjoy another day.
Yep. Most important thing is not to get cavalier, not to try to swing for the fences every time. It's to manage risk. And I think it was Paul Tudor Jones that famously said, I don't worry about making money. I worry about not losing money.
Palantir here, Dylan. You made the case that it's a dip buying environment. Certainly, there were some of those folks out today.
This morning in London, that it's a dip buying environment. I after today's action, I was more confident this morning with Angeline than I am with you now.
Well, good idea this morning. It's up 3.54% today.
That's what I'm saying. I mean, it happened faster than I thought. I mean, I didn't think that it would just move with such intensity so quickly.
Ilya, I mean, from a technician's perspective, just looking at this market, we really haven't broken down in any significant form or fashion yet. It's a little bit of, if we weren't too worked up about Iran and Israel, I mean, we're having a smaller reaction in this market today than we did with the Iran-Israel headlines when those popped off going into that weekend, middle of June. You know, June 13th rolls around and the market's like, oh gosh, what's going to happen this weekend? Today was a lesser reaction to that. And obviously it's, different, but.
I mean, that I think ought to make sense, right? Because we just spent 6 months talking about what the actual reaction function to tariff rhetoric is. When there is people coming out and going blah, 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 how much of that is intent versus bluster? And I think if you look at the S&P, if you look at the NASDAQ, never mind what the president thinks. Never mind what the administration thinks. Never mind how they intend it. The market has decided, apparently, that it's bluster. And so you cry wolf enough times, eventually no one's listening. And I think it only makes sense that the market's kind of going, yeah, well, you're not going to have a trade deal with Japan and Korea when you're trying to encircle China and those are your immediate allies. Okay. Did somebody not answer an email on time and now you're gesticulating in public? Is that what's going on here? Are we just stomping our feet a little so that all of a sudden in Korea and in Japan they go, oh man, did somebody reply to the email? It's been sitting in the inbox for longer than it should have. That's what the market seems to be reading into all of this. I actually don't think that it's this tariff deadline that's really motivating this sell-off. It doesn't really seem to be that. It seems to be that we're sort of testing the veracity of last week's bullish breakout in the wake of NFP. And that makes sense. It was a very low liquidity thing. In fact, the S&P last Thursday had its second lowest volume day of the year. There was only one other day in early January when S&P had lower S&P futures had lower volume than what that rally for the broader stock market on Thursday was based on. So it seems like the market is stress checking whether that was a real move. And depending on where you look, the answer is let's see. I think if you look at the S&P increasingly, the answer is it's kind of weak need and doesn't really believe its own hype. But it's not quite confirmed, maybe. So let's see.
I mean, there are valuation concerns, up at these levels. We've seen that we've gone back into that territory for sure. Let me just pull up some of the stock market fundamentals here. P's. Of course, it's not here right now. Okay, there we go. Earnings, forward revenues, and margins. Okay. So, yeah, I mean, we're back into the territory of forward PEs 21, 22. That's usually nosebleed type of section. GDP estimates are falling. Both Atlanta Fed and the New York Fed nowcast are coming in.
Mm-hmm.
Dylan, is this just going to be a rerun of last summer? I know I say this all the time, but it feels like it's going to be a rerun of last summer where the market tops out in July, we skid in going into August, rockiness into September, we find our footing in the fall, we rally into year end. Why shouldn't we just be amoral and stupid and simple and make money?
I mean, I am. That's kind of where I'm at. Because I'm much more risk on than again. I've missed out on all kinds of things in years past by virtue of morality, ethics, and basic, human judgment, and I shan't do that again. I'm more of a risk on appetite. I'm more of a risk on mentality because I think the Trump legislation is a big liquidity boom. I think the Trump threat is a non-existent threat. I think it's nonsense, and I think that it's better to be long. That's why I'm like, you buy these dips, even if it's by way of put spreads.
In terms of sector performance today, talking about a market holding up or breaking down, XLK technology is only down by 0.79%. That's been a leader recently. On the other hand, you have some of the recent winners, like your home builders. Those have been a touch softer here in today's session. Home builders are off 1.29%, undoing that bounce that we saw last week. Ilya, you said that bounce last week was related to the change in California's CEQA law.
One of
the catalysts. But you also see semiconductors here. They come in a little bit today. Dylan, markets don't go up in straight lines, right? Are we really going to get worked up about Laotian and Kazakhstani tariffs here on overtime?
No.
I mean, I certainly
We're not.
I'm certainly not.
Okay.
I mean, that's why I'm saying you buy the dips.
Again, but this is
tell?
the whole thing then, right? Is if you're not going to get worked up about these things, you have to ask yourself whether the reason the market is worked up, at least today, is those things. And I just don't think it is. So if I'm not going to get worked up on these things, and I think that's reasonable, I have to ask, well, so if these things aren't a big deal, does that mean that I should be a buyer? And I think the answer is no. I don't think these things are connected. I think the market has stopped caring about this stuff.
Trump just announced that he's going to pose a 25% tariff on Tunisia. So,
okay.
I
mean, just look at this.
The EU says it's not going to be receiving a letter.
That yells and doesn't want to fight.
Yeah, well, here's the important. The EU will not be receiving letters setting out higher tariff rates from the U.S. That's according to EU sources. So Trump's going to jack up tariff rates on Central Asia, and we haven't heard anything about Canada, Mexico, EU today so far. South Korea says it's going to step up trade negotiations with the U.S. to win mutually beneficial results and clear up any uncertainties caused by tariffs. Do you think that 25% goes into effect on August 1st is the question for people in the chat.
No.
I mean, this all seems like such a game.
No.
This
not.
doesn't look like. And again, just because it wasn't real before doesn't mean that it can't be real now.
Yes.
But from the market's perspective, which I would agree with, this is bark. It's not bite.
Well, we did have a nice day today on the other end of this, though. I know it's technically red still. Silver's off by 0.33%, but you have your gold and your silver, not so much copper, but they do have a sizable rebound over the course of the day. I, for one, am still holding long my silver exposure, looking for a move up into 38. Likewise, Ilya, today on Futures Power Hour, I looked at what's happening in gold and said, how could I not be long again? So I'm back in long to gold, which is nice. In the GCV4 contract, looking for a move up through 3,500 an ounce, which would be equivalent to clearing out the closing highs. I discount the spike that we see on April 22nd. So here in the GCQ5 chart, that's basically 34.75, 34.80. If you pop on over to the GCV5 contract going out into that October expiration, you see here that those swing levels are closer to 3,500. So I'm looking back in for a swing, the 3,500, 3,525. Dylan, it feels like the metals showed us something today with that resiliency, considering the dollar had such a strong session, considering that U.S. Treasury yields shot up in the form and function that they did over the course of today in the last few days. Should we just get long all the anti-fiat currencies right now in the wake of Trump's big, beautiful bill that jacks up the deficits and debts, and we're going into trade wars again, I guess? Why not be long gold, silver, Bitcoin, and go fishing this summer?
But you're saying, and be short the dollar still, just let the dollar sort of rot out and basically take advantage of the micro bump here?
Yeah. It's been rocky the last few weeks in gold and silver, but
I mean, I guess the only reason I pause on that is because it sort of isn't that contradictory to the taco trade?
Do we think that chickening out and or not following through supports or undermines U.S. credibility? I think is the question I'm asking myself. Right?
I mean, but I think everybody's kind of over that.
Moreover, Bitcoin hasn't gone anywhere basically since middle of May. And, yet. Anything can go anywhere at any time, sure. But it hasn't gone anywhere, and it's still testing that same top from back at the start of the year. I'm not prepared to say that this is any kind of bullish breakout until it is. Just ignoring what the ticker is, ignoring my general skepticism of this market kind of philosophically. Just looking at the chart, I would say we've come into former resistance. There hasn't been conviction to break that in 2 months almost. For all of what's going on in risk appetite, if this is a risk on thing, it isn't working. If this is a dollar foil thing, it isn't working because the dollar has remained weak. This thing can't buy itself a rally for 6 weeks in an environment where stocks are surging and the dollar is barely clinging on to the mat. This thing sucks. It has no impetus in it, speculative wise. This is not a market able to do the right thing when the right things are all lining up for it. This is a market that's waiting to fall. It's not unlike the flip side of what we're seeing in gold. Gold can't sell off on a day when yields are up and the dollar is up. It doesn't want to go down. And Bitcoin doesn't want to go up. It's the same logic, just in reverse.
I hear you there. That tracks. You figure that today might be a better day for Bitcoin, for Ethereum. It's certainly a bad day for everything else except for the dollar in the currency world. Much to my delight, we're seeing that the yen is finally breaking down here. Do we have a new CFTC COT report update out? Let me see if my data series has pulled it in yet from their website. I don't think so. I wish this would work faster. Did it? Did it? It did. Aha. All right, sorry. Let me just run this here real quick. We are still net short stocks, although that net short position has almost been eliminated. The prior week, we had 78,000 contracts net short in the futures market held by speculators. That's now only about minus 3,000 contracts. So the net short position in stocks has basically been evaporated here. And it has been eliminated. So it has been eliminated in NQ. In ES, the net short position is still minus 3,000. In the NASDAQ, it is now a net positive position of about 38,000 contracts. It's been trending higher the last few weeks, but there, again, is firmly now in positive territory. Likewise for the Japanese yen, because this is the one that has had the very, very large outside net long position recently. And I think we got longer. Oh boy, we did. So the week prior, there was 148,000 net long positions, and now there are 151,000 net long positions. So traders have been using this. I'm going across the currencies right now, Elliot, just spotting this. Traders have used the opportunity effectively to get a little bit more short the dollar in some regards, jostling the boat around in the Aussie, the pound. The Aussie getting a little bit longer. That's why today looks so painful.
Yeah.
Yeah. So this actually makes this more interesting. So yen position is actually people are more long coming into the past few sessions because the reporting week for the CFTC COT report is through every Tuesday at 5 p.m. Eastern. We usually get the data series on the Friday. With Independence Day last week, it was pushed until today at 3:30 p.m. Eastern. So prior to non-farm payrolls, prior to Trump's tariff headlines, traders were shorting more dollars, Ilya. They weren't getting on board with it yet. So we now go into this week This feels like the dollar. We talk about that tactical bounce, and it feels like we've been talking about this for a week or two. Maybe this is it finally starting with the higher yields today. And I've been rambling for a bit, so I apologize.
I mean, I'm on board with where you're heading here. I'm at this point net long dollars. Not against the yen at this point. I don't think that's confirmed yet. It's basically right where that hammer candlestick is. So it's basically right at the bottom of its immediate range. We can see that range holding up from about late May. There's that wick low there. Then there's the hammer candlestick right there again. So it's a little bit congested here for my taste. But I'm short the Aussie. I've been short the pound for a while at this point. I think I got short the pound, about a week and a half ago, give or take. And now I've added euro. Now I've added Aussie. I'm looking at yen. I'm looking at the Canadian dollar. I'm looking at other things on the spot side. See if I can get something done in some of these spots where there isn't a micro futures contract that's liquid and easy to move around in, like the Kiwi or the franc, if the opportunity presents itself. I don't think it's there yet. I think I have all the exposure that I want now, but it does look like we might be starting to sniff out something that's more risk-off classic. Stocks down, dollar up, maybe something going on in gold. What's interesting in this context is sort of the weirdness in the bonds. And you'd think, okay, fine, if at the front end of the curve, maybe if you believed the jobs data, then it gave you a sense that, okay, maybe the Fed is going to hold back rate cuts. And indeed, it's diluted a little bit. We're only baked for 45 basis points this year at this point. Last week, before NFP, it was more like 60. So there's been a meaningful kind of unwind by almost a cut for this year. For next year, the calculus hasn't changed very much. And so you kind of look at this and you go, well, why is the long end so heavy? And that's really why I got out of it today. And I still want to be a buyer. I don't want to be a seller. I don't think it makes any sense that long end rates are going up. I think if you want to make the argument that this is the influence of the deficit on the big, beautiful bill story, and say, okay, well, this is a higher set of longer-term borrowing costs for the U.S. because what this big, beautiful bill, quote unquote, does is increases the deficit by another $3-odd trillion over 10 years, which very poetically is about the same as what Biden did, except Biden stoked demand. So at least you get some economic growth out of it. This does it mainly through tax cuts and doesn't get economic growth out of it necessarily, because whereas government spending forces demand through the economy, tax cuts put money in the hands of people, and then you have to hope and pray that they'll spend it. And if you look at the example in China on display right now, for 2 years, the government has been giving people money, and they've not spent it. And that economy has been stuck in the mud, basically now for 2.5 years, since early 2023. So just because you give people money doesn't mean they'll do something with it. So this is a growth in the debt without necessarily growth in output. That would be the case if spending was what this money went towards directly. So
Dylan,
maybe that's what this is.
Ilya's on this whole kick about the spending here. And when I was watching this legislation pass this week, and I was looking at the polling, and in no uncertain terms, according to publicly available polling data, same polling firms that said Donald Trump was going to win the election in the fall, for what it's worth, this is ranked as one of the most, if not the most unpopular bills to ever pass through Congress. And I keep going back to your rant about how there's a uniparty and there's only one party system and how no one's actually taking the measures to cut the deficit and the debt and no one is actually working on behalf of the American people. That kind of sounded like what Musk was saying over the weekend here. And now as we have this bill passed, as this bill passed, rates up at the long end, 25, 30 basis points. We're starting to creep up.
Yeah.
You have to have some sort of strong opinion on this legislation, Mr. Radigan.
I've seen too much, Chris. I've seen too much. And so at this point, it's obvious that it is a uniparty. It's obvious that the uniparty works on behalf of a small group of wealthy interests. It is a futile act, in my opinion, to try to do anything otherwise. And you can either kind of go along with it and just ride the liquidity train and try to make some money, or you can bang your head against the wall, as I believe Mr. Musk is about. I mean, Musk is not going to create a third party. That is a certainty.
Not a functional one anyway.
Well, his party is based on austerity.
What's that?
His party's main edict is austerity.
Yeah, I mean, it doesn't even matter. It's like,
I'm going to raise your taxes and take away your benefits. Vote for me.
I mean, the whole thing's locked up by these two parties, airtight, which is why they are so happy to do whatever they want. I mean, they really don't care. If you look at some metaphor, somebody was talking about this, or it was on the internet or something, where it was basically somebody saying, I'm teaching my children about democracy and I'm letting them vote for whatever they wanted to eat. And they chose hamburgers, but then I decided to serve them sushi because it's a gerrymandered house. So that just to teach them about politics. And so the voting ritual is completely is an illusory ritual of quote unquote participation that is conducted in order to prevent total chaos while the entire government works for 10,000 people, 5,000 people, and everybody else is irrelevant or an object to be extracted. Is that a rant?
It's usually are angrier. I thought that was well thought out.
Okay.
Yeah.
I'm feeling fairly contemplative. Anger is a wasted emotion in a situation like this, in my opinion. I mean, I have became internet famous for getting angry about this government many years ago, but I don't feel compelled to repeat that particular ritual. I think that you buy the dip. I'm a broken record, but I just think that these sell-offs are opportunities, full stop.
Stop worrying and love the bomb. What's the worst that happens? Ilya, what brings up what's really interesting and something that I know there is a great deal of complaint that the stock market is not the economy, and for good reason. But up until like 2015, the stock market has typically been seen as a leading indicator for the economy. Like it leads 6 to 9 months ahead. And you see that
sentiment about the economy, sure.
Right. But in a world where you look at these headlines, and I'm not one to be an alarmist about the AI revolution that's coming, and yet you look at the headlines and you look at companies in various industries, even in some like the car companies, where they're slashing management roles, data analysis roles, entry-level jobs. And they're not doing it because operations are slowing. They're doing it because they don't need the work to be done anymore by people. Because once you have a computer that can do something faster and cheaper than a person, those robots don't need to get sleep, right? They don't need time off. They don't have to worry about missing work for their kids' game.
Mm-hmm.
And these roles aren't coming back. I can't help but think that we're moving into a world cyclically where whatever's happening in the real underlying economy doesn't really matter for what's happening here in the stock market, which is bad, of course, because it's that K-shaped recovery that continues. But in a world ruled by AI and one in which we're just shoveling wealth upwards through this tax bill? I mean, doesn't that make the stock market even less reliant on the real economy over the near term? Oh, no. Okay.
I think this is exactly the kind of thinking that has us at the highs that we're at now. And the failure of this kind of thinking and the return of gravity is how every single bubble in history has ever popped. The moment that the markets disconnect from reality and start to say, oh, the reason to go up is because we've been going up, and that positive sentiment is the only thing that matters, and reality doesn't, the moment the market becomes convinced of that, and enough people believe that nonsense, everything breaks. This has been the case with the popping of the dot-com bubble, all the way back to the popping of the tulip mania. If all you needed was wishful thinking and sentiment, we would be buying houses with tulips today. No.
That's not how you buy your house.
Reality matters. Reality matters. You cannot, these are real companies with real workers. Sentiment, of course, matters, but if the real economy is in a bad way, the stock market is not going to reliably ignore it. Full stop. Just a matter of time. Now,
Dylan,
at this point, the economy is not in a bad way. It's in a slower way than it was last year.
Dylan,
to the Fed's point, there is no panic.
Are we just huffing the highs here? Are we just letting our intoxication with the market having gone up and being long and enjoying the ride? Are we discounting the fact that there is gravity still here?
Who makes more money, the people that are long or the people that are short? The problem with getting short.
Hell yeah, brother.
And the problem with getting short is the timing is so. It's not. I mean, that's why Ilya, I think, is admirable, because he's capable enough to do these micro positions and be wrong, micro position, be wrong. He's always sort of testing, and then he gets a kick when it goes. But that requires an incredible amount of discipline and patience, and you have to endure all these micro losses, waiting to be right. And whereas that doesn't, you may not accumulate gains constantly from the long side, but the demand to be right on timing constantly is so much less from the long side, and the historical behavior of the market is so much stronger. And so I don't see unless you're willing to run the sort of Ilya Spivak nibbler strategy, which requires a lot of discipline, and it's a wonderful strategy, but it's a very specific tactic, and it's a tactic that exists specifically because of the difficulty of timing the short position. So and forget whether you think the bill is a good bill or a bad bill. Obviously, it's a terrible bill, but it is a bill that adds more money to the wealthiest people, as we give more money to the rich and take more money from the poor, the rich will pour that money into real estate and stocks. That's it.
Is the bill deflationary in that regard? You're taking consumption, you're undercutting consumption for 80% of the population.
Yeah, I mean, I think that is a worthwhile consideration. Yes.
Well, and
because
therein is the break-even story front and center. This is what the bond market is saying. The bond market is saying you should not be worried about inflation. You should be worried about disinflation. The problem is that consumption is weak. The problem is the economy is in a bad way. If you keep seeing consumption get weak, because tariff this, tariff that, whatever, 68% of GDP is household consumption domestically. You break that, you've broken everything.
Break that, you break a lot of things. I do see a funny comment going around here because Trump just You know, Dylan, there's always like these little tells that makes me think that the administration is doing things from the seat of their pants, like the rapid response. Trump's official White House team just posted this letter here, which for the non-discerning eye might not notice anything except for the fact that it says Her Excellency, which is correct because the president of Bosnia and Herzegovina is a woman, but Dear Mr. President. These things were all just copy and pasted from some template that was contrived this morning. You know, the fact that they don't know if it's a king or a queen or his or her excellency, Mr. or Mrs. President, and all these letters are going out, like this is another one of these, oh gosh, just like in early April, the administration didn't have a grand plan here. Trump probably woke up over the weekend and said, okay, now that the bill's done, let's go back to the tariff talk. And everyone's left around scrambling, trying to figure out what we do next. So maybe that's the most reassuring aspect of all this, Dylan. If this was really a well thought out plan, then the market would be down a lot more, but a lot of flexibility if we're making it up as we fly the thing.
Yeah, and the track record is taco.
We don't say that around here, okay? We don't say the taco trade around here. We're not going to entice the president into retaliatory tariffs to prove that he's not a chicken. It's not, you know, maybe we're trying to antagonize the Ayatollah into developing a nuke, but we're not antagonizing the president of the United States into putting on more tariffs.
Yes, he already has a nuke. Let's not go there.
Yeah. Okay, so Dylan, tomorrow market, what's your perspective? Lean risk on?
I mean, I'm kind of the same way I was this morning with Angeline, which is I'm a dip buyer. I'm a put spread seller. I am pleased a little bit with the little dollar bounce, although obviously it doesn't have a tremendous amount of credibility. But the most exciting thing right now for me is put spreads on the sell-off, take advantage of the volatility, and figure that the tariff talk is really just that. It's a lot of talk.
A lot of talk. Ilya, tomorrow, what are you looking for most?
I would say for me, the next kind of big thing here is to watch the bond market and see how all of this digesting of what we've been seeing here on the data and the cumulative sort of view, Fed versus markets on rate cuts, how that works out. Because if the markets are in fact going to start to focus on growth, and their response to NFP would suggest that's where we're at, then there's a big disconnect still. The market is looking for 2, maybe 3 rate cuts next year. Rates are rising. There's a weird response here in that sense to data last week that wasn't good as such. We got a slight beat on the headline and a slight revision. The 2-month revision was down 95,000 jobs. The unemployment rate ticked down because labor market participation went down. So a bunch of people statistically stopped being counted as unemployed. That's not a good reason for the jobless rate to go down. So the market looked at a headline and a low volume, low participation kind of, they said, ooh, number go up. But that doesn't square with a lot of what else is going on. And on Wednesday, we have these FOMC minutes from the meeting where they issued the latest forecasts that only say 1 rate cut for next year. Bond market's not buying it. And what's interesting is either are Fed funds futures, but it's not clear what it is that they are buying. So there seems to be some sort of incongruous situation here. The dollar is up, but gold can't sell, but yields are up, but bonds don't see inflation. There is room here for some liquidity backfill to ultimately give us a little bit more clarity. So I'm going to be watching the price action and how the markets set themselves up ahead of Wednesday's FOMC minutes with a lot of interest tomorrow. I think it's not impossible that we're getting back long the bonds here within 24 hours.
Before we go out, I would just point out that today is the day after July 4th. The 3 days after July 4th, over the past 20 odd years, going back to 2001, according to the Stock Traders Almanac, this hasn't been a good stretch for the market. It's actually running into July 4th up about 85% of the time, 86% of the time in the 3-day window running in. And on the other side thereafter, it's a little bit choppier. In fact, today is the weakest of the days in terms of percent up, percent down. So thinking about how the market performed today, thin volumes, people coming back online post-holiday, and it's Laotian and Kazakhstani tariffs that are sinking us here. We'll leave it there now because overtime's out of time. We don't believe that here. It's out of time here for overtime. We'll be back tomorrow, same time, same place. As always, every Monday through Thursday, right after last call, 4 p.m. Eastern, 3 Central. So for Ilya Spivak and Dylan Radigan, I've been Chris Vecchio. Good luck trading. After a brief break, up next, more Ilya. He's here with Macro Money. See you there.
See you there, everybody.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
What's something that traders tend to obsess over that you think doesn't really matter?
That's a hard one. I think, of course, it's different for everyone, different psychological mindsets. For me, it's I found myself getting ahead of myself, trying to manage too many trades at one time, and also trying to focus on your narrative, your strategy, and holding to your cards when things can turn against you. So kind of your conviction.
Honestly, it would have to be news. I would say, and this has been one of the things that I've sort of fine-tuned myself since I've been at Tasty. News is something that we all kind of look and pay attention to, but it doesn't always have to drive your opinions about trading. And I think the less that we allow that to happen, I think the more clear-headed we are, and then we just end up using mechanics.
People get a little too nervous about individual names. I think if you stick with the ETFs, especially if you're newer, I think if you stick with ETFs, you'll have an easier time just within the market itself. Individual names can definitely rise and fall very quickly. ETFs tend to be a lot slower going. And there's also less risk as far as individual company risk.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform
or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Well, we're back from the Independence Day holiday, a shortened week last week for U.S. markets, and there's quite a bit to unpick here because the market seemed to give us quite the fireworks in response to last week's last bit of economic data, but the substance of the data perhaps didn't match the reaction. Now, as the week begins and the second half of the year gets underway in earnest, a lot of questions are left on the board. And perhaps this week, we might start to get some answers about where these markets really want to be going. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to do here is take a look at what these markets did and what the data was that seemed to inspire the outcomes from price action, and then we'll try and figure out what this week's offering might do to help and establish next steps. So let's first take a look here at what the markets did and how they ultimately availed themselves on this shortened week. And we can see here continued gains for stocks, 1.6% for the S&P, 1.4 for the NASDAQ. So not dissimilar sort of performance there. And much of that, interestingly, happens toward the end of the week. In fact, we get a very spirited push to new year-to-date highs for both indexes. And that's interestingly against the backdrop of yields heading higher, 1.7% rise in the 10-year, but more eye-catching, this vigorous rise at the front end of the curve, 3.7% rise in the 2-year. Crude oil still wiggling around familiar levels, 2.3% gain, but that's of course after an 11.3% sinking, and so not exactly the kind of move that suggests anything but digestion at familiar levels is going on here. Gold managing a little bit of a rise last week, and of course that's interesting in the context of yields being higher. Typically gold hates rising yields. Nevertheless, here we are. And the other kind of interesting consideration here, of course, the dollar, which ends up putting a kind of mixed bag of a performance. It's down a little bit against the yen, which is a bit odd, or up a bit, I should say, against the yen, and down a bit against the euro. Not really big moves here. And in a context where U.S. yields are going up, somewhat conflating in the sense that perhaps the yen being down a touch makes sense if U.S. yields are going up, but then the euro being up a bit, somewhat incongruous, one would think. If the dollar were rallying, it'd be rallying. And in fairness, we're seeing a little bit more of that here as we start the week, but somewhat of an uneven performance on the whole. Bitcoin up again a little bit, 2.7%, but the overall story for Bitcoin, of course, has been of stasis basically for 6 weeks. We're still in a range, and we're still kind of bobbing around the top of that range, struggling to find lasting direction, either finally through the top of that range or back lower. It is, of course, very interesting that Bitcoin was this well supported in an environment where at least the dollar was a mixed bag and yields were up, because, of course, Bitcoin doesn't yield anything. So higher yields, one might think, wouldn't be so great. But this really is where all of this reaction starts to take on a sort of suspect character. Last Thursday was the lowest volume, second lowest volume day for the S&P 500, or at least the futures that track it, of the year. And so it really was very, very thin. And with that, you're liable to get some weirdness in the price action. And some of these things definitely look out of step. So what we'll do here is we'll take a look at what the data was that came out and see why the markets might have read it this way, and then consider whether that reading seems to actually make sense, at least sort of logically following from what the price action is telling us. First, of course, was the U.S. jobs report, which came out ostensibly better than expected, 147,000 jobs added versus 110 expected. So at the headline, that looks better. The unemployment rate, 4.1 versus 4.3% expected. Again, at the headline, that looks better. Let's take a look at some of the internals. So not only was 147 better, but the prior number, 139, was revised higher to 144. Seems better. The unemployment rate, 4.1, looks better at face value, except when we look at the participation rate and see that it actually went down. So this starts to look suspect immediately because, of course, the way that the unemployment rate is counted is it measures the number of folks that are unemployed in the labor force, where to be unemployed, one has to be defined as looking for work and then unable to find it. If you are not looking, that is to say, you drop out of the labor force, then you are no longer counted as unemployed. And after a certain amount of time, you drop out. And what we see here is that labor force participation here actually gets a little soggier. Now, that we go from 62.4 to 62.3 doesn't sound like it's a lot, but that 0.1% change is across the entirety of the U.S. labor force. So when we think about the actual number of jobs that speaks to, it's quite a lot. And certainly enough to give us a little fuzz here on the unemployment rate. So it did go down, but not for a very good reason. In fact, not for a good reason at all. Moreover, we end up with a little bit of an upside surprise on the headline number for NFP. Certainly. So we were looking for 110. We got 147. That's 37 more thousand than we thought. The prior number is 144. The expectation, or at least the initial estimate, was 139. That's a difference of 5,000 jobs. Okay, so 5,000 jobs along with 37 is 42,000 jobs over the course of June and May, more than we thought would be on the menu before this data came out. That sounds good, except when we take a look at the 2-month revision here, NFP is typically revised for the prior month and the month before, we can see that the cumulative 2-month revision here was actually down 95,000 jobs. In other words, what we actually learned here is that we ended up with 53,000 jobs fewer over the past 2 months and June, so June, May, April, than we thought. Moreover, the downside revisions on this 2-month running tally, they seem to be getting larger over the past several months. So do we have more jobs? At the headline, okay, but do we actually have more jobs? Well, the answer seems to be no. Furthermore, when we look at how we end up with more jobs, this is a great chart from friend of the show, Daniel Dubrovsky, who's a macro and data analyst. We have this insight here, so this wonderful chart demonstrating that nearly all of the gains in employment, 90% of them, came from just 2 sectors. And so what we find is that, first of all, for healthcare, where we get a big outsized jump, it's actually a move down May into June. For government, it is certainly a step up. There's no question there. But as we discussed with Chris Vecchio earlier today on Futures Power Hour, check out that show, this seems to largely come from a longer school year and paying teachers more than you might have expected, than you might have budgeted for, just because of a calendar quirk. And so it doesn't look like what you're seeing here is the sort of robust labor market that the markets appeared to extrapolate, again, in very thin volume, when the numbers came out. Then we got the service sector ISM numbers. They were a touch better than expected, 50.8 versus 50.5 expected. As ever, this is in the logic of PMIs. 50 is neutral, above 50 is growth, below 50 is contraction. On the whole, we can see that the outcomes were pretty close to expected, 48.4 versus 49 on manufacturing, 50.5 versus 50.8 on services. The numbers are fairly close to what was expected, giving us on net a cumulative index, what would be a composite index, at about 50, give or take. Because what we end up with is an economy that's more services than manufacturing, so you sort of tilt the average in services direction. If you were to just take a pure average here and not weigh anything by anything, then you would end up with a neutral number at 49.9. But since services is a bigger part of the overall, one would tilt it there a little bit for the average and say we're probably somewhere around 50, which is to say that according to the ISM numbers, the U.S. economy has stopped. It's basically at standstill. Moreover, if we look at the internals, we can see employment is shrinking for both sectors, both of these indexes below 50, which means that we're seeing contraction in employment. And since we're seeing progression deeper below 50, we're seeing that that contraction is accelerating. Meanwhile, on the price structure, still very, very heady readings here, well above 50, indeed well above 60. So we get runaway price growth. This is exactly the kind of stagflationary risk that the markets have been concerned about and that the Fed was so concerned about in its latest policy announcement. We'll notice in the June SEP, Summary of Economic Projections, they lowered growth expectations, increased unemployment expectations, increased inflation expectations, and on that basis said, we're not going to have much room to cut rates in 2026, at least to the extent that we thought. So we're going to go from 3.4 as the year-end rate to 3.6, shaving a cutaway and saying from 4.4 now to 3.9 is 50 basis points this year, to 3.6 is only 25 basis points next year, to 3.4 in 2027 is another 25 basis points. In other words, what the Fed did was it lost a rate cut in its forecasting for 2026 between March and June. And what the markets are saying is, no, incorrect. Now, what's interesting, of course, is in the wake of this data last week, we have seen a little bit of a hawkish adjustment for the pricing structure for this year. We're now only looking at 45 basis points. So the market is not quite fully baked for what even the Fed is saying. The Fed is saying 50 basis points. And going into this data, the markets were at 58, 59 basis points. That is to say, they were slightly on the dovish side of the Fed, and now they're, by 5 basis points, slightly on the hawkish side. But the calculus for next year has only become more dovish. So for 2026, before the data, we were looking at 60 basis points, maybe 61 for next year. Now we're looking at 65, 66. Either way, though, that is a far cry from 25. So the market thinks that there's going to be 111 basis points in easing between now and the end of next year. And the Fed thinks there'll be 75 basis points. That is a stark difference. That is a difference of 36 basis points. That is almost about 3/4 of the way to a difference of 2 cuts. Certainly a difference of at least 1. And so this makes this week's publication of minutes from that June meeting a point of particular focus for markets. Because despite the fact that the markets clearly seem to react to the NFP data at face value, seem to react to the ISM numbers being a little bit better at face value, and say, this means less scope for rate cuts in the near term, they are still holding on to a much more dovish view of the overall easing cycle here than the Fed has endorsed. And that disconnect has to get closed somehow. Someone here is wrong, and somebody has to reprice expectations. So what the logic is ultimately in these minutes, very interesting for markets to watch to see if they are off sides, and what we actually need to see from here are higher yields, or if in fact the Fed is offside. And the market's perspective is very simply rooted in economic data. Never mind here that we won't get the actual second quarter GDP numbers for quite a while. And so these early estimates from the Atlanta Fed are just that, early estimates. They don't necessarily merit taking at face value. The more important thing is the direction in which the estimates have evolved. Because what this reflects is a steady stream of economic data that is updated in relative real time. And so what you end up with then is a situation where you have a running tally from this data on the tone, as it were, of economic data coming out of the US. And very clearly, that tone is not pointing in a positive direction. That green line is sloped as it is telling you very clearly that what we're looking at here is a general deterioration in U.S. economic data and in what that data means for the overall economy. So perhaps this is why the markets are screaming, we need rate cuts in far greater scope and size than what the Fed is talking about. And perhaps, given what the Fed minutes will show us this week, there will be a greater reckoning with this disparity this week, but perhaps giving us, ultimately, higher bonds. We'll see if that negative view on growth, if it were to materialize, then weighs on stocks after a rocky start at the start of this week. It maybe even boosts the dollar, which is attempting to find a bit of a lifeline, not so much because yields are improving, but on risk-off grounds, where the battered dollar, which has been down since the beginning of the year, close to 10%, maybe finds its appeal as an anti-risk asset once again. And then otherwise, besides this focal point on U.S. data, there is another batch from China. The inflation rate seen coming in at 0. So economy-wide standstill and an absence of demand seems to continue. A wholesale inflation seen down 3.1%, only a modest improvement over the 3.3% in the prior month. And then over the weekend, we're going to get the trade numbers, and it'll be the exports numbers that we watch most closely, but also imports ought to merit some attention. Exports, of course, because we need to see if the front running of tariffs has finally run its course, and imports to see if domestic demand is finally starting to show some signs of life. And of course, the story for China now on 8 consecutive quarters has been de facto economy-wide deflation, which is to say that real GDP, adjusted for inflation, is running hotter than nominal GDP, not adjusted for inflation. telling you that the inflation adjustment is negative, and telling you that there is no demand to speak of in the economy, and it's basically on wholesale discount. That of course, is a major issue because, as we've talked about at length here, China, the Eurozone, and the U.S. make up the lion's share of what drives global growth. China seems to still look anemic. The U.S. still seems to be like the only game in town, and clearly the markets are worried about it. And the Eurozone, as we've just seen from the latest batch of PMI data there, is back to idling. And that is Macro Money for today. As ever, we are here right after overtime, Monday through Thursday. That's a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'll be back with Chris for Futures Power Hour Mondays and Fridays this week, with Victor Jones for The Price of Truth on Tuesdays, back with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting at Ilya Spivak on former Twitter and on Blue Sky. Thanks very much for joining. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The future of trading is here.
Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, of course, the one, the only, Katie McGarrigle, the wizard of Tasty Trade.
What's up?
Wizard, Jedi, Ninja,
Samurai. Yeah, I'm a samurai right now.
Everybody wants to know, Katie, we start the show off this way every Monday. What video game are you currently playing?
I am currently playing Ghost of Tsushima.
All right.
So I am literally a samurai fighting off the Mongolian invasion.
Okay.
You know, trying to beat Kublai Khan and his ragtag relatives, going around.
I love it.
Trying to save Japan.
I love it. Are we close to winning? What stage of the game are we?
We are currently sneaking through a Mongolian taken over castle.
Okay.
I'm trying to sneak through the castle right now. I'm not a stealthy player, so I'm having a tough time trying to sneak around and not get caught.
Trying to keep your sword in the
Yeah, exactly.
sheath.
Exactly.
That's tough.
Yeah, I have to sneak through past all these dudes without raising the alarm, and I keep, raising the alarm. What can I say?
Well, good luck to you. We've got some gamers in the chat. Lone Sophos is playing Silent Hill 2, and Emmett is playing Baldur's Gate 3.
Nice. Yeah, it's a very beautiful game, Lone Sophos. It is. It's very scenic and very pretty and things
It's a good
of
way
that
to
nature.
relax.
Yeah, it's totally a great way to dissociate from the hellfire of the world. Yeah, exactly. Yeah. Learn some cool stances and become extremely overpowered so that I just, like you said, take people out with one little tap of my sword practically. But
It sounds like there's a little bit of history sprinkled in along the way.
yeah, there is. I don't know how much of it is really based
Educational.
Yeah, I'm assuming. They went through some real horrors, as far as I can tell. But I think all war is hell, so it kind of tracks. But that's what I'm currently playing. What's going on in your world? Did you have a good weekend?
Yeah, good weekend. Thanks for asking. Took a little bit of time off. Went to Michigan. Enjoyed the lake.
Muchachos?
Yeah, had a nice time.
Good.
In the sun. Good weather.
As you deserved.
Yeah, I didn't blow anything up. I'm not a big fireworks guy, believe it or not.
Yeah.
But other than that, we had a good time.
Nice. Well, so speaking of fireworks, did we talk about this when we were on the show? I don't even remember when we were on the show together last, but have you seen the Put It in Reverse, Terry?
Yes.
So I went to the Cubs game on Thursday, and I don't own any Cubs gear because I'm not a Cubs fan, even though Tasty Trade sponsors them. So send me some gear. But I've ordered a Put It in Reverse Terry t-shirt. And I was expecting to get so many compliments on it, and only one person thought it was cool. So I was a little bit devastated by that. But
It's beautiful. I saw a video on X, I think it's probably on Instagram, TikTok, making the rounds, where someone handed a young child a Roman candle. I mean, the kid probably was old enough to handle this. I don't know what the age limit is, or I don't know if limit's the correct word. It's probably for children 3 and up. So this child was maybe 3, 4 years old.
yeah.
Definitely.
Are you talking about the ones that literally shoot out the streams of...
Yeah, like a magic wand kind of thing, Roman candle. And this person hands this child this Roman candle. They light it, and they just so happen to be kind of right in front of their front door, which was wide open. And the child didn't really know what to do because...
Yeah, why would you? You have a fire.
3 or 4.
Right.
And they ran right in the house, and that Roman candle was just blasting off.
Oh my gosh.
So we've got to start to bring in more content from the internet on this show.
Yeah.
And turn it into something else, I guess. But when you mentioned put it in reverse, Terry,
Yeah.
that made me think of that.
That is wild. That gives me so much anxiety. Yeah. Nope. I mean, I would hate to be a fireman over 4th of July.
It's an extremely dangerous holiday.
Extremely. We need to do what, like, I think Germany does, where they just do, like, the drone shows now, and they put them in the cool formations. The dogs don't get scared. I'm sure people keep their appendages and their fingers a lot more.
This is America. You're not going to take their fireworks.
I know. Yeah, I guess not. But a girl can dream, right? Anywho, something I was not paying attention to that pertains to this show, I was not really looking at my crypto, but it doesn't really seem like anything really popped off over the weekend.
It's been relatively quiet in crypto land, Katie. We can jump right into our crypto market update. Talked about this on Options Trading Concepts Live with the guys earlier today. I have a Bitcoin price of right around 108.2.
Okay.
And at the time that we put this together, 108.5. Volatility is low. Bitcoin has been kind of grinding higher. It finds buyers on the dips when it does pull back. ETH trading a little bit better here. Solana trading a little bit better here. Well off of those lows from 3 months ago when we had the post-tariff flashcard Liberation Day event. I don't know what you call it, Liberation Day, I guess. And, really had some offside positioning across the board there. So you had that flush in the market. You saw volatility spike. And once we kicked the can, and certainly tariffs are top of mind here today, I think we get through that as well. But the rest of the story, bounce back up to all-time highs. And we really haven't been able to break above that 110 or so, 110.5 on the 3rd of July.
Mm-hmm.
Relatively quiet week thereafter. And starting this week at 108, not really doing too much. If we pull up our platform, I want to show this view. And I know there's been a variation of this on the desktop platform, but the web-based trading platform, which you can access at my.tastytrade.com, is just getting better and better.
Amen.
Feature packed, more coming soon. If we can jump over to that, you'll see what I'm talking about here. We've got the grid mode, I guess is what they're calling it.
Yeah.
Multi-chart view here. You can set this up a variety of different ways. I've got 4 here, but if you click on multi-chart, you can see you can get a few different setups. But what this allows you to do is look at multiple time frames as well. You try to put the momentum picture in perspective here. You can add all of your different indicators. We'll set this all up. But we've got Bitcoin on a one-day basis, so you can see kind of, again, trading near all-time highs. And then you look at this on the hourly, it's really gone nowhere over the last couple of days.
Mm-hmm.
So maybe we get some volatility, but it's been pretty sleepy out there. Same thing with Solana. Here's Solana going back a couple of months. I mean, the range is a little bit larger if I zoom in here. But, we've gone sideways for the better part of a couple months in a lot of this stuff.
Yeah. So what does that do to change your current strategy? Or, I'm assuming if you're going sideways, are you doing anything more in pools?
Yeah, liquidity pools are grinding. So if anyone is not familiar with what we're talking about there, you can provide liquidity to decentralized exchanges such as Uniswap. And I do that. I think Katie does that. Or we've done that on the show at times. On the base network, you can use a wallet like the Tasty Crypto wallet to do that. But you're providing liquidity and you are generating a yield or return in the form of fees that's derived from that trading activity on the exchange. So decentralized exchange, Uniswap, this is a way to almost deploy a somewhat neutral strategy. As long as the underlying, in this case, ETH, stays within a trading range, very similar to an options trade like a strangle, and you're going to generate a return. Similar but different, I suppose. If you've missed any of that content, check it out on the Tasty Live website or go over to Tasty Crypto on the YouTube and you can find it all there.
Hell yeah.
But yeah, those strategies have kind of worked here. As volatility has gone lower and lower, I think at some point it hits the floor. But as it's gone lower, selling premium, which there has been volatility risk premium in IBIT options. You know, the last time that I checked, if we jump over back to the slides for a second here,
Yeah.
you'll see on our volatility dashboard, 39% implied vol, which is a very low IV rank for Bitcoin. And this is the Deribit implied volatility. But realized volatility over the last 30 days is 30%. So you have a decent premium in there still. You've been paid to sell premium or sell volatility, though it is pretty cheap.
Okay.
It could get cheaper. I think you do pop at some point, but volatility has been very low. So that's a trade that's been working. Selling strangles in there, selling calls, selling cash secured puts far out of the money. That has been working. But if you've been looking for that big upside move, I mean, it's just been pretty quiet out there.
Yeah.
You can see very small expected moves here with Bitcoin. ETH should be like 267. Apologies, I haven't updated that slide. There's a typo there. But yeah, nothing too crazy that jumps out at me.
Do you feel like there is a catalyst for our announcing movement? Is it like a larger macro thing that's going on in markets as a whole? Is it specific to just crypto, or like what's your take?
Yeah, I mean, I think you need to ultimately see that kind of liquidity catalyst, which if you look at the liquidity profile, it's definitely been more conducive. You can look at M2 and the rate of change of the money supply. It would imply on a forward basis that you do get higher crypto prices or higher Bitcoin price on that factor alone. You still have interest rates at a relatively high, historically high rate here if you look back over the last decade or so. Not if you go back to the 70s, but 4 or 5% is elevated versus where we've been over the last 10 years. I think there's the potential for lower rates on the horizon. You still have an economic environment that's conducive to asset prices and asset price inflation. That's gold, that's crypto, that's energy stocks, it's crude oil. And so I think as these things play out, you'll get price that grinds a little bit higher. Eventually, you get to a price where then you start to see some rotation into other names. And one that we might talk about here today is XRP. But it's also just characteristic of what we're seeing in terms of volatility and kind of entering into this maybe summer kind of slowdown seasonally. Kind of seeing a quiet market, relatively speaking, that's grinding higher. Up until today, we had a little bit more vol, but you look at equities, it's kind of been the same thing.
Yeah, makes sense. Okay, I just wanted to see if there were any other things at play that maybe I wasn't thinking about.
I mean, it could be that you get positive news on the regulatory front. It could be more ETF approvals later on this year. It could be better than expected economic data. But I don't see anything in terms of a binary event that's on the horizon that we're necessarily waiting for.
Right.
I think it's generally just going to be driven by broader liquidity conditions. And do you have a more stimulative central bank, in terms of the Fed? Do we see lower interest rates? Do we eventually see, and I'm not calling for this at all, not at this point in time, but do you get back to where you have central bank balance sheet expansion, you have some sort of QE, maybe not, maybe that's years down the road, typically is going to follow some sort of economic emergency, but that's really what has historically driven this much higher on the margin. Unless there's some reason for everybody to kind of freak out and FOMO into this. That said, nowhere near, in my opinion, when you look at a lot of on-chain metrics or you just look at kind of how we have traded historically, I wouldn't say we're near a top necessarily. Right. There's signs that we're very overbought here. We've just had a big move up. We've consolidated within a larger range, and we've been met with some selling pressure at 110. There's a lot of people that have owned this for a very long time, and you're seeing some profit taking there. Can you chew through it at some point? Maybe. But, it's been pretty bullish price action. You're just not getting that 5% up every day that we'd like.
Yeah.
You might be seeing that in platinum or elsewhere.
Yeah. Oh, we know there's some platinum traders in the house.
Got a couple platinum traders over here. Shout out to those guys. What are you doing? Are you trading anything in crypto?
Oh,
You've been active.
Light.
You've been busy at work, I hear. So
yeah, I've been super light across the board. I'm also feel like I'm kind of just digesting and kind of taking stock and seeing, if there's any opportunity, where does it feel like there's volatility or premium that I can sell. So the short answer is no. So I'm definitely kind of interested in, if anything is jumping out to you to nibble on, or, if you think that we're seeing an outperformer or an underperformer that looks opportunistic. I am down to dabble.
Yeah, I'm just looking at XRP because I wanted to talk about it here today, but all of these charts are really the same. If you look at that big move that you had, in this case, it was earlier in the year, but you've had these large moves and then you've had these consolidations and this really chop sideways over the last few months. You see that with Bitcoin, you see that with ETH, you see that with XRP a little bit as well. No, I haven't been too busy. On the follow page, I put on a couple new trades recently. I'm in Aave.
Okay.
That's just based off of the momentum signals that we've seen. So let me pull that one up really quickly, and I can change the view here so it's a little bit easier to see. Let's get out of our multi-chart. We'll go single for a second. Pull that back up. And I'm going to add these all to the watch list. Might help if I add that over here. It'll be a little bit easier to do.
Beautiful.
Yeah, so long here. It's been trading a little bit better. Added to a Solana position here today on the follow page. Just trying to go off of the signals. You haven't seen a lot of smaller market cap stuff pop just yet or inflect higher, as I like to say.
Yeah.
Memes have traded pretty poorly. But, ETH trading a little bit better. Solana a little bit better here. Bitcoin's been pretty resilient. I've just been adding to some dips when they show up.
Sure. Makes sense.
And I think sometimes, patience pays off, right? You're in an environment where, you could easily see the expected move double here on a weekly basis. You're not getting much outside of $1,000 move, 1 to 2% per day maybe. But this is something where you can very quickly see a sell-off below 100. We saw that just a couple of weeks ago. Those are the spots that you want to try to pick and I think be ready to go in this environment. You can buy dips, in my opinion. Structurally, still very bullish, a lot of supporting factors there. But I'm kind of waiting for that, right? I'll buy a little bit, dollar cost average in, but it's kind of those larger, just wait for the volatility to show up on the, if it is on the downside, and that's where I like to add.
Yeah. No, that makes complete sense. And I think we've done a really good job, not to toot our own horn, but to talk about this show, and particularly with you educating me on just incorporating this into a portfolio. This does not need to be 20, 30, 40% of your portfolio. This can just be a nice little add-on for you to get exposure to an asset class that has historically had some more volatility than maybe some other things that traders would put on in their account. And you can just nibble and not, put it all on red, so to speak, as one big tranche or one large, set of contracts or size too.
Yeah, absolutely. And it's been an asset class as well that has performed very well historically, right? There are market environments and conditions in which you want to get out of this and you want to get out of other higher kind of beta or higher volatility underlyings, and you reduce some exposures there. And that's true for equities as well. But in the majority of environments, and if you look at this historically, this is something that I think there's a pretty strong argument to hold in your portfolio, and then you maybe diversify among those crypto assets as well.
So speaking of diversification then, so talk to me about what makes Ripple distinct relative to some of the other coins that maybe we've talked about a little bit more heavily.
Yeah, so I want to talk about Ripple for a second here, and we'll just jump to some of the slides. We did a show on this back in February, I believe. And so a very quick background. We'll run through this, given we only have about 7 minutes left in the show. But we use these terms interchangeably. XRP is the token. We call it Ripple. Ripple is not really what the token's called. XRP is the token. Ripple's the company that develops and maintains XRPL, the ledger. XRP is the cryptocurrency.
Okay.
RippleNet is something entirely different. RippleNet's a global payment network for financial institutions. So we've talked about Ripple as a company that supports cross-border payments. XRP is a token that facilitates some of that.
Yeah.
XRPL, though, is the decentralized blockchain that I think people are getting excited about because of some of the things that are being built on it, the direction that it's going in the ecosystem that Ripple, the company, is trying to evolve here, which should then, in most people's opinion, accrue value to XRP, the underlying token.
Right.
But I just wanted to talk a little bit about that because it can be confusing. So let's talk about, though, more importantly, like just objectively, what's happening with XRP, with the Ripple ecosystem. Are there any signs of adoption? What is there to be excited about? Because this is a token that has a lot of fans, right? They have a XRP army, in a sense.
Okay.
A lot of people trade this. A lot of people hold this. A lot of people are very bullish on this. I've always struggled because you look at the market cap of XRP, and it's always in the top 10, sometimes in the top 5.
Sure.
Presumably, as the regulatory environment gets a little bit better for crypto, this will be something that is supported by it. But when you look at a lot of the fundamental data, it's sometimes difficult to argue that it's very supportive of that very large market cap.
Okay.
And so people that are very, very bullish XRP don't want to hear me say that. But I always want to look at this and try to come at it as objectively as possible. So just to jump around a little bit, we've talked about just this ecosystem quickly. Ripple's the company.
Yep.
XRPL is a decentralized blockchain. RippleNet is a private payment network for financial institutions. I want to talk a little bit about just what we're seeing on chain. Objectively, you've slowed down here quarter over quarter. XRP and Ripple has this report that they put out where you can look at all sorts of different fundamental details. They put it out on a quarterly basis, almost like an earnings kind of report.
Sure.
We don't have the Q2 report yet, but Q1 2025 slowed down a little bit in terms of transactions. Average Ripple price, XRP price, I keep doing that, up to $2.25, 57%.
Yeah.
You're seeing a little bit of a slowdown in DEX volume, so that's decentralized exchange volume, and a little bit of a slowdown in new wallets created. So that's just looking at this quarter over quarter, but there are a ton of positives year over year, huge growth year over year,
Right.
and want to just look at some of those positive developments as we might think about in the future. Should I get the signal with my little indicators here going long XRP? So a couple things to be, I suppose, bullish about. Institutional adoption seemingly is ongoing. There are partnerships that include tokenizing real-world assets. This is Mercado Bitcoin's $200 million initiative. You're seeing USDC launch on the XRPL or XRP Ledger decentralized blockchain. And then you're starting to see more banks that are piloting cross-border corridors or cross-border payments via the on-demand liquidity mechanism. Without getting into all the details, that is some of the value that XRP plays in this system. You're also starting to see growing support for DeFi. So you have Ethereum virtual machine compatibility, which has gone into testing as of the spring. Mainnet expected Q2. This is going to enable, and I think we're kind of slowed down in terms of the delay there, but this is going to ultimately enable a lot of what you might see on Ethereum in terms of DeFi, decentralized applications.
Sure.
You get to where you'd have decentralized exchange, automated market makers. A lot of those apps and those protocols ultimately that are powered by smart contracts might not be exactly the same as Ethereum, but that's the direction it seems to be going in.
Okay.
And then there's an argument that as the regulatory environment evolves, this is going to be a boon for XRP. One area could be XRP ETFs. So Bloomberg analysts, a couple of the guys over at Bloomberg are covering, they cover the ETF space quite closely. Those guys are looking at a 65 to 75% chance of approval.
Yeah.
I think you could see a Solana ETF, for example. So that should all be supportive. Additionally, when you look at actual signs of adoption, beyond just looking at this quarter over quarter, you're starting to see an increase in use of the Ripple USD stablecoin. That accounted for over 300 million in DEX volume in the first quarter. So that's definitely growing. Whenever I look at on-chain activity, I always want to see increased stablecoin volumes. That is a signal of adoption.
Totally.
Additionally, a lot cheaper to create a wallet on the XRPL, or an XRP wallet here. So that's gone from about 10 XRP, which kind of at today's price might be about $23, $25, somewhere around there, to just one XRP to deploy that. And you're seeing a huge jump in wallets, up 210% year over year. So there are definitely some signs of adoption. I think it's still difficult, in my personal opinion, to justify the valuation, but that doesn't matter. You are seeing, some clear signs, and maybe there's an opportunity for an investment here if we get a pullback. This has been another one that's it was done well enough. Put this in on my watch list as well, and we'll keep building on this. We've traded sideways here, but it's been able to hold on to the $2 level, and potentially it could go a lot higher. I think there's a lot of people that would like to see that.
Interesting. Yeah, I have not touched this one. I guess my question with 5 seconds to go basically is, I hear everything you're saying. I think like the idea of like banks dabbling in using XRP to, transfer cross-border or whatever the correct terminology is, it does feel like there's a place for like an XRP ETF based on the fact that if like banks are kind of bought in, that feels very stable to me. Is there anything that I'm like not? Is it just the fact that like it's still kind of in the early days of like the DeFi stuff that like makes you say it feels potentially like hard to quantify value, or if it's true value?
Well, I think it's just that it has a market cap that is up there with some other chains that seem to have a lot more activity at this stage, right? If you were to make a fundamental case for this, I think there are some signs of adoption and indicators on many other chains that would more so justify kind of their place in the market versus where this is today, purely from that perspective. That doesn't account for what could be coming soon. You have the Hidden Road acquisition, that's huge. So you're really looking at this company, Ripple, using blockchain technology to build out infrastructure that will hopefully in the future be used by many financial institutions. It's just that there isn't a ton of usage. It might be growing to an extent today, but there isn't a ton of usage, or that just isn't 100% true today.
Got it.
But it's an investment in the future in the technology, not so much what happened in the past or even where we are presently.
Got it.
It's just that all has to evolve and be true and be realized, I think, for this to make sense.
Okay.
I'm not against it one bit. Just trying to look at this in my own, in my own opinion, trying to look at some of the data and just highlight what it shows. Is it growing? Yes, year over year, absolutely a ton of growth, but there's probably still work to be done, in my opinion, to justify that valuation.
Sure. It makes me go back to the crappy example when we first started doing this show together, where I was talking about like Roller Coaster Tycoon or SimCity or something like that, where if you're talking Roller Coaster Tycoon, maybe there's only 1 or 2 rides on XRP right now.
Yes, there could be more coming soon.
There could be more roller coasters and food stands and carousels and bumper cars that make it really worth the trip to go.
I love it. I hope so. Thanks for bringing it back to the video games, Katie.
Anytime. What am I here for?
That's going to do it for our show. I will be back on Wednesday. Until then, thanks for watching. I'm Ryan.
I'm Katie.
Peace.
Peace.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
What do you do to keep emotions and psychology out of trading? Do you have any specific strategies on that front?
Yeah, I coach little kids in baseball. No, really, actually, it's interesting because you can see them get frustrated at things that aren't going their way, especially in a hard sport like baseball. To help coach them through that, it kind of makes me check myself and keep my emotions in check when it comes to trading.
Something I talk about on the road a lot is having a game plan before you actually get filled on the trade. I like having an internal conversation with myself of, okay, if this is what I can make on entry, this is what I can lose on entry. If I'm doing a more static position, like buying a micro future or something like that, I like to use a percentage of the buying power as my profit target. So if like a micro future is like $500 in buying power, I'll say, okay, I need to get out when I'm at like 250 max profit or loss tops, and trying to stick to my guns. That usually works, but that's kind of my typical approach to how I do
you use stop losses?
I do not.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
If you missed the live show, here's our cherry on top weekly recap.
Question for you guys.
Yes.
Vanetta this morning was giving me a little flack. It was lighthearted. She meant well.
Okay.
For my particular baby face.
Yes. You are young.
Just
young.
question for you guys, because I look up to you both. How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing, I can hear John laughing out there. See, the thing is that, you either have it or you don't have it. And
all right.
You just don't.
I could put together a pretty gnarly neck beard.
It's a manly thing. But.
The last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
Every time I leave Tasty, I miss it. Even like when I go home after work, I think about Tasty. I'm like, I wish I was really in the office.
No, you don't.
I don't.
You just went abroad. Were you able to just fully disconnect?
Fully.
Yeah.
We saw several artisans, but the sword maker. 3 months to make a sword.
Yeah. When does yours get delivered?
50,
you didn't do the sword?
50 grand. And there's
but that's,
and a 2-year wait list.
It's a couple spoons.
Yeah, that's, come on.
You're going to Rockford for a wedding. It's going to be a very fun wedding.
Your friend that's getting married, or is it your girlfriend's friend?
Your girlfriend's friend.
Do you want your girl to catch the bouquet?
No. That never ends well. Like in movies, that happens. The guy's like,
Get the full scoop by checking out the archives at tastylive.com.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. I've been trading for about a year and a half. I've done all the homework. I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah, so if you've made 100 trades and it's working for you, then that's not luck. No. That's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. You know, back when we started building this kind of software, an active trader made like 20 trades a year. What used to be 5 years, you've packed it into a few months. I mean, I wouldn't discount anything that you've accomplished so far at all.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Stephen and Lan, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
you were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Oh, yeah. Tasty Nation, good morning.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day,